Good morning, everybody. How are we doing? I bet you weren't expecting to see this face on stream first thing in the morning. How are we doing, everybody? Hope you're all doing well. And if you haven't already, make sure you hit that like button. It is myself, Will Davis, starting the stream today. We are just waiting on LJ. I think he's coming under some technical difficulties. He jumped on this morning and said, give me 2 seconds. And then next minute he froze and then he's off. So how are we doing, guys? Hope you're all doing well. First thing this morning, it is currentently 9:30 over in the UK, and I'm currently in a gold trade. I'm in a gold sell at the moment, which I opened about 15-20 minutes ago. Doesn't seem to be going my way. It's in a little bit of drawdown, but it is what it is. So hopefully that can sell off, but I don't think it's going to. I'm not too far away from my stop loss now, unfortunately, but it is what it is, guys. You know, you can't win them all, and I've been doing seriously well at the moment. Back up in some good profits. I'm up $500 for the week, so that's looking good. So this could be a $300 loss, which is it's okay. It's not too bad. So I'm still up for the week, but we start the morning well. It is a Thursday today. Yes, it is a Thursday today. So we've got some awesome stuff coming out for you guys today. We got Richard Wells joining us a little bit later on for a psychology session. So really looking forward to that around about 11:30 till 1. But let me know what you guys are looking at. Let me know if you guys caught the GU and EU buy this morning. We got some awesome rallies up on EU and GU, which I shall bring up for you guys right now. Let me just get my chart up in the house. Meanwhile, let me know how you guys are. Hope you're all doing well. Wow, I can see a lot of you guys jumping straight in already, which is absolutely awesome. Let me go ahead and bring my screen up for you guys. Let me try and look for myself, though. Where am I? There I am. There we go. Let's get some music on in here as well. I hate streaming alone without background music. Let's get some music. What music do we want? Where's the music I usually put on? It's gone. No. Oh, no, it's not. Sorry, guys. Ignore me. 100k subs. Let's effing go. Yes, mate. 100. Guys, come on. Let's absolutely smash it all the way to 100k. We're not far off. I think we've got like 8.8k left to go. And we're still in the first week of December. So it's super cool, guys. Absolutely smash that thumbs up button. And make sure you subscribe to the channel if you haven't already, or if you are new here, because this is going to be the road to 100k, and let's see if we can do it before December. Or before January. Before the new year. Let's see if we can smash out 100,000 subscribers. I reckon we can do it. But, you know, prove us. Some of the guys don't think we can do it, so prove them wrong and show us that we can do it. So, like I said, good morning, guys. Let me know who's seeing what in chat. Come say good morning to us. Cobus saying good morning, everyone. Good morning, Cobus. How are you doing, my man? Infinity coming through. Good morning, guys. Henry, good morning, Henry. How are we doing? Good morning. 6:33 in Brazil. Nice. Wait, 6:30 p.m., right? I'm sure 6. Or was it a.m. in Brazil? My brother lived in Brazil. His wife is Brazilian. He was living in Brazil for a bit, and I'm sure he was ahead of us. So I'm sure it's 6:30 p.m. in Brazil. I don't know. Let me know, Charles. What's Charles Jesus? What's going on there? Or what time it is? A.m. or p.m. Yeah, thanks, Yasin. Yasin from the The5ers. Welcome, everybody. What is good? How are we all doing? Greetings from Austria. Nice. Whereabouts in Austria? Are you the sunny side of Austria, or are you on the snowy side of Austria? Because I was looking at it's called Earth TV, and I was looking at Austria earlier, and it looked incredible, man. I love the snow, and it looked really, really nice. Crypto Game Codes, good morning. What's good, my man? How are you doing? A couple of new faces in today. Well, new faces for me. I don't often start the stream, or I don't often jump in this early. Usually I'm about 11:30 UK time, whereas it's currently 9:30. So good morning, everybody. Good morning to the new faces that I'm seeing as well. Hope you are all having a fantastic week. The week is nearly over. It is a Thursday. Let me know how your week has been. For me, it's been a little bit slowish. Certainly today, we seem to be little bit more bullish than I anticipated on gold. I kind of thought we had this consolidation. We came up into this consolidation zone as well. We are on this downtrend. And then I thought, I'm going to wait for some confirmation. I want to see a break and close under this level here. And then we got it. Boom. We got this big bearish push down with a nice close. Very little wick to the downside as well. And I thought, oh, nice. There we go. So again, guys, you know my breakout strategy. I opened up a sell on the new open. And then I thought I also want to see if we can pull back into this area and continue down, which we did. We pulled back. So I opened up a second order. So I got my breakout and my break and retest and my stop loss at the high. Now, it seems like it's going to try and hit my stop loss. So if it does, it's one of those things. But oh well. Who cares? If it hits my stop loss, it hits my stop loss. But I'd rather it wouldn't. I'd rather be seeing $235 up instead of $235 down. But what can we do? One of those things. Good morning, all here from Nigeria. Yo, that's awesome. Lawal, I don't want to pronounce it wrong, Joe. I'm sorry if I have. Lawal, good morning from Nigeria. That's super cool, man. Another Lucky saying hi. What's good, my man? How you doing? Good morning, Will from Miss X Twilight. Good morning. How are you doing? My eyes are on GU. Dude, my eyes were on GU this morning as well. It was super cool. Look at this. I saw this level here. And I thought, this is really nice. I want to see if we can break out of this zone. And we did. We broke out really nicely, but we didn't get a pullback. So we broke out. Tested this high. Now, we did break and close above the high on the 5-minute. And on the 15. So that was looking really nice. I'm seriously considering... Actually, you know what? Screw it. I'm going to jump in on a buy on GU. This looks really, really nice. Stops at the low for $222. See if we can TP at the high, $350 up. That would put me, if I can hit TP on this, that would probably put me about $50 up for the day, or $54 up for the day. So we'll see how this goes. I'm really liking the look of GU buys. Again, why? Because we've got this consolidation, which we broke out of. We've got these highs here. So we got that breakout. We didn't get the pullback and the retest. However, we did break and close above these previous highs over here. Pulled back. Okay, yeah, no, this is looking like... there we go. Just hit stop loss. What a great start to the morning. Stop loss on gold. We've also got this imbalance zone here, which we wanted to pull back into. Plus the fib retracement zone. Really nice fib retracement zone. We got this golden zone here. So that's looking really nice. So looking at entering in. Well, I have entered in now. So I was looking at entering in on some longs. Man, $300 loss. Okay, no, that's... What's going on here? Oh, this is my overall. I was thinking, what's going on here? I need today. That was my entire history. There we go. $305 I've just lost now on the gold short. Gold short. So that's a shame. It is what it is, though. Let's hope that my currencies can do a little bit better today. So GU long. Do I want a long EU from here? Maybe if we get a breakout. Maybe if we can get a breakout of this high here, then we'll look at entering in, but we'll see. LJ, what's good, my man?
Morning, guys. How you doing? Sorry about that. Still having a few issues. Platform doing my head in, honestly. So,
well, man. Just hit stop loss on that gold trade that I was in.
Yeah. I don't know if we're gonna go higher. Like it's giving such mixed signals.
Yeah, well, I don't know. I questioned moving higher. On the 15-minute, we're clearly trying to push lower. We're creating lower lows and lower highs. On the 5-minute, we've got this consolidation here. Then we get this big drop, pullback, consolidation within this consolidation. But we do wick above, but we fail to break and close. We wick above this consolidation into this consolidation here, into this sort of movement before the big drop. And then we start breaking further down. And then we get this big bearish push here. And I thought, okay, this is looking pretty sweet. I like the look of this. but apparently not. So
yeah,
what
we
can you
came
do?
into like there was like trend line support on the hourly,
Yeah.
and then same deal. Silver basically same move. That actually popped a little bit below trend line support. So yeah, I don't know. We're not getting firm signal either way. We're sort of
No,
just dancing
doesn't
about
seem that
trying to
way.
find direction. But
Yeah, doesn't seem that way, but oh well. We'll have
yeah,
to. If the EU can break and close above this, I think I'd be interested to see what happens then. Something like this. Let's get my arrows out. Something along the lines of this. Come here.
yeah. I think EU, if we can potentially get, if we get like if we hold this area
Yeah.
like over the next hour or so, get back up
Yeah.
towards 117, sort of 10 to 20, roughly. I think is about the sort of head point right now.
10 to 20 pips or
117.10 to 117.20,
sorry,
sort of somewhere up there.
10. Fair. Let me get my.
Yeah, as like an interim point. That said, I think like we are. I don't know. The dollar seems to be slowing down as far as the sell off.
Yeah, the dollar seems really weak at the moment. I mean, we got this high up here, which would be 17.29. That'd be quite nice. We'll see. We'll have to just wait and see on the hour. Yeah, no, the Dixie was really weak this morning, hence such bullish movement in GU and EU. But dude, I don't know, man. I can't tell what GU is trying to do. Maybe I'm offside today. Maybe it's just going to be one of those days that I give my profits back for the week. Maybe it's going to be another. Maybe it's going to be another break-even month for me. You know, I had $100 month. Yeah, last month. So November was pretty much break even. I earned $100. So
Yeah.
0.1% on the account. You know, maybe this month's going to be the same. Who knows? I mean, we're only 4 days in, so it's still really early days. But I'm not going to be trading over Christmas. I'll jump on and I'll live stream and I'll do some analysis and I'll see what I'll talk about what I'm looking at. But I won't be trading my live account over the Christmas period and probably over the first maybe week of January.
Yeah, that's fair. I mean, it's hard to know if we'll even have like any kind of activity, right? Because Fed next week, week after, we still have non-farms.
Yeah.
But it kind of seems like there'll be some activity there, and that'll probably be it.
What's your thoughts with the Fed release?
I think they'll cut.
You reckon?
Yeah, at this point, yeah, I think we're close enough. The market's pushing them there. I don't know. It seems just to be like the path of least resistance. I think it would create kind of confusion, that kind of thing, if they didn't cut at this point. We're seeing the further problems with like overnight financing. Like the Fed had to jump in the other night and threw in like 38 billion to try and help the repos, for banks keep that liquidity kicking around. So yeah, I mean, I don't see much point like waiting till January as far as things go. Like, okay, we get one further payroll and maybe a little bit more, but what's the real difference at this point? And yeah, the market pricing is still pushing there. So typically, when you're getting that close with market pricing still as high, they tend to not want to disrupt the market. So
yeah, I was gonna say, especially so close to like the Christmas period as well. I feel like people tend to try and. I mean, Rachel Reeves gave it a go, mind. She gave in the budget she tried to break people's spirits before Christmas. I was gonna say people tend to like not really want to do release too much over the Christmas period. People try and just allow it to settle down, and I suppose, and enjoy the Christmas period, shut off, and then like maybe in like the new spring budget and stuff they tend to release the most. But I don't know, maybe I'm wrong with that.
Yeah, I think it would be pretty unlikely now. Like the whole, the committee like pretty split, right? And then it comes down to sort of Jerome Powell tipping the tide. And obviously, they've been harping on the whole data dependency thing. So it's a question of whether, sort of putting aside some of the lack of data that we've had, does that, impact their credibility, that kind of thing. But I don't think so at all. I think the market's very much pushing there. Everyone can see that stuff has pulled back a bit, and yeah, I mean we're still 87% market pricing, and we're 6 days out now from the Fed meet. So yeah, I think it's in the bag at this point. So yeah, hence this continued downdraft in the dollar, both from that and then the Japanese yields side of things. So yeah, I think it's more dollar selling into.
I think we're going to see like a hold in dollar weakness over until probably like mid-January. And I think once we get like mid-January over with, I think people are going to start coming back into the dollar a bit more.
Yeah. I think the Fed cut will probably be sort of the blow off sort of top for it, I guess, or blow off downdraft, I guess, whatever. And then we'll probably just have like a steady.
I will just stagnate then for a few weeks, I think. Okay, we're about $50 up now on GU. We're trying, man. We are trying. Like, what's the Dixie doing?
Nice.
It's a shame we can't get the Dixie on MT.
Yeah, I mean that would be good.
That'd be pretty cool, wouldn't it?
But,
looking on the hour on the Dixie, it's still dropping slightly. So maybe we've got a bit of a strong pound coming in, which is surprising. I have no faith in trading the pound anymore. I don't know. I think we're gonna really struggle.
Yeah, I know. Pound's dangerous. Well, not dangerous, but very, very dubious, I guess. Of this turning around. The budget stuff definitely could have been worse. So
100%. Like me, in fact, my dad and a mate of mine, he's a stock trader. He was saying, he was like, look, the budget was bad, but it could have been so much worse. Like it could have been so much worse. And I was like, yeah. I was like 100%.
Yeah, and that seems to be what the market's going with, So for the time being, we're just playing it by the by.
Yeah, literally.
There were a number of nasty downgrades and stuff in there though, but at the same time, I think everyone knew this, right? Everyone expected this.
Yeah, it's not that we got caught with our pants between our ankles. We saw it coming.
Yeah.
If anything, there's probably people with a smile on their face thinking, "Thank God for that." She could have released so much worse. Having said that, though, she's speaking again early next year, so maybe she's just, like I said, maybe she's just thinking, "I'm not going to ruin everyone's Christmas. Maybe I'll ruin their New Year instead of Christmas." Just seeing some of the guys saying, "I missed the first GU long, but took a long on the retest." Same as that, my man. I didn't manage to catch the long because we didn't quite get the way price moved. I didn't quite manage to get in it. It was too bullish, which is ironic, even though I want to get in on buys. It was too bullish for me to get in on my my break and close, and we didn't get a pullback. So I didn't manage to get in that, but however, I am in on the retest, so that's really cool. Baj, good morning. Broda Grantin iawn. Broda, mate, how you doing? Christo, E5ers. Welcome to the 5ers. 5:39 a.m. Canada. Bro, you're up early, man. Ruby, what are you doing? Go back to bed. Wow. I would not want to be up that early. Having said that, I'm usually... The reason I don't know, I used to get up that early, but I've been struggling with sleeping recently. Having said that, dude, I caught up with all my journaling last night. That's good. I don't know if you saw my Instagram story. I was up until... I think I finished my journaling at 12:15. I poured myself a glass of whiskey just to get myself through it. I was like music, whiskey, journaling from back in July because, like, I'll fully admit, guys, I preach, but I make sure that I practice what I preach as well. I'm like, guys, I show that I'm a good trader. You can see in my trades, I hit stop loss today. You can see in my trades, you can see in my streaming that I'm clearly a profitable trader. And I say, guys, journaling is the most important thing in trading. I haven't journaled this account since when did July, beginning of July, I think it was. Since sort of my drawdown stage, I just got so busy and basically forgot to journal, and I felt awful about it. And I was like, I know that I got a journal, but things kept coming up, and I kept being busy. So I thought I had a spur of motivation last night, and I was like, I'm getting it done. I'm getting it done. So I'm gonna sit there and I'm gonna suffer. I don't care how long it's gonna take me. I don't care if I'm here till 3 a.m. This is what you get for not journaling. So yeah, a couple of hours later and a glass of whiskey later, and I was finished. So
Nice.
we're all caught up with our journaling now. I just need to put my gold trade in from today.
That's good, right?
Yeah.
Getting it all done.
Yeah. At least it's all done. 6:40 p.m. in Brazil. I was going to say I knew you guys were ahead. So yeah, 6:40 p.m. not a.m. Will, what's going on with gold? Oh, bro, I don't know. Infinity, I was hoping you were going to tell me. I was hoping you were going to tell me what's going on in gold, mate. I have absolutely no idea. No, I don't know. All I know is it took my money this morning. That's all I know. What about you, LJ? You in any trades, mate? Or
I'm keeping an eye on currencies where we are now. I'll see if we can jump over. So euro dollar, similar deal to what you were talking about. So the only thing is, right now we're kind of at the extensions of price as far as like a standard div channel. We're at 2 standard divs. Same thing with the pound. We've kind of smashed into that. We've kind of paused a bit here. But yeah, we haven't got that up move that I was looking for last week. So that, and then Aussie dollar as well has been on absolute tear. So we've sort of broken the structures through here, right? So we had these like lower highs, lower lows, kind of slight chop around in here, another lower low. We've then broken the other side of that and just storming along. So I'm looking to see where these guys sort of eventually top out, and whether there's a little bit more movement in it. So similarly with the Dixie, we're still moving lower, but I think we are starting to get a little bit stretched. We're just starting to slow down, right? The speed of the move, the velocity is kind of decreasing. So, gold though is interesting. Like if I go back out to a 4 hour, I think if we can close like this, next 4 hour bar up, we're actually starting to paint a pretty nice picture. Let me hide that for a sec so it's a little bit easier to see. Starting to paint a pretty nice picture for a move back up towards the highs, potentially.
Yeah, I don't know what I want to see to buy gold. I'm not sure what I want to see on it yet. I think it'll have to be a higher time frame.
So something like that. Because we had this trend line's come through here. We're forming this sort of wedge, right? So if we come up to the top, pull back to that midpoint, take another run off there, and then break through, possibly. So that's about what I'm seeing on gold there. So yeah, silver had the similar move. Obviously, slightly higher beta, a bit more erratic, even more so than gold. But similar deal. We've got this sort of trend line through here, and then this being the sort of tops. So move into here, back into the middle, and potentially out on silver. So possibly up to like 61. Yeah, see how we go.
I'm really liking the 15-minute close on gold for a buy.
Yeah.
I've been put off it. I've been put off because I'm thinking, I've already taken one loss on gold. Like, do I really want to be jumping in on gold again? But it does look nice.
I do like it.
On the 5, it looks fugly. Really, really fugly.
Yeah.
Maybe I'll just wait for a break and retest. You know, I've already taken a loss, so maybe I'll wait for the break and retest. And if I get that break and retest, because we've invalidated this, we've broken and closed above this. Maybe I'll wait for it to come back down here, and if it doesn't, then okay, fine. I just won't trade it.
Yeah, I wanna see this like 4-hour bar close. So what? There's another hour. And then, yeah, I think if we close strong like we are, then more upside.
Yeah.
From here.
EU and GU seem to be struggling, man.
Yeah. They're just the velocity, like I was saying, is definitely slowed.
Yeah, it has. I mean, the 15-minute looks okay.
Morning, Akram.
Yo, Akram was good, my man.
How we doing, Louis?
Yo, Louis in the house.
Aggie, how we doing? Kenya in the building.
I love that.
Good to see.
Kenya in the building was good.
What other news did we have today? I gotta check.
I don't think we have anything out until noon. Yeah, 12:30 we got challenge and job cuts for the US dollar.
Yeah.
1:30 we got. In fact, we got unemployment claims at 1:30.
Yeah. We can make claims.
And then we got Canadian dollar IVPMI. But other than that, we got not a lot.
Factory. Yeah, factory orders as well, like durable goods.
Oh wait, what order is that?
It's later on, just after same time as the Canada PMI.
Okay,
So,
I've only got those three. I've only got US, and Canada for. I got IVPMI at 3 p.m. Unemployment claims at 1:30, and then noon 30. I got Challenger job cuts.
Well, it's there. But yeah, same time as Canada PMI. So it's like 1 a.m. my time.
Yeah, fair.
What's that? A cat toy on the ground. I was like, what did I just hit?
Dude, they can be lethal, man. Like
mouse as well.
The dog toys aren't so bad. Yeah, like cat toys like that, or like my dog's toy. He has like a teddy. So he has 2 teddies. He has a teddy. Is that one of the things that run across the floor?
Yeah, I think so. Yeah.
Sick. Oh man, there's something about a cat playing. I love it, man. I love watching cats play. Like the way they grab things, their paws shouldn't move like that. It just looks weird. Whereas a dog will just run, grab it, crash it about, run back, and then you throw it for them. Whereas a cat just does some like ninja skills with its paws. It's like, how are you dislocating your paws like that? What's going on?
Yeah. I mean, this cat's ridiculous though. She I know. She just stares at it. She's like, huh? What? You know?
Dude, I don't know about you, but my girlfriend's cat plays fetch.
Oh, really? Yeah. My old cat used to.
I didn't believe it. I thought she was pulling a mech. I was like, yeah, funny, cat's playing fetch. You know, shut up. No, she was like, babe, I'm serious. My cat plays fetch. I was like, yeah, but your cat doesn't actually play fetch.
Yeah.
And she's like, what do you mean? So she took a video.
Watch this.
And she picks up a foil ball, throws it across the house. The cat, I swear to God, sprints after it, picks it up, and like twinkles on back. I'm like, bro, your cat's a dog. I was like, babe, I love you, but you were not sold a cat. That is a cat.
Yeah, that is a dog. You've been lied to.
Yeah, so you've been scammed.
Yeah.
Next you'd be like, oh my god, my dog barks as well. It can speak dog. I was like, yeah, no, it's seriously a dog. Okay, GU's starting to look a bit better now. It's starting to move up. I don't think my mental health could have taken another loss. I'm joking, guys. It's too early in the morning to be taking another loss knowing that I got to trade until 1 p.m.
Yeah.
In fact, what's
Jam
GU
Bam in the
doing?
house as well.
Yo, what's good, man?
Motorcar was saying dollar franc. We can take a look at dollar franc.
I don't have. I can get dollar franc up unless you have it up already.
Yeah, I got it. Yeah.
Okay, sweet. I was gonna let you do it then.
Let's see.
Is that a stop loss trade or is that like a breakout trade?
That from
Yeah.
before. Yeah, no, that was breakout.
Okay, nice.
I shit for that. I think that was something we're mapping out on the stream. I didn't actually take this. I never traded.
Oh, fair. Oh, come on, EU and GU. What are you doing? Stop playing with my emotions like this. It is really testing, isn't it? I mean, having said that, actually, I may get in on another. If we've got a breakout, yeah, I'm gonna get in on another one of these. I'm gonna scale in on this. It's probably I know it's probably risky, but I'm gonna get in on the scaling.
On GU.
Yeah, only reason because we had the break and close above, pull back. I'm just waiting for the continuation. Like, this is actually quite a nice level to get in on. I mean, now I am probably risking about $800. So if I give away all my profits, 3, 4, 5. No, I'm risking about 0.5%. Okay, actually, that's not that bad. Until it drops like that. Jeez. Gee, what are you doing? Sometimes I hate trading, especially if I wake up and like I've had a bit of a crappy sleep and it just goes straight into drawdown. I'm like, why is today the day that it's not my day? Like, why can't I like sleep really well, then wake up and today not be my day? Why is the day not gonna be my day when I've slept like crap? It's just, I don't know, it's just
it goes that way sometimes.
It's not necessarily a bad trade, to be fair. Like, this is still a good trade, and like, it's not over till the fat lady sings, sort of thing. And it is wicking, but why does what's I don't know. The currencies just haven't been doing what I want them to be doing recently. Gold has been, but it's just it took me out today. I don't hate gold. I'm not mad at it. It just took me out. Simple as that. It's just meh. It is what it is.
Just gold being gold.
Yeah, it's just gold. Yeah, exactly. It's just gold being gold, man. Gold hasn't broken my heart, but EU and GU at the moment has been making me want to throw my phone across the room, sort of thing.
Yeah.
Like, why are you moving like this?
Yeah. Yeah, dude. Look, as far as dollar franc, so I mean we've kind of come back into this base of support here, right? You've got a couple of these lows through here. This doesn't look too bad, to be fair, as like a at least near term turn point, for 20 pips or so. Or pause point, I should say, rather than a turn point, pause point. Particularly with EU, GU, AU, they've all had massive run. So it looks like we are starting to slow down. I think I would like to see across the other majors like one more last gasp, right? So yeah, I mean, I don't like this portion of price action on dollar franc. I would say it's a bit weird. We're kind of into just like a neutral point, so I'd say just play it very technically. So either lean on this low we've created, look for that short sort of pullback, probably up to by those lows just there, and that's probably going to be the extent. And then you're probably likely to keep coming off. I feel like there are better better pairs out there. We're kind of in neutral, sort of no man's land a little bit. Dollar franc. I'd rather look for like a topping point or high on euro dollar, or pound dollar, or any of the others.
Yeah, I'd like to see pound dollar move above the previous high, like the swing high, the high of today.
Yeah.
I think that would be really nice. If we can do that, I'd be pretty happy. Euro dollar, I think, wants to pull back a little bit more. If pound dollar can hold while euro dollar pulls back, and then they both move to the upside and take out today's high, or like this morning's high, I think that'd be nice.
Yeah, pound dollar definitely held up a bit better last night. Outperformed.
Yeah.
So yeah, I wouldn't be surprised if we can. 15 still looks pretty good through here. See if we can get that push and break above.
Yeah, that'd be nice if we can.
So,
yeah, we got that impulse push above. We got 4 minutes until the 15 closes. I want it to take previous high now, because if we can take previous high now within the next 4 minutes, we'll have a nice strong 15-minute close. If we don't, then I'll probably question whether I want to be in the trade or not, just because it'll probably almost be an indecisive 50-minute candle, and that would make me a little bit nervous.
Yeah, euro dollar after last night, like hitting those highs in New York, we sort of just like trailed down out through today through Asia. But yeah, got that nice break of the channel through here, reformed, and then just stormed on. So
yeah.
But yeah, I mean, euro dollar could come down a bit further before you actually.
Yeah, I think 100%. I think euro dollar's got to move down a little bit more. I mean, I'm break even at the moment on pound dollar. Gold looks nice, man. Koba's saying gold is just lingering below my stop loss now. Oh, is that your... Kobus, you were selling gold this morning, weren't you? So are you talking about the same stop loss that you had previous?
DJ saying, LJ, that 4-hour range, the goal was in from May to September and then broke out. What's your thoughts on a similar range for gold repeating with all the uncertainty globally from a macro and fundamental perspective? Yeah, so if we go over to gold, go onto daily, let's hide all this. So yeah, I'm sort of right now it's definitely looking like a pretty similar situation, right? So this sort of consolidation with the slight upward tilt into basically the wedge before we broke out. We could get a similar deal through here, but just probably slightly more volatile. So just like a higher range degree. I mean, so long as rate cuts and everything is still coming through, that's going to support gold, right? Zero interest-bearing asset. So that on the macro front very much helps. We do also have that background of, stock markets hitting all-time highs, still that varying concern around, AI, is it a bubble, is it not a bubble? All the liquidity that's set to go out. Trump wants to pump the $2,000 or so stimulus checks as well at some point if that gets approved. So all of this is huge further injections of liquidity into the market, which is going to further prop up prices when we're already at like all-time highs, and especially going into next year. Like we're basically going to have had like a 20% on 20% on 20% plus year gains, like 3 years in a row. And where do we go in? Do we back that up for a fourth time? I mean, this is getting.
Yeah. Did you hear about him potentially abolishing income tax and putting it through tariffs?
Yeah, mate, I don't know. He wants to do some odd things.
I know. I was
I don't
like,
know about that one, but
I don't know if that, like, how is that gonna work? Like, he wants to completely in the US abolish income. Or, well, this is what I heard anyway. He wants to completely abolish income tax, and then find the taxes from the tariffs instead. And I thought, like, I know he wants to look after the US and all, but how would that work?
no. Yeah, I mean, that's not going to work. Like, the tariffs would have to go up
An
massively, and
extortionate
then
amount, and like no one would trade with the US. Like, okay, yeah, I know it encourages like growth within the US and like production within the US, but dude, I don't
yeah,
know. Like, there's some things like the US can't produce. You know, as big as it is, it just can't produce it. They will need global exchange and like global trade. Are they gonna like choose? Oh, don't worry, we're not gonna tariff you to the high hill. But yeah, I don't know.
yeah, and at that point, like, they'd have to go up so much that, I mean, prices would just rise anyway. You know, everyone's got excess cash. All the companies
Yeah,
put prices
exactly.
up. Blah blah blah. It end up like a net kind of really awkward, weird thing, and then something you don't have so much control over, because it essentially puts the control basket into trade with other countries rather than you controlling your own sort of
Yeah.
tax system. So, yeah, I think it's more just one of those, I don't know, weird political talking points that people like the sound of, like, oh, no tax, that's cool. And I guess it gains,
Yeah, appealing to the
some
general
people,
public.
yeah, I think you have to have no idea about economics at all. But, yeah, I think it's more just, one of those soundboarding things. Uh, so yeah, as far as the gold stitch, right? So hide these. I do agree, DJ. I think we will get a similar sort of trading range, especially with this. Like, unless today, like, we can build and somehow going towards the Fed meet, if we're up near the highs for gold, that potentially, we get the cut, and purely because we're at the level, we could see like a break of the all-time highs. Just because we're sat by there, it's either that or it could end up being like a blow off top, and then a deeper pullback, right? So like a buy the rumor, sell the fact type situation.
Yeah.
Ideally, I would like to see, rather than that consolidation. This is all messy now because it's got short-term stuff on here as well, but we did talk about this a number of weeks ago, that ideally down here, this buy zone around 3,600 or so, just above that previous consolidation area around the 3,500, that would be ideal for like longer term holds, right? So if the momentum stalls, that could end up being a draw point for other firms to actually, like institutions, to get in. Because at this point, the market cap for gold is so huge that to continue pushing price, that's a lot of money that needs to waft in there. We've more than doubled the like the market cap over. When were we last at 2K? It was at 2020.
Gold.
2024. Yeah, that was only 2 years ago. I thought it was closer to 21. I thought we were still down there.
Oh
But
no,
yeah,
we're
that
that
was
close
only
to
2
it.
years ago.
Yeah. What were we
So, I
last year,
mean,
man? I think even last year we were only at like early, or in fact, early this year, I think we were only at like 3.1 or something like that.
yeah, start of the year we're like 2.6.
The 2.6.
Right.
I was gonna say. I
Yeah.
knew it was like around the early 3, if not like 2. I can't remember exactly what we were at. I wasn't really trading gold at the beginning of 25. I wanted to stay the hell away from it. It was
Fair.
it's taking me for a ride. So I thought, no, I'm not interested.
But yeah, so I mean, what's the total market cap gold globally now? Like close to 60 trillion or something, getting up there. Bonkers numbers. Some I forget what the base we were off.
Market cap for gold is 130 trillion. Global bonds. Oh, no, never mind. Let's go global bonds. Total market cap.
30 trillion. Sorry,
Yeah,
yeah,
30
30
trillion.
trillion, not 60. Yeah, I was thinking double the 30. Yeah.
Yeah, total market cap capitalization of the gold has surpassed 30 trillion in 25.
Yeah. So if you got the total like sort of I don't know, world market cap.
How would you find that?
Like world GDP, like total money in this. I've lost the word I'm looking for, but you know that we're sitting around like 110.
Yeah, total world market
or
cap.
so trillion. Yeah. So you know that as a
August
proportion.
20. Do you want? Wait, yeah. Which date do you want? I got August 25 or October 25. Okay, October 25, approximately 148 trillion.
Yeah, there you go. 148 we're at now.
Yeah.
So I think COVID we peaked at like 115, then dipped to like 90, and then I guess since we've you know run on. But yeah, so if you think about that as a percentage of like total global dollars out there, every 10% we go up from here will be slightly incrementally harder. So yeah, all in all, I do expect a sort of sideways wedge consolidation through here with a potential follow through the bottom though this time, which we didn't quite get last time. But the whole gold trade is very out there. It's very in vogue now. Whereas the last consolidation period, there was still a number of players that sort of missed that first jump. And we didn't have the speculative side jumping in yet. So, Henry saying, "Will EU looks like it wants to retrace lower."
Yeah, so I think EU was
like
trying
10 minutes ago. Yeah.
I think it's still giving it a go.
I think we're coming off to about 66 first. So yeah.
Yeah, I'd love to see if gold. I really want gold. GU to hold. If GU can hold while EU pulls back, yeah, that's gonna be nice.
Yeah, GU is definitely holding up pretty nicely since the budget. So a lot of those scaries are at least out of the way. And we had was it PMI yesterday, the UK, which wasn't too bad. Where's the screen I'm looking for? Here we go. Yeah, it was the PMI. Yeah, I was just checking I wasn't tripping out.
Okay, GU's trying to drop a little bit. Don't do that, GU.
Yeah.
Ghost you. I mean, I'm still break even on GU. Like I'm technically flat. So
yeah, you'll be right.
Yeah.
Wait for the 15 and half an hour to tick over.
Yeah.
See where we get to. So.
I mean, I'm a bit worried that we didn't get the break and closed on the 15. I kind of wanted to see that. The 5 minute looks sweet. You know, the 5 minute looks absolutely perfect. I'm really liking this 5 minute structure. You know, we got this consolidation in the pullback. So we got this consolidation here, breakout, pull back into the consolidation, plenty of wicks below, breakout, close above this previous high on this microstructure, pull back into the consolidation, big wick, hold, pull back, small candles to the downside. Even the candlestick characteristics are looking really nice. So this 5 minute structure is looking really, really good. Then you go into the 15 and you're like,
Yeah. The 5 minute looks good. Like that microstructure, like you're saying, you got the wicks and then also sort of high lows, high highs. 15 is starting to look a little bit
Yeah, so I want to see a break and close. I want to see a close above here. I thought we were going to get it here. I thought we were going to get it on this candle, but we didn't. But like I said, we're just floating around my break-even point at the moment. We're floating from like $30 down to like $30-40 up, and just like fluctuating within that area there. I want to see it move up, like preferably soon. Like just have that impulse break. Why can't we see this? Why can't we move like we did at 8 a.m. this morning, 9 a.m. this morning?
Yeah.
That'd be nice.
My Chibu was saying, guys, I have 2 accounts on various props. Is there a copy trader I can use for both, detecting, placing orders, and monitoring both at the same time? Yeah. What's the? I mean, there's various paid ones you can use. What's the other popular one everyone uses, like that you can have on your own desktop? Blue.
Is it Blue FX?
Blue FX, yeah.
Is it Blue FX? I like Traders Connect. You can't beat that in my opinion. But that is paid. Like, it's not free. You have got to pay for it. But in my opinion, it's worth paying for because what it gives you and the support behind it. The support is like the 5ers. I've never met a prop better than the 5ers for their support. Same way that I've never met a trade copier better than Traders Connect for the support. So no, you can't beat it. I do love that. FX Blue, that's it. FX Blue, not Blue FX. I use something. Tomato. Yeah, potato sort of thing.
So yeah, Traders Connect are brilliant indeed. So I'd say investigate that. It is paid. I believe FX Blue is free.
FX Blue. Yeah, FX Blue is free to use, but you can't go from MT4 to MT. You can't go from MT to like Trade Locker or C Trader. It's got to be MT to MT.
Yeah.
That's the only thing.
Yeah, so it's gonna be MetaTrader and MetaTrader. Whereas like Trades Connect allows you to hook up C Trader, Trade Locker, MT5, all together. So
GU's looking a bit nicer now. Come on, keep going, baby. Let's go.
Pump it up. Pump up the jam.
Pump it up. Why do you keep on pumping?
DJ saying, many thanks. Also, that huge daily candle may hold then based on the underlying factors and variables surrounding gold. Thanks, much appreciated. Yeah, so right now we've at least the near term sort of consolidationary thing.
Mm-hmm.
We are trying to push for those highs at the moment, or at least having a gander, an attempt. So yeah, I don't expect new highs necessarily. I think that would be quite unlikely this year. Like I said, it's only if we're magically up by the tops, right, when we have the Fed come through and that kind of stuff.
Yeah. So yeah, literally that. We're not gonna, in my opinion anyway, we're not going to see highs unless we can somehow get up to the highs within a week.
Yeah, which I think is very unlikely. But that or maybe the payroll after, like if we're seeing the highs.
Yeah, maybe. Unless something horrifying comes out fundamentally, which obviously but it doesn't. I can't see us getting there.
Yeah, but yeah, going into next year, I do expect that we'll eventually get to like 5K and beyond.
You reckon 5K? You reckon?
I think we can see 5K next year.
Yeah. Sometimes I forget that gold is where it's at. Like, I'm like, oh my god, 5K for gold. Yeah, right. And I'm like, oh, well, hang on a minute. We're at 4.2 now. It's actually, that's only $800 to go up. It's a lot, but it's not. If you think about it.
Yeah, I think once we're pushing that 5K, we'll start to, it probably will start to slow a little bit. It won't be the same. I highly doubt we'll get the same aggressive pace we've had this year.
Yes. LJ, we've had it. We've had a 15-minute close above. Thank God.
Yeah, right on that half hour.
Yeah. In fact, and the 30-minute close as well. I mean, it doesn't mean that it's going to hit my TP, but it gives me a bit more confidence. It may still hit stop loss. I mean, I hope it doesn't. But, who knows? Who knows? Who knows? Who knows? Who knows? I just go where the west wind blows. Okay. If I'm gonna get rid of this, I'm gonna put this instead.
Yum Yum was saying, how fast does a help email get responded to? Been waiting 4 days now. It might depend on what exactly your query is. Because it could have been seen and trying to be like figured out. If some reason it's been missed or something like that, you can also try the live chat. So if you go in through the Discord, you can go through the actual live chat and talk on there. But yeah, normally it's pretty quick. So yeah, if for some reason there is like some delay or it's been missed somehow, then that's what I would say. Try the live chat and just reference that send an email, that kind of stuff. And
yeah, the one thing I'd be very careful with as well is if you don't get a reply instantly. Not saying that you guys are like this, but I know like when streaming, sometimes there are people that come in and just spam when they don't get the answer that they want or they don't get a reply quick enough. Whatever you do not spam support email, because there's a good chance they'll chuck you, like you'll automatically through default be put into the spam box.
Yeah.
That
is a good point. Yeah.
And then you may never get a response, or you may get a response in a couple of months, sort of thing. So this is why I tell people to be patient. When I'm like, guys, be patient with the 5ers. They're super busy. The support is fantastic. Like, let me just reassure you that. Some people say to me, well, you have to say that you're working with them. Oh, no, I don't have to say that. Guys, I'll be honest with you. That I may get in trouble for it, but if they got crap support, I'll say, guys, the support isn't great. I'll always be honest. But that's why I'm working with them. Is because I liked them before I started working with them, not the other way around. So yeah, that's why I say be patient, is because if you spam them, you'll by default, their algorithm, the email algorithm, not the 5ers themselves, will put you into the spam box, and then you may risk not getting a response. So that's why I say be patient. But if it has been a few weeks and maybe you haven't got a response, or maybe they haven't replied to you, there's no harm in chucking another email out there. If it's been a month or two since you haven't been replied to, or since you haven't get a response, then there's no harm in having a follow-up email. In fact, actually, the email algorithm does encourage you to follow up with an email. Just don't spam.
Yeah, typically it's 24 to 48 hours. Sometimes can be a little bit longer, depending on if there's an influx.
Yeah, don't forget. Yeah,
of emails from if something's happened or whatever. There's a lot of people.
It's like when the CME went down. If international servers go down, and then the whole prop space is affected, then emails are going to be sent. It's going to be flooded. So again, don't expect to respond within a minute or two.
Yeah, I'd probably say that's probably part of why. So yeah.
Yeah, exactly. Yeah, potentially. So again, just be very careful with that. And another thing is on weekends. Be careful when you send the email. Are you sending the email on a weekend? Because if that's the case, then everyone deserves a holiday. Everyone deserves a break. Don't expect an email on the Sunday the next day. Expect it 1 to 2 days from the next working day.
Yeah, exactly.
Yeah. But having said that, the guys saying, best support compared to other prop firms I've worked or I've had an account with. Yeah, dude, I'm the exact same. I've had accounts with other props, and they've been some have been really good. Some have been really, really good. In all fairness, others I'm still waiting to hear back from them. I'm looks like I'm not getting back from these guys. So some are really crappy, some are really good, but I've never met a support team like the 5ers. Probably it's not in that because I know the team as well, so I know that they genuinely are on a personal level wanting to do their job the best of their ability. So that's also pretty cool to know. But yeah, almost an immediate response. Yeah. We don't need to say anything. You guys speak for us. Your experience speaks for us. 5ers support, top notch. Even just the live chat, no cap. Guys,
exactly.
These guys aren't being paid.
Yeah, and Yum Yum. So if like we were saying, if for some reason it hasn't, they haven't gotten back to you, or whatever, just jump on the live chat,
Yeah.
and just find out, voice your whatever it is you're
Yeah.
trying to get figured out there.
But don't stress too much.
They should be able to give you at least an update on, like, if a support ticket is being created or whatnot. So
yeah, got a really nice close on the 5 minute. That's looking really good. So breaking close above that. Hopefully we can continue this pathway up. If we can take these highs, I'm going to be careful. I may consider taking out at this low here. So I don't know if you guys remember, I talk about my potential points of reversal, my PPORs. So that would be down here, for example. Let me go up onto the 15. Let me just drag this over real quick, shorten it down. This is how lazy I am and how stressed I get trying to draw straight lines. I'll just beg, steal, and borrow from previous lines I've drawn. Okay, there we go. So this here is a potential point of reversal for me. So it's the low of this high area. And the reason I don't like looking at specific points is because I don't believe that price comes to specific points. I believe it moves into a certain area. So this area here is my potential. I should probably call it a potential area of reversal, not a potential point of reversal. So it's kind of contradictory. So potential area of reversal. A power. There we go. So this is my potential area of reversal. When it comes up into this area here, I'm going to see what it wants to do. If it wicks in and then moves back down, there's a good chance that I'm going to be thinking, you know what, I'm just going to close it as close to as possible, which is going to be around 250 to $300. If I can do that, then again, I'm going to be a very happy man. It mitigates the loss from this morning, which would be pretty cool. However, if I can hold all the way to these highs up here, then it's going to be about $500. So that would be really nice.
Yeah, nice.
Let's see.
Nice.
I mean, it's looking good at the moment. I'm 230 up at the moment. EU's pulling back really nicely. What I may just do, I may consider closing out around this around the low of this high area. Stay away from GU then, and then just consider and take a look at EU and see what EU wants to do. What I'm going to do, I'm going to put an alert. I'm going to set an alert there, and we'll see what happens. How nice would that have been if I managed to get $200 on gold as well? That would have been $400 up right now. In fact, I would have been... I would have been about 600. I would have been about 0.5% away from getting back to break even. No.
Yeah.
Gee, what are you doing? Why? This is a random place to sell from. Don't do that.
Yeah, euro dollar dipped back a bit. I think it's just pulling it.
Yeah.
We're not quite at that 66 sort of point.
No, I think I want to move down another 5 pips. Oh wow, we've gone down to $86 up.
So,
damn, G, what are you doing?
It's like Dixie here as well.
Yeah, I noticed that we had a big.
Probably coming up to this kind of zone somewhere in here before we pause or turn around, I think. Ideally, I want to see Aussie dollar top out at 66.30, and then look to pull a big short there. Because yeah, I mean, dude, we've had an absolute storm of a run. Really due for a bit of a pullback here. This is a daily.
What's that, AU?
Right? Yeah.
Yeah.
So we're just gone and gone and gone and gone. You know. So pull back somewhere down to about 65, 65. Basically, opening of yesterday's candle. Some kind of move back into there, or the top of this wick, 65 ET. So this kind of zone here is what we'll be looking for. Something like that, and then possibly down into here.
Right, who just tied a brick to EU and chucked it in the water? What just happened? We were looking so strong, and then we've just moved down 9 pips.
Yeah. Oh, well, I mean, we're almost to the level, right? This was the level I was saying just before, right?
I've gone from up $300 to down $30. That's depressing.
We can see the candles a bit better.
Okay, we're nearly at EU's point where I want to be looking at considering buys.
Yeah, so long as this holds, we should bounce. Otherwise, it's back to the top of the.
Yeah. I think I want to see it consolidate a little bit around this level instead of it just bouncing straight up. I think I want to see it hold, consolidate, and then move up. And that's what I'd like to see. The thing is, though, knowing the way currencies have been for me at the moment, EU. I mean, I wouldn't be heartbroken over it because it means that at least I secure profit on GU. But knowing my luck, EU will just bounce from here. Like EU will just. I think your mic's gone.
Oh, it was, yeah.
Oh, he's back. Yeah, he's back. That's the 15-minute. What's the 5? No, I don't. Let's go on the 15. Oh, okay. GU's pulling back. This is what I mean. Like, why is GU so wicky at the moment?
Yeah, it's just that general pull from euro dollar.
I was literally, but it's just euro trying to pull it down.
Yeah, but we're still just coming back into that support, right? So
yeah,
that's holding nice through there.
I was gonna say, at least we're holding that point. You know, that's something. At least.
Yeah. And then like you've had dollar yen have a little tick higher as well on the 5 minutes. So that should start continuing down again, back into that 10 moving average. So
I could do with Donald Trump like tweeting that he can't sleep or something. Dollar weakness because Trump can't sleep and then hit TP on GU. That sounds good to me.
God, I really want like a better trade here. I don't know. So I'm debating whether to jump into these either euro dollar or pound dollar here. This, but
join me, join the dollar. Come join me.
Raf, how we doing, mate? Good to see ya. I'm going all right myself. Hope you're doing well, man. Got a little bit of a different setup at the minute. My main PC is sort of playing up, having a tantrum. So, Doc LJ, Mush LJ, man, yeah. I said this before. I don't know who changes to Doc LJ, but I guess I'm just Dr. Lock now. So there we go.
Doc Lock.
Yeah, Doc Lock. That's it. Yeah, I've been working from home. Yeah, cool, man. Cool. Working from home is nice.
I love working from home. How do you find working from home? Like LJ, I don't know what your situation was before you went full time trading, but like, how did you find the transition from like working normally to like working at home?
Um, I mean, I pretty much always have, right?
Oh,
Because
okay,
I
fair. So
started trading
yeah.
out of uni, and then I just had, like normal whatever jobs, which you go to and trade at the same time.
Okay,
But
fair.
I mean, no different for me. I've always been very I don't know, sort of self-directed, that kind of stuff. So I don't have problem with how some people get like distracted and that kind of thing because they're home.
Yeah,
I just sit there and just work non-stop.
hyper
So
focused.
yeah, for me it's good. I like it because I can sort of direct my day a bit better generally, right? Um, some of that like flexibility, that kind of stuff, organize things. Um, no travel is nice rather than jumping on a bus or driving ages every day. You get stuck in traffic, So
Yeah, that was a nice feeling. I was pretty similar. I worked on a family business, which is like a 2-minute walk away from where I'm living, like from my house now.
yeah,
So to me, I'd go home for lunch. Like I'd be working, and I'd come home and like make myself like egg sandwich or something from the house. So for
that's
me,
good.
yeah, so work. I technically have always worked from home, even though I worked away from the home. So yeah, likewise, it's never made a
Yeah,
difference. Like, I find so many people say to me like, "Oh, Will, I'm really struggling. I get distracted. I want to watch TV. I want to go back to bed. I want to go on my Xbox." And I'm like, trying to mitigate distractions. That's why I
yeah,
always say to people, make sure like when I had my office set up in my bedroom, I would struggle to not go lie on my bed and accidentally fall asleep. you know,
yeah. Fair.
that's why I always say to people, try and have an office if you can. If you go certainly if you go full time, like try and have an office where you can go into a different, even if it's like a different part of the house. Like even if you're in like a studio apartment, you'll have like a kitchen, a living room, and your bed all in like technically one open source room or like open plan room. Like try and
Hmm.
have a dedicated space, maybe in the corner somewhere, to actually have your office or have like a desk set up. I find it just helps distractions.
Yeah, I agree. I think that's fair. I think my problem is more like I don't switch off. Then that's the trouble. Having
Yeah,
work at
fair.
home, you can just
Yeah,
always
true.
be on, right?
Yeah, you
Um,
can't leave it behind you. You can't be like, oh, I'm clocking out now.
yeah,
Once I walk out the
yeah,
doors or once I walk off the premises, I'm no longer in work mode. I go to the pub, I go to the Xbox, I go to my girlfriend's, I go to make food, the shops, I don't know, whatever people do after work. Whereas as a trader, it's just like, but, what are the markets doing right now? It's even on your phone, and you're
yeah.
like,
I
oh
think
yeah, just take 2 seconds to check.
I think that's the biggest thing for me.
Mm.
Is just trying to switch off. It's yeah,
Yeah,
that's the
it is
annoying
hard.
part. But yeah,
Took me a while to master, but I don't know. That's why I like seeing the missus on the weekend. She distracts me from the markets. Like in the weekdays, I don't want to be distracted. In the weekdays, I like being switched on to work all the time, like throughout the evening and all. I find myself more productive. But on the weekends, I don't want to be productive on the weekend. I just want to be lazy. I want to be just chilled. I want to feel like a normal human being, not like a trader.
yeah,
So when I see her, it's like, oh yeah, sweet. But she won't let me work. She's like, okay, no, you need to chill out now. It's quite nice.
yeah. I mean, yeah, same deal. I've tried to just try and hard block out weekends now.
Yeah,
I
yeah.
mean,
I
I
mean,
always catch up on my sleep then, also. So a lot of it's spent sleeping. You know,
yeah,
yeah,
especially after Friday night.
yeah, yeah. But yeah, rough. I was saying my psychology is much better than before for trading. As LJ knows, I was full-time
Hmm.
trading lol, but didn't work out. Decided to work with flexibility now. I feel better. Yeah, that's good, man. Yeah,
Yeah,
if you
100%.
work outside and then trade on the off hours, off periods, whatever, have that flexibility. Yeah. Um, Yeah, I think
Yeah,
it's really good. Can work from home at least 3 times per week. Yeah, that's perfect. That's
nice.
awesome.
It's super easy to get distracted. It's super easy to want to become a full-time trader, but it is hard. It's hard, man.
When I'm in the office, I take more regular toilet breaks to go check the charts.
Dude, so many of the boys I know do
That's
that.
great.
Like they'll be on site or something, and they'll be like,
Yeah.
they'll go to the toilet, and they've had 6 dumps in the past 3 hours.
Yeah.
You know.
Yeah, that's it.
Mate. I always try and recommend you go part-time at a maximum. Like don't ever become a full-time trader. I just don't think you need to be. Or just become part-time, or get a 0 hours work, or get a flexible hour job. Where you can maybe an agency job where you can be like, okay, I want to work these days, like Friday, Saturday, Monday, Tuesday, and then trade like maybe Wednesday, Thursday. It's make trading work for you and make it work around your schedule. Don't be like wrapped up in trading and be like, oh my god, I must be a full-time trader, because I think you're just going to suffer from it. A lot of people, it'll fry their brains. Like not a lot of people will be able to just straight away go from being able to be disciplined because they have to be with work straight into all the time in the world. Once people go like from part-time to full-time, they find themselves revenge trading more, over trading more, over risking more. All the negative emotions start coming out then.
Yeah, exactly. Exactly. Full time's not for everyone. Like it adds so many other pressures and that kind of stuff. So
100%, man.
I think it's most people's goal eventually, but don't rush it to get there. You'll get there.
Yeah, 100%. Take your time.
And you're probably I think for most people you get there quicker by working, part time or working even full time and then trading off hours.
Yeah, definitely.
Just having that security.
Yeah, exactly. Yeah, you got financial security because you know that you got a job, so you're not going to care about the losses. You're like, okay, look, I know that I've lost. I know that sucks, but I've still got a job to cover those losses. But more importantly, it forces you to be disciplined. You must be disciplined because you still got to show up to work. Oh, I'm gonna take a stop on this, aren't I? Oh, gee, you. You got to make sure that you're still showing up to work every single day. So you got to show up 9 to 5. Then you got to pick a time where you're not too tired. You still got to eat and you still got to do all the stuff that you need to do, and then learn to trade or then start trading. So it forces you to be more regimental and more disciplined. The minute you go full time, sometimes people lose that.
Yeah, definitely. I think it's just the Dixie's still recovering. So.
Yeah.
Basically, seems like we want to go into the underside. Sorry, of that range we broke from.
Depends how this candle closes. I'll probably get out of this now. That's so annoying. I was $300 up, and I'm $220 down.
Look, I think we're still in play, like, right? So
yeah.
But yeah, it's just like I was saying before, like that momentum is definitely starting to stall out.
Yeah, buys could still be valid. I just don't think they're going to be valid for me now. Although EU's coming back now into this into an area. So it will be interesting to see what EU wants to do now. I hate you, GU. I mean, like, this in an ideal world could absolutely wick now and start moving to the upside. One can dream. one can only hope. We'll see. What's gold doing? Gold's just holding, is it? Yeah, gold's. I mean, it's dropped below here. Maybe it wants to pull back into this area.
Yeah, I think similar. Like we got that 4-hour candle closing in 4 minutes now.
Yeah.
So 4-hour candle, 1-hour candle.
Oh wow! Look at
15.
you, man. It actually did wick.
Yeah.
Oh, how frustrating. Well, I mean, it's not frustrating. It's moving back in my direction, but. Could we see this on gold?
Yeah, if you guys have any other questions or stuff you want us to look at, then just throw it out there.
Wow, EU's wicking as well.
Throw it our way.
Is EU going to want to move up from here? Because if that's the case, that's interesting.
I know the thing I don't like is basically the Dixie. This is why I've been hesitant.
Yeah,
to jump on anything.
Looking on the 4-hour, it's wicked. Looking at on the 1-hour, it looks like if it's going to move down, it could move down from here. There's a 1-hour sort of imbalance zone and a pullback. So I mean, it may want to wick from here, but I don't know.
So we had so Dixie, I think the pivot points around here. And yeah, we came to the bottom standard dip channel. We got basically like a double top. Depending which Dixie you look at as well, there's slight variation, but you can see this, that low point, we then failed to actually touch again. And we got the candle close over here for these guys, but then that wicked up and then candle close up here, and then we've driven on. Yeah. So this really needs to have another established go, like lower. But I'm kind of feeling like we'll just get a slight tick and then actually move higher, perhaps. Which then means that we're not going to get this full jump. I think it might be more like up into here, the underside of that, and then down. I'm looking somewhere about 116.40-ish. So be something like that. Up, down, up, down.
If we can move up now, or certainly hold this area and start moving up, that'd be cool. That'd be nice. Even if it just means I can maybe get out of GU. I don't know. Let's see. I mean, we're on the 15. We are pushing higher. We've had a hell of a wick to the upside.
Yeah, I mean, G is definitely much healthier overall than the euro.
Yeah, I think so.
A minute. That said, actually, euro pound must be getting smashed.
Yeah, I was gonna say euro pound must be absolute tanking. I took the euro pound off my watch list. Just
It
because
got whacked.
Yeah, I bet.
Yeah, I traded up through here.
Yeah.
Right.
Oh, dude, nice.
And then yeah, we did. We are getting that play out. That level end up being the top.
And euro pound just consolidates most of the time, especially when EU and G are on side and like correlating.
Yeah, we're basically just back into these tops here from that local structure that we broke through. LJ, how's Mike? Mike's doing well, man. He's working hard. Still, churning out stuff for the new platform. So he popped into stream the other week for a little bit. Must have missed him.
In fact, yeah, I managed to capture. I haven't managed to watch his podcast yet, but I managed to see.
Oh yeah, it's good.
Yeah, I managed to see some of them on Instagram.
I
was watching some.
Yeah, that's a good point. Yeah, Raph, if you want, check out Pipped Off. You should be able to just search it on YouTube. Pipped Off. Mike's been doing a little podcast there as well.
Yeah, it's pretty cool. To be fair, I watched some of his stuff when he creates like a reel on it, because like I said, I'm so busy. Like when I do take 5 minutes, I'll just scroll through Instagram or something, and then like I'll see like reel like the podcast come up now and then, or like the 5ers reels will come up. I'm like, I'll just start watching them. I'm like, I may as well just keep working.
Yeah, exactly.
But at least it gives me something to do. It gives me something to laugh at. It's a good crack. Some of the stuff that the 5ers post, like from the reels, streams. I'm like, dude, when did we say that? I don't even remember that. So funny. Man.
I know. Harsh Patel asking, what do we think about the DAX today? I don't have DAX on site.
DAX is just consolidating at the moment.
Yeah, I mean, we've had a nib over this little top through here. Let's delete that. I think it's pretty much this area, basically. So the underside of these wicks from this higher sort of price action period. And then that's also where we sort of broke out towards those tops again, right? So right now, I think it does look as though we are trying to establish another attempt, at least back up to about 24,440. I think the FTSE was looking pretty similar, yeah. A bit different, actually. I don't mind the DAX though, as far as that trade. What's the NASDAQ now? NASDAQ's at a bit of a pause point, like contention. So I think that's the kind of level to get through on the NASDAQ. So yeah, I actually don't mind the DAX where we are, in fact.
Yeah, I've just closed out, guys, on GU. Really nice area to close out on. I think I banked about $90. So it is what it is. Yeah, 80. So 72. And okay, I actually lost $10 on that one too. 72, 62. Damn. So I banked $62 net. So that's after commissions. I'm happy with it. Guys, this can rally up if it wants to. It can hit a full TP. But the way that it closed, the way that it just absolutely tanked, broke and closed, like really bearish as well. I'm okay just not being in it. It invalidated my trade. And like I said before, I was like, depending how it closes will depend on whether or not I hold it. And the way it closed, it was super bearish. I'm grateful to be out. I was minus $200 floating as well, and it was moving down and down and down and down, and the momentum was dying to the upside. And I thought, you know what, screw it. I was like, this trade's now invalid. Like, if I was to walk, and I always say, if you walk out of the office, shut the terminal down, walk back into the office, open the terminal back up, and you're not seeing buys, then why are you still in the buys? That's my thoughts exactly with this. I could have closed my terminal, walked out of my office, walked back into my office, opened my terminal, and I would be like, Jesus, why am I in buys? There's either sell off or consolidation here. So for that reason, that's an invalid trade to me. I'm out. So today so far is a losing day. Having said that, I've made some of my loss back. I was 300 odd bucks down for the day. Now I'm only 240 bucks down for the day. So. It's not bad.
It's not too bad.
Not too bad.
Yeah. But yeah, so this is sort of what I'd be looking at on the DAX, even if you just went in at spot. Like this structure is forming up pretty nice. Stop just below those local lows. TP up towards the tops up here. You'd have an interim level about through there. So that's 24. Almost 24,100, so 24.90 to 100, right? Yeah, I don't mind that as far as the DAX. Cam say looking to buy gold at 490. We got euro yen. I'll say hi for you, Raf. And yeah, pipped off. So like pip, like PIPP, ED off, pipped. Like pipped. Yeah.
Oh man, look at you.
Yeah, I know. I was going to say to you, but I didn't want to. I didn't.
I got a particular finger on my hand right now, which I'd love to deliver to to GU. You are joking me.
Yeah. Yeah, so say not out the woods yet with it.
No,
you can see.
Like I said, I'm happy that I took out, even though this may well and truly go into my TP zone now. I'm still glad that I got out. Oh, gee, you son of a beach.
Oh man,
how frustrating.
Where's Jonathan today? Jonathan's got some other stuff going on, so couldn't make it for the day. So we got Will has been kind enough to come and fill in. Will the menace.
You get to watch me on this emotional roller coaster.
Sono was saying before 133.27 on GU to retrace to
Euro yen. Oh, you on GU?
I would say if we got down to here, I think we'd be we'd running right through. Probably back to about 133. If we get down that far. Euro yen. Let's go have a look. So euro yen getting belted, that's for sure. So yeah, across the board, we're going to have a lot of pressure on the downside for all the yen crosses. So euro yen, dollar yen, Aussie yen, pound yen. It's basically the yen strengthening due to the short-term, long-term yields, and then the Ministry of Finance, emphasizing the currency, and Bank of Japan saying that they're going to be moving towards the December rate hike, right? So we're getting sort of a Japanese rate hike potentially coming through. at the same time as Fed rate cut, and then you've also got the side pressure from long end, so short end and long end Japanese bonds, so JGBs, which is obviously starting to unwind the carry trade, because now the carry trade gets more and more expensive.
Have we had anything fundamental come out, you know? Because I'm just looking at gold as well, and gold rallied up quite suddenly as well. Like, we were pulling back, and again, we didn't quite tap into the area that we tapped into ever so slightly, but nothing, of course.
Yeah, I mean, yeah, we got back to those tops. We got that there. I think it's more so just the structure, like that 4 hour. We ticked over 4 hour, like I was saying.
Yeah. Trump said he had a Vindaloo last night, 1 minute ago. He said, Trump released this saying, I had Vindaloo and now my tummy hurts. No, I'm joking. He didn't actually. He said Trump could withdraw from the USMCA next year. And that's released on Politico. So that was 1 minute ago. That was high impact breaking news.
Yeah, interesting.
Yeah. Okay. So that kind of makes sense. Hence why we had that big gold rush, EU rush and GU rush. So we had a bit of weakness coming into the dollar. What did the DIX do? I'm guessing the DIX just dropped then. Yeah. Oh god. Yeah. Dixie did drop, didn't it?
That's a 4 hour. So down to 15.
Mm-hmm.
Yeah,
okay.
Basically hit that. Yeah, that.
Oh, do you know the weird thing? I said as well, I could do a Trump saying that he can't sleep. Breaking news. Trump.
Jumped out way too early.
I did, man. I did.
Yeah.
Trump's like, Will, I'm giving you an out here, you know. Well, Trump, you were too late, my friend. Why couldn't you have done this a little bit earlier?
But yeah, so Euro Yen, I think we're coming down to some sort of relative support. So I think we've made the majority of this move, right? You know, you've got this lower cluster here. Ultimately, we broke away from. So we're back in, testing right in the center point of that. So I'm sure if you throw a volume profile over, there'll be a bunch through there. So I think this might be a little bit tapped out for now as far as Euro Yen. We do also have that on the back of helping Euro Dollar come off here. So I think we'll have to see whether this structure that I mapped out for Euro Yen holds. Right now, we tapped right into that. See if this wick this plays through, and then if we do get Dollar Yen coming back off some more, let me hide that. It's a little bit easier to see, and that could help Euro Yen keep going. Dollar Yen's definitely still got that downside, but we are coming back into. We had this mapped out as a long-term, some sort of head level through there. Let's see, let's hide all this. Yeah, these prior heads on Dollar Yen. So yeah, definitely more downside to go for all the yen pairs. Just if we get a pause in the interim. So yeah, gold as well. Gold right now.
Gold's moved up really nicely.
Yeah. So we basically had this triangle through here. We've come out to the other side. Question's basically if this is going to hold up nicely through here. Now let me hide this so you can see it. That or else come down and you'd be testing basically the underside of that sort of triangle we broke out through from there. But basically the point of the triangle is you're just noticing that upside momentum is accelerating again. So right now this is looking pretty nice, pretty healthy, especially if we get a daily close with these wicks today. I think we could see that move right up into the 4300s again. But I think it's very much going to depend on today's close overall. So right now, like we were just talking about before, we did just get this 4-hour bar closing higher after we dip lower. And now we're trying to have another push. So we still got to get above about 4,210 for further momentum. Four to 10, 4 to 11, 12. Basically, up by this local cluster here. But yeah, we were saying earlier, gold's a bit a little bit indecisive. We're kind of waxing and waning back and forth a bit. So it's not as clear cut as has been some of the past.
It'll be interesting to see what happens. I think we need to wait for like the 4-hour, see what's going on with the 4-hour to see if we're going to be continuing that trend upwards or downwards.
Raf's long GU 116.74.
Nice one, mate. Awesome stuff. Well done. Good trade that. I bet you're loving life.
Oh, EU. Right, EU. Yeah, I was tripping out at 116. I was like, God damn, dude, you're up like 2,000 points.
Oh, yeah.
Yeah.
Even look at that.
Yeah, so 116.74 up to 117.41. I don't mind that. I was saying earlier before you came in, Raf, I think if we do manage to see this push on, hang on, I forgot I got order in. So let me clear that actually. Yeah, I'm looking somewhere between 117.10 to 117.20. So it's basically up by this guy. Old mountain range through here back from October. So mid-October.
You call it here the Swiss Alps trading strategy.
Yeah. So the peak of that is about 25. So, find some kind of topping point through there. About 117.20 or so. If we broke through that, I think we're going straight to 117.70 after that.
Oh dear. Don't stop liking that stream. Yeah, let's go, guys. In fact, let's check how many likes have we actually got. I'm hoping it's going to be around 100 as minimum. It's going to be like 60. Oh, 58. That's not too bad.
Oh, yeah.
Right, guys, absolutely smash the like button. Let's see if we can. I usually come on about 11:30 and there's about 60-ish likes. So let's see if we can get on to like 100 likes. Now, that's only 42 likes now in the next 22 minutes. So smash that like, guys. There's plenty of you watching. There's over 160 of you watching right now. So smash that like button and subscribe to the channel if you are new here. And don't forget, guys, join the Discord as well. We have got a Discord. Just go into the hub and get into the Discord through there.
Yeah, crush it. Absolutely annihilate that like button.
Also, don't forget as well, guys, we've got like a weird little, I never know what it actually does. Like, does it boost engagement? I don't know. We've got like a little emoji thing. So you'll have the chat box, then you have like an emoji box. And then to the right of that, you've got a heart emoji, a laughing emoji, a celebration, an embarrassed one, and a 100 emoji. Don't know what any of them do, but apparently you can like absolutely spam them. So do that. Yeah, again, I don't know what it does.
Spam.
Yeah, I think it boosts engagements. I don't know, but just absolutely go ham on that button. Just.
I got no idea either.
If you break your mouse on it, I do apologize.
Just send an invoice to Will for a new mouse.
Send an invoice to Will at the5ers.imsorry.com. But yeah, like absolutely smash that like button if you haven't already, guys. Guys, I mean, it does go a long way. We don't get paid for the amount of likes we get, but it shows that you enjoy what we talk about. It just shows that you guys enjoy it. You engage with us. So goes a long way for us. We're still human at the end of the day. We're still human. We still have feelings. We still have emotions, and we are still traders. Like, guys, we are no different to you guys in chat. So, just remember that when you think, oh, I'm gonna give them a like. We see the likes and we're like, oh, these guys like what we do. We like that. It encourages us to be better as well.
Yeah, and then the more of that, we can give back more to you guys as well. So.
Yeah, exactly.
Almost on the road to 100K.
Dude, we're so close. We've got 91.2.
Yeah.
We've got 9.8 thousand left. We can easily do that.
Got to get that YouTube plaque.
Yeah. Apparently we get a button in it. Is it like a YouTube button or a YouTube plaque, or I don't know. Again, guys, I'm not a YouTuber. I'm a trader. I think people can tell when I every time I try and do something engaging, like, oh guys, smash that like button, I just look awkward. It's like, oh guys, you can tell that people are probably like, yeah, Will's clearly a trader, not a YouTuber. Vinny saying, I know the feeling. Well, yeah, man, dude, I'd be like 350, $400 up right now. But what can we do? It's the way. Like Grant said, that's the way the cookie crumbles sometimes. Well, rather safe than sorry, though, bro. 100%, mate. Sometimes follow your rules. That's more important. And my rules, unfortunately, my discretion rules tell me if there's an invalidation in the trade, then get out the trade as close to break even or in the best possible price. And to me, the best possible price was here because, we had this consolidation. We tried to come up. We almost came up to our potential area of reversal. And then post that, we just dropped, tanked, and closed with a very volumetric bearish engulfing bar or bearish bar. So that being said, when we came back up here, wicked and closed on the 5, we came down, we wicked, so it did look strong. But to me, I wouldn't want to be buying here. So I thought, this is an invalidation. So I got to take out either at break even, which I was already at. But I thought, what? I think we can push up a little bit further. I think we can come and retest these highs. We did. I took out following the rules. So as much as I'm pissed off that I didn't get a nice trade and I didn't get that recovery of my losses on gold, it sucks. But guys, I still banked $60 and I didn't lose another trade. So I followed my rules, I stuck to my plan. And Grant, like you said, that's just the way the cookie crumbles, my friend. Better to be safe than sorry. Martin as well saying, no worries, Will. I did the same now with my gold trade. I know, bro. It's gut wrenching. It's so tragic, but hey, look, these things happen.
Gold could end up coming off here, not sure. So mixed. Ryan Hills, how do you get into Discord? So the Discord, you should, if you've got an account in your hub, you should be able to find the Discord link in there. I believe it's in the community section. It should be.
Oh yeah, wait, no, yeah. You need to contact support. If you've got a hub, if you created a hub account, contact support and ask them for the Discord link, and they'll send it to you. Oh, okay.
Okay. Yeah.
Just bring Rich in.
Explain Rich. Yeah, I didn't know it changed. It has changed.
Has anyone seen Come Fly With Me?
Yeah, it's changed recently. So it's when they went over to the new hub where they brought in all of the new lovely layouts and all of that stuff. They removed the link. And then if you go into the hub and you have purchased an evaluation account, all you need to do is just go to the live chat bottom right of the hub, click there, chat to them from there and say, listen, I would like to join the Discord. They will confirm that you have indeed purchased an evaluation account. And from there, they will send you the link. Oh, and hi, by the way.
Hello. Rich was good, man. How you doing, bro?
Good on you guys.
Yeah, good, man. Good. Yeah, like I was saying, have you seen Come Fly With Me at all?
The movie?
No idea.
No, it's Come Fly With Me. It's a series with David Williams. It's been cancelled, man, because he was so racist. But there's a sketch in there. And it's this
What?
guy. He works at Burger King, for example, and the woman asks for fries, and he asks the guy for fries. She asks the guy for fries. He looks at the manager, and the manager looks and goes, "Press fries." He looks back, presses fries. Then she goes, "And a milkshake." She looks up at the manager. The manager goes, "Press milkshake." And then he presses milkshake. It just reminded me of that. Like you were in the background trying to explain how to get onto the hub, and I was then explaining it.
Do this.
Do this. I was like looking at Rich, and then look back at the camera.
Do that.
Go into the hub. What next, Rich?
Oh, dude, Rich, I just saw your
Hey,
Discord
Will.
message as well.
Hey Adele, how you doing, man?
Oh, you did.
Wow, that's ridiculous. That's easy go. I did see that yesterday, the pool draft. Yeah. No, South.
Okay, but did you notice
What the hell?
that 1, 2, and 4 is going to be in the semis versus 3, 5, and 6
I
in
gotta get it.
Yeah.
the other side. It's ridiculous, mate. What a horrible freaking draft. It's just
Yeah.
terrible.
Oh,
So, yeah, it's the best opportunity that England has had in a long time to actually make it to
Yeah, fair.
them and
they gotta
Ireland.
beat
Yeah,
Australia
that's
though.
Yeah, but like consider that, like it's South Africa, New Zealand, and France,
Yeah.
which is
yeah,
arguably top 4 best teams right now, excluding England, obviously.
Yeah. Yeah.
And then on the other side, you have England, Australia, Ireland.
Having said that, Pool B, you know South Africa's winning that.
Yeah, no, I mean fair.
Yeah. No.
But I
Yeah.
mean,
Yeah.
New Zealand and South Africa and New Zealand and Australia in one group. That's dude, that's just unfair.
Yeah. Chile and Hong Kong don't stand a chance.
Well, I was about to say, if it so happens, because the World Cup is in New Zealand, it's in Australia 2027, which obviously is why
Yeah.
Doc LJ's got all of his problems with these local.
Yeah.
Better be worth it, mate. How about
Not in
we
the
all-
Olympics, you know.
Yeah, yeah,
right
yeah.
after. It's like,
How about we all rock over to Australia in 2027, we come visit LJ, we watch the Olympics, we watch the rugby.
Man, I'm super keen for that.
that'd be great. I mean, Olympics is until 2032, but so it'll be a little bit early for that one.
Right. Well,
You mean the Rugby World Cup?
we'll speculate about the Olympics.
Yeah, I was gonna say.
yeah.
by
Yeah,
But yeah, for the World Cup, yeah, that'd be sick.
yeah, mate, 100%. I'll fly over.
Dude,
Oh, we got-
keen.
we
I'm
got
so
LJ.
keen to have it here.
Man, yeah, that'd be sick. I'm actually I'm in Hong Kong for Hong Kong Sevens as well this year, or technically next year, 2026.
Oh, yeah, nice.
I'll be in.
That's awesome. We've got Cape Town Sevens, and it's very interesting. He dresses up crazy. It's pretty cool.
Yeah, dude, I'm buzzing for it.
Yeah.
So, one of the the people that CC work with, his son is a player for Hong Kong in the Hong Kong Sevens. So she's asked to see if we can get discount tickets. So I'm gonna see if we can get. She's gonna see if she
Yeah.
can get us tickets for the Sevens. That would be sick.
That'd be awesome.
Yeah.
See, there's
Oh,
someone
yeah.
asking, can you tell me something about the 5ers futures account? The only thing I can tell you is it's coming.
Yeah, it's coming
Yeah.
real soon. Like
There is
real
not there yet.
soon.
Yeah, coming. It's coming. That's
Yeah.
it.
Probably, Q1 of next year. But just be patient, guys. It's on its way.
Yeah. There's a couple things to be round up, finished off. So
Yeah.
um
World Cup is in Canada next year.
not for rugby.
I was going to say, Rugby World Cup.
Rugby World Cup's in Australia.
Ausland.
Yeah, that's 20. That's 20. Oh, and this is Football World Cup. When's the Football World Cup? I don't follow football, so I wouldn't know. I mean, I can ask my brother.
Isn't that what ChatGPT is for?
Oh, hang on a minute. Why would I ask my brother? I got Google
World
in front. I got like two massive screens in front of me.
Internet.
Yeah, it's football World Cup, Trev beats. And then what about a bootcamp giveaway? I don't believe we have any giveaways this week. I'm talking under correction though, so if anybody wishes to correct me, I don't believe we have one. But you never know next week. We don't know. We just came off of Cyber Monday and the massive Black Week giveaways that we had, where we gave away 20... was it 20 or 10?
10 a day.
10 a day. Bootcamp accounts every single day for a whole week. So yeah, I don't think we have one today.
I think we've given away too many. maybe there'll be another maybe there'll be another giveaway at Christmas.
Yeah, but
Maybe
you know, the right person to ask is Jonathan. Unfortunately,
Yeah.
Jonathan has got some other pending things to do today. But
I can be Jonathan if you want. Right, guys,
So,
I'm going to
so
go cook myself some chicken and rice. I'll see you in a minute.
Jonathan with a W. Jonathan.
Jonathan.
Jonathan. Tell us, do we have a giveaway today?
Yes, we have a giveaway, just not today. I'm going to go...
Do we have a giveaway today? Yes, but not today.
Yeah, fair. I my brain only clocked on to you saying today and once I'd started answering. So, no, we don't have a giveaway today, but we do have some fantastic giveaways. Me, Jonathan Randall, is going to dress up as Santa Claus for you all around Christmas and give you all, do a big giveaway for Christmas and do an account giveaway. So, but I must be dressed up as Santa Claus to do it. And this is Jonathan signing out to go cook some chicken and rice. No, chicken and potato. That's what you cooked yesterday, I think. Chicken and potato. I will confirm 100% I will be dressing up as Santa Claus for Christmas.
Hello,
Nice.
Rich. I get the idea that Will is not going to be asked to come in early again, ever. By Jonathan. Jonathan's just going to be like, I can't
promise the giveaways, but I can promise me, Jonathan, will be dressed up as Santa Claus. So if anyone wants to quote it, it has been said at 11:32 on Thursday, the 4th of December, that Jonathan has said that he's coming up dressed as Santa Claus.
Bring me up to speed. What have I just stepped into?
Well,
Jonathan making
Okay.
promises.
Before you start, I'm going to have to jump out. I got a couple other things to knock out. So I'm going to have to say ciao for now, guys. Leave you all
Have a
in
good one.
these gentlemen's hands.
See you later,
And,
man. See you
catch
later.
And Wannerton over here.
Jonathan.
All right, guys. We'll see you
Cheers,
later.
everyone.
Oh, I got it right. Basically, so I've been filling in for Jonathan this morning. So I've been on. In fact, I opened the stream this morning. So that was pretty cool. It was the first time I opened the stream, so that was quite cool. And everyone was like, "Where's Jonathan? And is there a giveaway?" So I thought, I'll tell you what, I'm just gonna, because I am now technically Jonathan. Actually, no, I'm no longer Jonathan from 3 minutes ago. I'm back to Will Davis, guys. Hey, what's up? But I was just basically, because I was Jonathan, I was promising everyone that on Christmas I'm going to dress up as Santa Claus on the stream.
Fair. That also meant that you become a swing trader just for a minute, right?
Yeah, that's true.
Yeah, fair.
Yeah.
True that. Maybe that's why he asked me to cover for him today. Maybe he's like, "Will, you swung trade the other day? I now want you to be me for a couple hours."
Yeah.
So I now.
Do you ever get that minute where, like, sometimes you go, maybe I should just pivot to swing trading? Like, I don't know about yourself. I trade lower time frames. 1 minute charts is where my execution is, which means I'm watching 1 minute charts. Now, it's in context of higher time frames, but the mental resource it takes to just watch charts, multiple charts, not just one asset, and keep staring at these little lower time frames, and the difference between a wick and a candle body makes such a it can make so much mental overload. And sometimes I just think, you have edge on the higher time frame, why don't you just execute on it? And it's because I used to do that 4 years ago. It feels like such a step backwards that I would go back to a time frame that gives me so fewer opportunities. So maybe I'm not alone. If you've experienced that in chat, let us know about it. Also, I'd want to know kind of what traders we've got in here, whether you're intraday traders, scalpers, swing traders, position traders. I've tried pretty much everything that I'm aware of in terms of trading styles. Like, probably the worst is where you're a scalper and it goes wrong and you move your stop loss and you try and turn it into a position trade, and you've got massive size on. Yeah, that's probably one of the worst. But
yeah, I love swing trading. I do. I just get bored. You know, it's just my type of swing trading is swing trading over the course of weeks or months. I think this is the quickest trade that I've been in and out of, which was technically a working week. It was 5 days. So I think that's the longest I've been in a trade for. The shortest time that I've been in a trade for on my swing trading strategy. The rest of the time, it's either been like 3, 4, 5, 6 weeks or like 2 or 3 months. So
that sounds like position trading. Like for those of you,
it's borderline investing. You know?
Position trading. For those of you that don't know, position trading is where you're going to put in. Now, the keyword is small orders. Like if you're doing this, typically traders do not leverage. So if you'd be putting in small orders into the market and you'd be allowing them to sit typically in line with a positive swap or a fundamental bias. Now, it might be that fundamental bias is still yet to be priced in, but it's based on some kind of typically like a macro or a higher time frame analysis. And then you leave them tiny orders with the idea that this price is eventually going to be higher than the price I bought at, giving me an opportunity of profit. And what I've seen from position traders when it's done wrong is they'll put an order in, they wake up the next day, it's 60 pips in drawdown. Oh, this is still good. I can put another order in. And then it's another 100 pips in drawdown the next day. And before we know it, we end up super over leveraged as traders. And it's something that we have to be very, very careful of. Position trading to me is one of the most patience building exercises as a trader. I can put positions in the market. They can be sat for 3 months, like Will was saying. And I mean, can you imagine every day you open your chart and for 3 months, every day you go, still in drawdown or still in a little bit of profit. Like for me, trading lower time frames, I can take profit in 3 minutes. I can also hit stop loss in 3 minutes as well. So there's it's swings and roundabouts, right? But it's something that definitely takes a lot of mental adjustment. And I think, can I say it's easier to trade higher time frames? I just think it brings a different level of difficulty. Not easier, not harder. Yeah.
I think it's less stress because
ball game.
Yeah, it's a whole different ball game, man. Think about it like Formula 1 compared to rally racing. You know, like Formula 1 and rally racing, they're both racing. They're both dangerous sports. They're both very high speed car racing disciplines, but then complete different avenues. You know, one's going through trees, one's going through like mud grounds, one's going like different terrain. The other one's on a track. And the speed is completely different. F1, you're doing like 200 mile an hour, you know, whereas rally racing, you may be doing 100, 120, 130 mile an hour because, again, the terrain that you're on and the way that you're racing. So they're two different beasts that both deserve the respect, you know?
Okay, so how about this? It's the equivalent of F1, which is generally done within a few hours, versus the Le Mans, which is
exactly. Well, the Le Mans, exactly that. You know, again, two different beasts.
Or it could be the Dakar, which is done over weeks, versus the TT race, which is on the Isle of Man, which is done over a day. So I know Rich would enjoy the TT.
Yeah. In fact, we got Isle of Man TT. In fact, Rich, have you ever been to that?
No, I've never been.
You're not?
Nah, never been.
Oh, dude, I thought that would have been like right up your street, and that's pretty quick for you to get to as well, isn't it?
Yeah, no, not. I've honestly not been. We're looking at it in the near future, but not something I've done immediately.
Yeah, but I mean, I'm surprised.
Like whatnot, the TT race on the Isle of Man, it's a different beast.
100%. Yeah, you've got like. I respect all athletes in all sports, but if you're a TT driver, like a TT motorcyclist, you're a psychopath. Just what is going on in your head to think, yeah, let's do this?
Speed, yay! That's what's going
Yeah,
on.
that's your only thought process is speed. Yay! Like who broke your heart for you to do that? You know, like damn.
Yeah, but I think some people look at traders who trade 1 minute timeframes or 30-second timeframes the same, right?
Mhm.
Like
Yeah, they do.
I've,
Yeah, probably.
I've seen traders that trade like sub 5-second timeframes. Like they're looking at 1 second charts, and I don't know if it's just me. My mind can't process that kind of information that quickly.
No.
It just like there's edge on the 1 hour. Like if I'm looking at my trading system, there's an edge on the 1 hour. I know it. I've quantified it over a huge sample of data. Then I move down to the lower time frame, the 15-minute. I can still find edge, but it's noisier. When I move to the 5-minute, that noise gets bigger, and for me, that edge got smaller. And then eventually, the 1 minute was just more noise than there was actual edge. So it was like every 60 seconds, the market was advertising a new idea by printing a new candle. Every wick meant something new. Every candle close meant something new. And I found that like for 2 years, I traded 1 minute charts solely. I didn't look at another time frame, just 1 minute. And I used to get chopped up so bad. And I was like, but I know there's edge here. I'm just kind of missing something. And it was a very small edge, but it had a high frequency of trades. And then what I learned was I needed to combine this with a 15-minute confluence. And then when I had the 15-minute confluence, I would say, okay, I execute on the 1 minute, but I trade the 15-minute. Because if there's no confluence on the 15, I don't trade. So when people would say, well, what time frame do you trade? I'd be like, well, I trade a 15-minute. And I got a very different reaction to when I said, oh, I trade the 1 minute. People used to look at you like a TT racer. They were, you're crazy. You're crazy.
Yeah, fair. It's like, dude, you're a lunatic.
Yeah. But, there's sort of that balance between trade quantity and trade quality. There's one thing getting 60 trades a month, and there's another thing getting 60 high quality trades a month. Richard, I'm curious, how many trades would you say you find typically within a week?
Well, I average around about 1.6 trades a day at the moment. So
1.6 trades. 1.6.
It's about 10 trades a week.
Okay, fair. Yeah, no, I get you. Okay, apologies.
To about 8.
Yeah.
So there are days where I get 2. There's days where I don't. There's days where I get 0, and then I get a two trade a day kind of like thing.
Yeah, Rich, I'm going to stop you there real quick. I'm going to let you guys natter for 2 seconds. I'm going to go make myself another coffee because I've been on since 9:30. So I'm going to make myself a coffee. I'm going to let you guys chat it out, and I'll be back in about 2 minutes.
See you in a sec.
Sure, no problem. Yeah, so roughly about 1 to 1 point, let's say 1 3/4 and 1.16, like 1.6, 1.16. Yeah, 1.6. And it really just depends on. I'm the same as you in that regard. You use the 1 and the 15. I use the 5 and the 15. So those are my 2 timeframes that I like looking at. So if I'm going to pull up a base area, which is something that I normally do, on the 15-minute, I'll look for it. If I don't find it, I will go back down to the 5 to try and find it. And then the base area is an area that I then try and trade from off. But I don't go lower. And if I do go higher, it's like maybe once a week.
Okay.
I'll have a look at what's the daily doing. So I can get like a good grasp of, okay, so if this is the daily, where are we currently? Okay, so we had this little area over here where we tried to push lower and then we're pushing out of it. Where can we potentially go within, I don't know, the next 4 or 5 days? Okay, cool. There might be a little area over here that we can potentially come and test. How far are we from it? Oh, we're actually quite close to it. Okay. And then I'll start working my way down. But other than that, I don't generally trade or even look all that much at the higher time frame unless I'm really unsure of where I am currently within the market. Because the thing, it's strange to say this, but when you go over to the higher time frame, you see the same thing as what you're seeing on the lower time frame, just broader. It's just a broader view. It's the same movement. Here we have a high point, we're pushing lower, we sweep a low, we attempt to push higher, we fail, we've created a downward trend. If I were to go and just look at this section on the lower time frame, I would see the exact same thing, just slightly condensed more often. So same downward trend, but just more of it, multiple times. Because within these 3 down candles on the daily, these 3 days, you have downward action, upper action, downward action. You can see that because you have wicks. You have wicks above and below it. So it's just where you're comfortable when you do trade.
Yeah, that's interesting because I speak to traders about this. Like, be careful what you learn, because what you learn becomes your bias, and then you bring that bias to every lens you look at into the market. So if you learn like liquidity sweeps, break of structures, for example, you would then see that on the daily, or you would see it on the 4 hour. You'd move down to the 5 minute, and your eye naturally goes towards those same things. Years ago, 5 years ago, I learned a 1 hour strategy called a bounce system, and I then learned to look at the whole market through this entire lens. Now, I couldn't tell you what that system looks like because I've forgotten it and I've relearned different systems. So I have a different lens that I look at. Now, that's when I think back 8 years ago, close to, when I come into trading. If you said to me, Rich, you're going to sit there and keep an eye on the chart throughout the week and you're going to get maybe 8 high quality setups, my brain would have gone, well, does that mean it only moves 8 times a week? And that's the difference that I never quite figured out, is the market is always moving. When you put it on the lower time frame, it just feels like it's moving faster. So to sit there for a whole week and just find 8 opportunities that meet a certain criteria, like, that's the thing I never conditioned myself as a trader to understand. I've got to wait, and I've got to wait only for exactly what meets my criteria. And the first profitable system I ever put together had around about 15 trades a month. We're talking 4 trades a week, half of what you get. Can you imagine how much time there was to just get caught in the weeds or get yourself into a bunch of trouble where you shouldn't even be in the market, but there was only 4 opportunities a week? Now, when we think swing trader, we're zooming out even more. We might get 1 high quality trade a week, maybe 2 or 3 high quality trades a month. And I think ultimately that's what I find doesn't fit me as an individual, is I see there's edge in the market in lower time frames and I want to be involved with them. So it's something that's a little bit more, I guess, patience. Like, it takes a lot more patience to be involved in the market and wait for it to play out on a higher time frame. But smaller time frame, I'm running through a study at the moment. I've had to put it on pause because just kind of life is super, super busy with the stuff that we're building and with the 5ers. But the study that I'm doing or sort of working through is like 150 trade signals a month. And I'm like, 150 means you never starve, providing you can figure out what's the good trades within those 150, because all 150, they are going to be signals. Like, if you bought a moving average crossover, you'll get hundreds of opportunities on different assets each month to get involved, especially on the lower time frame. But it doesn't mean to say that those hundreds of opportunities are good opportunities. And as our job as a trader is to figure out, well, what's the difference between a good and what's the difference between a poor setup? And there is a technical difference, and that comes back to being careful what you choose to learn technically, because once you learn something, it's very hard to switch off from what you see on the charts.
So this is just on the 1 minute, like you would normally look for. It's the exact same thing that I'm looking for on the 5, the exact same thing I'm looking on the 15. You can get it here. The difference is, if this is a 1 to 2 trade that I'm looking for, which is high, lower, low, higher low in this case, it gets broken, broken and closed, attempts to push lower, pushes back into it and starts pushing lower. Now, obviously, there's other confluences that I start looking for as well. So I want to see stuff like creating bases that price, when it has an opportunity to push back into it, it fails and starts pushing lower. This is a 1 to 2. If I just purely went on the idea of a 1 to 2 trade, this is 2.8 pips. So you can see the exact same thing on the 1 minute, but like it's how much you're willing to take or how much you're asking from the market, basically. Mm-hmm. So the expectancy here wouldn't be for me to put in a trade there at the top and then want this move. So that's 7 pips. And then if I come and look for it over here, that's something reasonable. But if I do this on, for argument's sake, the 5 minute, and let's not say 5, let's say 15. I'm looking for the same kind of movement on the 15, but I'm looking for this whole movement as an example, and I try and do the same thing on the 1 minute. It's just not going to work out for me, because what I'm looking for on the higher time frame, and when I'm looking at the higher time frame, is I'm looking specifically for something that's reasonable within 15 minutes, within the 15-minute time frame. It's like saying, don't try and do a swing strategy on the 1 minute in its entirety, because you're looking at the 1 minute and 1 minute's movement, but you're asking something that's going to take days, maybe even weeks to play out. But you're looking for the 1 minute. So it's like it's adjust what it is that you're looking for and stick to that. So in your case, if you're working your way from the higher time frame all the way down, you will get to a point where it's just fluff. The information that you're receiving there means nothing to you really. It's going to harm you more by trying to execute your plan on the lower time frame than it is for you to just step 1 or 2 time frames up and then try it from there on.
Yeah, but also an edge can erode by the cost of doing business. We think about a 2 pip stop loss. Imagine your cost of getting in and out of that trade is half a pip. You've got your spreads, you've got your commission, plus you've got slippage. Now let's just say it's a pip to do business within that. You're paying 50% of your stop loss in the cost of doing business, and it reaches a point where you might find edge on a lower time frame, but your ability to execute on that with volume, if you have a 2 pip stop loss and you wanted to put 1% of your account into that trade on a 100k account, you would be trading, off the top of my head, 50 lots on GU and EU. Now to get 50 lots and to execute without any kind of slippage, or like to get in at the exact price you want and to get out at the exact price you want, it just becomes less practical, especially when we start talking about going up in volume and pushing into 200 lots, 500 lots. Because if you're, that's just a 100k account. If you were funded just, say $1 million, you'd be 500 lots on that trade to risk 1%. The commissions on that alone is going to erode the majority of that edge, because every time you lose, you're losing your stop loss plus the cost of getting in that trade. Every time you win, you've still got to pay the cost of getting in that trade. We find that edges are less affected by the cost of this is not like, you can just look at a bigger trade with a bigger stop loss, just equivalent works out to be less transactional cost to actually put that trade into the market. Just something to consider, when you're looking for edge and you start going down the lower timeframes and you're realizing that your edge still follows the lower timeframes, that cost of doing business is still there, and it becomes more expensive as well because it's relative to the stop loss distance. I know it's kind of a little bit sort of advanced stuff, but it might help a couple of traders here go, actually, you know what? And there's reason to look at higher timeframes and maybe get something dialed in on a higher time frame before going to lower. So you go, right, well, that's my bread and butter. That's something that's a little bit less, volatile, if you like. Like if I get slipped and I got 100 pips stop loss, what am I going to get slipped? It could be 5 pips. That's 5% of my stop loss. If I had a 2 pip stop loss and I got slipped 5 pips, we're getting slipped hundreds of percent, like 250% of our stop loss, or 150%. So it's so much more. Like it affects our edge so much more. Now this isn't fluff. It comes on the back of doing a study of over 100 hours, sitting there candle by candle by candle, developing an edge on the US 30. And over 100 hours later, even though that edge had produced a positive expectancy, it was basically break even because of the cost of doing business. And I didn't realize this until I tried to execute it in the market. What I've shared with you there was a 100-hour lesson, not including trying to implement that in the live markets. And the edge played out exactly as I backtested it. When I looked at my P&L, all my commissions, all my spreads, all my slippage, all that, it eroded the edge. So maybe that just shares, something with you guys in chat, and it gives you something to look at and think, actually, you know what, maybe there is certain things in business or certain things in trading that aren't as obvious to see as a newer trader coming into it. And as traders, we never get away from it. But as traders in the 5ers, I would say the spreads for GU and EU, at least what I trade, they're excellent. They're really, really good.
Yeah,
just my own experience on it.
I mean, this is a 5K account with the 5ers. Here's the ask line. There we go. Let's see what I can make the ask prices color just to make it different. Let's make it red. Right now, the two lines are right by each other. So it's zero spread whatsoever. Now imagine that on the 1 minute, and all of a sudden volatility picks up momentously. There's news that happens, and all of a sudden your price, let's say you have an incredibly close stop loss. Between the closure of this candle and open of this candle, there's 4 points, so it's 4 pipettes, which is the price of commission, as an example. It's like you said, it starts picking up a lot quicker the lower down on the time frame you go and the smaller you make your stop losses, because the spread can jump a lot than what you're used to at any given point in time. So it can burn a person very quickly when you realize that I'm giving away 25% of my whole trade just to commissions, or I'm giving 25% of my trade just to spread, as an example. And then half of your trades, even though you have a 1 to 2, you're giving back automatically, which reduces you from a 1 to 2 to a 1 to 1, which is going to impact your expectancy across the board, because it's part of the cost of business, basically, the spreads and the commissions, and you have no control over the spread. You can choose the commissions kind of like to a degree, choose a broker that has lower commissions overall and so on and so forth, but you have zero control over the spreads and when it happens. So it's just something to really pay attention to.
Yeah, these are the nuances in trading that catch us all out, right? We all have to go through that. We all have to learn them lessons of like kind of how to maximize your edge. We're not talking about necessarily how to find an edge. We're talking about how to maximize an edge, and just kind of the tip of the iceberg on little things that we need to consider when you build your first edge and you go, wow, I've got this kind of thing that works. Out of 20 trades, I'll make a tiny bit more than I lose. Over the next 20 trades, same thing happened. Over the next 20, and eventually we build a big enough sample and we go, I can't believe it. Over like 300 trades, it's made a bit more than it's lost. This is now my edge. And then comes that time where it's a balance between curve fitting and optimizing an edge. And I see a lot of traders very easily go into the idea of curve fitting an edge, where you have a lot of information about an edge, say 300 sample size, and you think, well, how can I make this better? And then you filter everything by entry time, and you end up with just 15 trades, and they're all winners, and they all happened at a certain time of the day to the minute, and you think, that's it. If I just enter on this exact minute, we get variance when we test an edge. And the biggest way I found to mitigate variance is sample size, wisdom of the crowd. If we have a massive sample size, we can lean into that information and we can say, you know what, it's more likely to be reliable. I was once taught this: if you had you get them jars of sweets, and you might be at like a festival, and you have to guess how many sweets are in the jar. And they would say, like, if you had one person that guessed how many sweets were in this jar, relative to 100,000 people who guessed how many sweets, and then you took the average of 100,000, the likelihood, the wisdom of the crowd is going to be much, much closer and show that their answer is actually going to be consistent. And it's the same when we look at a low sample size of trades, 5 trades. Let's say you look at 5 sample size and you go, I think I found a strategy that works. 5 trades, you could flip a coin and get tails 5 times in a row. Does it tell you anything about that coin? Not likely.
Yeah, what's the chance of getting, I don't know, tails or heads 500 times in a row?
Exactly. So the more we flip it, the more we get information that maybe there's something wrong or something right with what it is I'm trying to do. So a bigger sample, and I know it's not like interesting work, because what it does is it encourages traders to go and put in the time into their studies and try and submerge themselves with enough information. But when you've done that, nothing I've done in trading has inspired and built more confidence in my edge than a big sample size. Anybody could join this stream and argue with me and say, Rich, you have no edge. And I could say, well, your opinion over this 400 sample size data with no hindsight, that's not curve fitted and produces a positive expectancy, like the results of this are far outside the mathematical probability of any random walk theory. And it's a bit of a deep concept, but it's something that as you get a bit more involved in trading, you want to try and maximize that edge. And I guess it's probably back to that TT analogy we were talking about earlier. This is how when you have a running motor, eventually you want to tune it and get it running a bit more optimized and running a bit more refined. And then eventually you end up with these, these things that are really well dialed in. And the same work transitions over into our trading, but it is work and it takes a little bit of time to do it. But the end result is that you see, with you guys, you see Richard, you see Will, you see many other hosts on this stream come in and they just execute their plan because they've done that work and they know the environment where their edge sits. And once you've done it, you feel happy waiting for only 8 trades a week because you know everything outside of that is just noise.
What I do like about this analogy that you're talking about is like putting in the time that you need. It's the idea that you will only reap the benefits if you've actually spent the time. You've paid the time basically for this thing that you're trying to learn. If you're going to treat it like it is a hobby, you're going to get hobby level returns. It's never going to provide you with this grandiose idea that everybody seems to think trading is, because you're treating it as if whatever, I'm not going to put in the time, not going to put in the effort. If you're working in any industry, it doesn't matter what industry it is. I don't know, you're a clerk or you're a dishwasher, it doesn't matter. You can choose to be the best in that industry. And the only way for you to become the best is to put in the time and the effort. You can't half do anything and expect to have the same results as, like, I keep referring to Usain Bolt with this. He took 8 years. It took him 8 years to learn how to run sub 10 seconds per 100 meters once. And the thing is, people want that level of achievement, but they want to do it with 2 months of jogging, as an example. It's not to say that outcome is based on time input, but it plays a massive role. The quality of the input that you put into this game that you're trying to play is going to have the biggest impact. But you still need the time. You still need to put in the time, and it needs to be properly allocated. And you need to make sure that if you're going to do something, you do it with the right intention. So when it comes to trading, it's the same thing. If I don't want to treat this as if it's a hobby, I want to treat it as if it's my day job. So I'm going to approach it with the same intention as I would have trying to become the best mechanic, as an example. I'm gonna put in the same amount of effort and time as I would want to learn. So it's always that idea of curbing your expectation. If you're putting in minimal, you're going to receive minimal.
Yeah, but that doesn't sell courses. That doesn't sell signals. That doesn't sell mentorships. What we're going to do with that?
That's a profitable strategy.
Because that's the thing. It's just like, you get great mentors. Great mentors that cannot trade to save their lives. They can teach you how to trade, but they themselves really struggle maybe with the psychology of it, as an example. Maybe they just don't trust themselves. But then you get the inverse, like people that are great traders that are horrible at teaching other people how to trade. I feel like you need both. You need mentors, you need executors, as an example. Unfortunately, in our industry, we need to be all of that. You need to be the trader, the mentor, the coach, the psychologist, everything.
Yep.
And there are people out there that they sell a course or they sell a strategy, and people just blindly follow it because they assume that this person is a great trader. They might just be a really good showman. They might be a really good salesperson. They're selling an idea. So you kind of have to approach everything with the idea of, what is this person? Are they actually a trader selling a profitable trading edge, as an example? Or are they a showman? Are they really good at bolstering the crowd's attention? Are they very charismatic? You have to ask those questions whenever you approach something. And then you'll start realizing that certain people are literally there because they are showmen.
If you want more context to this, under the 5ers recordings, if you go back round about 6 months, you'll see that we did a risk marathon event. Now, one of those videos specifically was a segment that I held, and it talks about every single title and hat that you have to put on as a trader. I think there's something like 10 or 12 different specific roles. Richard, you reminded me of it when you were saying, like, we have to work out our own risk. So we are our own risk manager. We are this stop loss enforcer. We are our own psychological coach that encourages us to take only valid trades. We're the emotional regulator that holds them trades to that full objectivity. We're the financial manager that chooses how much funding we go for, how much risk we use on that, what strategy we apply, how we deal with drawdowns. Like, all these things as traders take time to develop. Like, we were talking about this before. I think it was Will and I were, Will and Rich was mentioning that you can learn strategy pretty quick. You can learn risk management pretty quick, and psychology takes a little longer. It's a little bit more of a moving object, so to speak. But there are still all these other nuances and skill sets that we have to learn to be functional, good traders. And in that video, I won't spoil it if you do want to go and check it out, but I talk about having a link, like a chain, like on a bicycle, and whichever is the weakest link is going to snap and destroy the whole process. So if you can't manage risk management, it effectively mitigates your edge, your strategy. Or if you're amazing psychologically but you don't have an edge, like that not having an edge mitigates so much of that emotional work that you put into yourself. So it's about, we talk about having these three pillars, these three stools, or three legs, on a stool: psychology, risk management, and strategy. It's about having them in balance, because you only need one to be a little bit smaller than the other, and you run around in circles. And I've not only seen it through hundreds of traders that I've networked with and worked with over the years, but I've also experienced it myself for way too long. And this is why we encourage in things such as journaling, because it holds up a mirror and gives you a different perspective to see your entire situation and your thoughts from a different lens. And this is why, like, journaling is typically known as, well, it's boring, I don't want to journal. But if you worked with an accountability buddy, or if you worked with say you had a community, or if you worked within the 5ers and you saw that a trader could offer you these insights, wouldn't you love to see it? This is the whole premise of why people work with coaches, is to get these realizations that they're blinded to. Now, the cool thing is, if you're willing to put a little bit of time into your personal development, you can offer so many of these insights without ever leaving your trading station. But you've got to be willing to take a raw, hard look at yourself. And if you find that you're not getting where you want to within your trading journey at the moment, let's say you keep blowing funding accounts, or you're not quite getting past these challenges and getting payouts, but everything you look at on social media looks like everyone's just creaming it. First of all, let's have a realistic expectation that everything you see online is that's like after someone spent 50 hours putting on makeup, it's the best version of themselves, right? Not often you see people go, here's my get out of bed head. Here's my get out of bed hair. Here's my, here's me before I've had a coffee.
we give it a go.
You do get some wonderful people that share the other side of the coin, but just understand that what we see online typically is weighted towards like that idealistic, perfect image of lifestyle. So, what we're being fed is kind of probably like 80-20, and that's me being generous, but it's 80-20 weighted in the favor of what success looks like, and painting that as a picture of that should be normal when you put in the work. I can tell you, you can put in the work and you can still go through a really difficult, struggling period. So trading just takes that time to...
As the norm. They're trying to sell it as this is the normal thing. If you do what I'm going to tell you, this is what you can expect.
I'm going to back Rich up a little bit there as well, and just go into, like, you mentioned about, in fact, me and Rich have spoken many, many times, months ago, all the way up to present day, about the three-legged stool theory. Take into consideration, take, for example, something that I can almost guarantee has happened to each and every single one of you, if not even on the daily. You sit down at a table and it's wobbly. So you sit down at the table and it starts doing this. And maybe you're trying to cut your food, or maybe you're putting a glass down on the table, and then next minute the table's just wobbling, and it's just niggly. It's annoying. And then and it's just like, that's starting to piss me off a little bit now. Like, stop it. Like, and then you're there trying to move the table about, trying to find the right way. That's no different to your trading journey. That niggle is never going to go away. that niggle is you maybe not being as profitable or as consistent or as psychologically advanced as you could be. There's potential because you can put a card under it. You can sort it out. You can, if you really want to go there, you can measure it out and cut off the other 2-3 legs just to make sure it is level. Or you can readjust the flooring. You can do stuff to make sure that table becomes level. But unless you're willing to do something about it, unless you're willing to change, that table will forever have a wobble. And going back to the social media side of things, I am also guilty of this. I weight my social media towards the sexier part of my life. I'll be honest, no point in hiding it, because guys, you can go through my social media. You can go through my social media and look at it and think, Will does not live like that every single day. I do live like this, but it's not every single day. Every single day, I'm at the charts here with you. You guys see a better representation of Will Davis than what the people do on Instagram. Do you know why? Because you care enough. You want to understand what the depths and mechanics are behind the trading. Most of the people on my social media, they just want to see what trading can do. And I'll be like, okay, look, the engagement needs to be there to attract the right people. And I've got a theory, and I'm developing a theory. I'm not going to give too much away, but I'm not going to gatekeep it either, because I live in full transparency. So I've got a theory out there that if I made a Forex course and I marketed it and sold it to be sexy and Lamborghinis, and you're going to become multimillionaires, and you're going to become the next Jeff Bezos and Bill Gates, and let's keep it trading related, the next Warren Buffett, you're going to become the next multi-guru of investing. And then the minute you bought the course, I then hit you with the realization of, guys, look, this course is not going to be a quick strategy fix. This is not going to be the quick strategy, I'm going to make you profitable in 30 days. What this is going to do is teach you everything you need to know to become successful, or maybe do it like pre-finance, like maybe do it before, like maybe you need to sign up to watch a video, then you buy the course. And then in that video is going to be, right guys, this here is going to be everything you need to learn trading. This course is going to take you 2 years to complete, or 2 years of back testing, and then I give you the real hard fundamental truths of becoming a trader. Okay, yeah, fair. My success rate for the signups and for the people buying that course may plummet compared to the people clicking into the video. You'll get all the people who want to be scammed and gurued. You'll get all them clicking into the video. The minute they see the realization that actually it does take a lot to get into trading, they won't buy the course. But what that will do is the algorithm will kick out, and so many people want to follow and become part of and watch the lifestyle that I promote on Instagram. But what it will do is those, out of 1,000 people, there may be 5 to 10 people that think, I thought it was going to be a quick fix, but I like what this guy's saying. He's telling me, he's being honest. It's going to take months and years, and it's going to take hard work and dedication. I'm going to buy this course. And yes, you may need to market it in a way that will appeal to everybody, but you need to be transparent before they buy the course that this is actually going to be really bloody difficult.
And you always have to ask why. What is the why behind the decision?
Exactly that. And I think that's what I do on my social media. I'm like, guys, look, yeah, it's all good. Ooh, look at me. I'm really sexy, and whoa, look at me in my Flash M4. The minute you come to a live stream and you're like, well, wow, I really want to know how Will does it, I'm going to hit you with the truth. This shit is hard, and it's going to take years of hard work and discipline, great psychology, endless back testing, endless forward testing, live trading. There's going to be emotional roller coasters. We talk about the three-legged stool theory, so we got to... That was quite funny. Rich just disappeared. So we got to keep that realistic expectation there, and that's why I love live trading. That's why I love streaming. I can't hide. I cannot hide. Everything is here. Like, there's no point in I'll take up my entire history on this account. You guys have watched me past phase 1, you've watched me past phase 2, and you've watched me go into deep drawdown. You've watched me go claw out of drawdown. You watched me take a $300 loss today and then earn a little bit back. I'm now $243 down for the day, which is a shame, but I can't hide it. So there you can think, wow, you know what? Will is transparent. Will is genuinely an authentic trader. And that's what I'm trying to promote when you get into the industry. Like, yeah, I'll attract you and be like, I'll be like that peacocking effect where it's like, ooh, come into the trading industry. It's great. I'll get you into the trading industry. I'll get you into the 5ers live stream, and you'll be like, oh my God, it looks so difficult. I'm out of here. So, okay, bye-bye. But out of 1,000 people that will come in, there may be 100 people that think, wow, this is for me.
So it helps us align our expectations. That's what it really helps us do. It helps us paint a more realistic picture of what is this industry. Now, there's this shift. If I knew what trading was now, after 3 years, if that was the complete picture that I had after 3 years, I never would have got into trading. Now, after the 4th year, I was like, I'm kind of glad I got into trading. Now, after 7 years, I can look at my trading as a whole and go, so pleased I got into trading. But after 3 years, I would have quit. But I believe that picture was still painting. So there's a I love these rants that you guys go on that just paints this full picture, because it gives traders an opportunity to really look at that and say, how does that look compared to what I'm seeing and what I'm experiencing? And just understand, as a trader, we can be incredibly creative. Our pictures are never finished. Even Will now talking about his edge and kind of what he's going through in the market, I can tell you in 3 years, Will not trade the exact same as he does today. He's evolving, he's growing, his picture is always changing. So if you're struggling with trading, just understand that you're still painting that masterpiece.
Yeah,
and
3 or 4 months ago, I was trading.
But after a while, what happens is you hope, like a sculptor, you're not smashing on these big bits of clay. What you hope after a while is you're just sculpting the little detail. I see a comment a little bit earlier. If you've got any comments in chat, please leave them with us. It gives us a chance to run through this stuff. But I see one comment we had was risk, for sure. When we talk about that 3-legged stool, if your risk is too big, it's like having one of those legs on that stool just slightly longer than the others, and that's enough to put everything else off balance. So one thing that we can do is we can bring our risk down to a level that we can emotionally compromise with. That's a 4-legged stool, dude. I haven't got a 4th thing. 3-legged stool. There we go. So if we're over risking when it comes to our trading accounts, just understand that puts emotional pressure on us. We're not robots. We all have a limit where we just say, at this point, I feel uncomfortable. When you feel uncomfortable, typically we're likely to act in a way that's more fight or flight. It's designed to keep us safe. These are typically how our brains are wired, through that chimp brain and that emotional side and that logical side. Like if we went to our accounts and traded 0.01s, a lot of us would just suddenly go, my process is really easy to follow. And it comes in that pushing up and trading 3 lots, 5 lots, 30 lots. That's where, we're trying to expand our bubble as a trader. And if done wrong, we just jump outside of our limiting self-belief and to try and change the image of who you are. And this is something that I feel super passionate about. We talk about the gym, how you can't out-train a bad diet. But when it comes to trading, it's so difficult to out-trade your self-image. So if you have a vision of yourself, of you're worth something, and then you're trying to act outside of that, there's a wonderful video that I watched, and it took me 4 hours to go through this video, and it talks about how the guards are always trying to pull you back into your comfort zone. It's like a fight against yourself to try and behave in a way that's not congruent to who you really are. Yeah. Now, I know this sounds like a lot of mumbo jumbo and psychology stuff, but really what it is just paying attention to how you feel when you open a trade. And then, as Richard said, why? Why do I feel like this next one loss is going to absolutely define me? Why do I feel like my whole trading career pivots on this next trade playing out? Why do I feel like I need to have a win to validate my identity. And in the course that we're building a lot of resources around the idea that we're here to execute on a process. We're not here to become our P&L. And it is the human condition that so naturally attaches us to our P&L. And you know this because if your trade will go into profit and you feel excited, or if your trade's going into drawdown and you feel that dread, you've overly invested into your trading. And it's natural. It is literally like, I can't think of an analogy, insert funny analogy here, but it's natural. And what we've got to do as humans is really identify, how do I feel, but why do I feel this way? And this is what I'm super passionate about, is helping traders have that moment where they realize, you know what, there's a little perspective or a different way I can view this that helps me change the way I feel about it. Because if you can change the way you feel, likely you can easier change the way you act. And if you can change the way you act, the results you get, you might be the difference of allowing your edge to play through rather than snatching profits or trying to extend your stop loss to never take a loss. These are the kind of things. And after 3 years, I had none of these insights as a trader. Can you understand why I wanted to quit? After 5 years, I started to develop this stuff. After 7 years, I'm really, like I say, with that analogy of the molding the clay, I'm trying to sculpt those little bits to just make small adjustments. And it's a nice stage in your trading where you go, you know what, I'm mildly profitable, and sometimes I make these little mistakes and I can still get paid just a little bit for it, resulting in me making a bit more than I lose. It's way better than going on these emotional swings of just win, lose, win, loss, or boom and busting trading accounts. So these are the insights I can share with you from a 7-year journey, and I can tell you the insights are going to be way more in the next 7 years. One thing I've learned in trading is that next milestone in front of you, that thing that you think you need to achieve, and then everything will fall in place in your trading. I've gone through hundreds of those milestones, and every time I believed that next breakthrough was going to be the breakthrough that either brought me profitability or daily profits, and I never lost. What I realized is I went through hundreds of these new breakthroughs. Now, the track record tells me there's going to be hundreds more. And that sort of helps to paint the picture of, you know what, trading is like a chart. It has ups, it has downs. But sometimes we have to take these 2 steps back in order to scale 3 steps forward and finally jump over that next hurdle that's been holding us back. But we can't do that unless we implement the things that we learn, the things that we're challenged on. If we keep repeating the same behavior, we're going to get the same results. We might get lucky for a bit. We might pass an account or two. We might get an odd payout. But typically we stay in that boom and bust cycle. But once we can bring some kind of clarity to that, once we can bring some kind of organization, we put ourselves in a position, like a strongest position possible, that we have a chance for our edge to play through. And it's a discipline like nothing else I've ever learned in life. And this is why I say it probably took so long for me to learn, because I was just so poorly equipped through my life experience of how to apply this stuff. It took a lot of unlearning and then relearning, which kind of ties into what I was talking about earlier. Be careful what you learn. And in life, we can't, we have a lot of these things that are naturally kind of pushed on us. We learn these behavior patterns. This is good, this is bad. Don't do this. If you do that, you get punished. If you do that, you get reward. There's a wonderful book, Best Loser Wins by Tom Hugard. And I'm just
still to read that book.
It's an amazing book. And it re-challenges the idea that best loser wins. I mean, in life, you imagine running a race and coming last and then feeling good about it. In trading, it challenges a lot.
I'm just not programmed to do that.
but in trading, we have to challenge
a lot of 100%. And I'm going to back up on this as well and really emphasize this, is that we are not bred to believe this. This is why trading is so hard, and this is why it's such a psychological game. Because if we were bred to feel like this, then trading would be easy. Think about gym. Gym is hard. You lift heavy weights, your muscles ache, your body's sore. We don't want to feel that. We want to be in bed, cuddled up and warm, because we know that it's bred and encoded in us for millennia that we are safe in that environment.
Get comfortable with being uncomfortable, mate.
Yeah, get comfortable with being uncomfortable. Think about boxing. So my brother's just bought some new boxing gloves, and first thing he wants to do, he wants to try them out, punches me square in the face. I'm like, well, what'd you do that for? You know, we were just parrying. You know, obviously I didn't have my gloves on, so I was just like parrying out and, you know, just doing some movements with him. And square on my face. I think my post is here. So he just punches me square in the face. But then I realized I just stood there and took it. I am not designed. Human beings are not designed to stand there and get punched in the face and enjoy it. No different in trading. We are not designed to take a loss of 100, 200, 300, 400, 500 bucks, 500,000, 5,000. We're not designed to lose that sort of money and be comfortable doing it. So therefore, to get comfortable doing it means that we got to program our brains to do so. On that one, I'm going to have to duck and dive real quick. I'll be back in 30 seconds. I got to go pick a parcel up.
Check out this comment here. It says, "Oof, I'm glad that this sounds like mumbo jumbo to 99%. Otherwise, you guys would end liquidity. That would be a real problem."
Yeah, Mario's got like a really good sense of humor.
Yeah, that's and over time we want to try and make this sound a little bit less mumbo jumbo-ish, and sometimes we do jump in at the deep end, and for many of us we're still at the point of learning to sort of splash that water and just get involved in the markets. But a quick recap for me, and I'm going to have to fly a little bit early, is again, it comes down to those three pillars that we were talking about. Is just have a simple to execute strategy that we can explain to someone in 60 seconds. If we have no grey area, it's less likely to affect our decision making. Just a simple yes, no, I should do this. If we can bring that into our trading, that is a really good place to start with when it comes to strategy. Then we have the whole kind of idea of risk management. What is the right kind of risk management that means I don't lose my whole account if this one trade goes bad? If we are skating on ice that could break and completely sink us, we can't have that peace of mind. But when you can frame one loss as just one simple good loss, and you might be using 0.25% risk or 0.5% risk, we give ourselves such a big opportunity. That ice is so thick that we're not going to fall through it and lose that account anytime soon. We have many opportunities to reflect and learn. And then finally, we have that psychology, which is all about just asking why, and getting to learn a little bit more about yourself. Why do I feel the way I'm feeling? And over time, we can fill in the gaps with that kind of stuff. I'm going to have to fly. Gentlemen, it was an absolute pleasure being on the streams. Just a quick shout out, if you want to get involved in a little bit more of what we do within the 5ers, in about 3 hours from now, 3 hours and 15 minutes in the Discord, we're going to have a call. It's an open mic. We have the opportunity for traders to come in, have a chat. I'll be in there, and we talk about a lot of the stuff that we mention on stream. We go into a bit more detail. But gentlemen, I'll catch you soon. Thanks for having me on. Cheers.
Absolutely, Rich. Pleasure having you on as usual. Have a great day, mate.
Have a great day, Rich. Yeah.
I love Thursdays. Really do. I really enjoy Thursdays. You know, Rich just comes on and drops absolute bombs. Sorry, guys, I do apologize that I did drop off. I literally finished my point, and my dog hates the postman. So he'll the letters will come through the box. He'll just grab it out of the letter box and just rip it apart. And I was expecting a parcel, so it was an absolute I had to race my dog to the front door. Otherwise, he's like, I'm going to rip your post up. Well, I'm like, you're bloody not. I'm going to get there before you do. So it was he's one side of the house, I'm the other side of the house. We had to run to the door and see who got there first. So I managed to beat him just about. Do apologize that I ducked and dived. But yeah, I can't remember the thought process that I was on, but I think it was along the lines of, you got to get comfortable with being uncomfortable, a bit like Rich mentions, when it comes, and building on our why as well. So I like what Mario's saying here. In fact, no, it was the other one. There you go. Agree to disagree. You need to feel as bad as possible, or you will not search for a solution, and there will be no evolution. I somewhat agree with this, to be fair. I do agree with this.
To disagree, mate.
Yeah, exactly. Yeah, agree to disagree. Yeah. But I don't know, that's how I was brought up. I was brought up a very competitive person. I think if you're... that's why trading is so difficult, because you've got to be okay with losing, but not be okay with losing. Like you got to be so okay with losing that you're willing to lose, but so uncomfortable losing that you're going to find a solution on how to win. So I think that
idea of being comfortable with being uncomfortable is it's the realization that you're going to go through things that are not going to be fun, and those things that you go through that are not fun, whatever it may be, you can classify it however you want to. Those things are a natural part of this whole journey, whatever journey it is that you're going through. If you're a student in university and you have to stay up late to study for an exam that's in 2 weeks' time, and you're missing out on time with your friends and your family and stuff like that, that's the sacrifice. That's I'm offering up something for this potential thing that I'm working hard for. So the idea is just that this is uncomfortable right now, and the quicker you get out of the whole woe is me, I'm poor me, I have to spend late nights studying, that whole self what's the word specifically for it, but like self-pity, yes. Like you're pitying yourself because you're going through this thing, kind of this negative thing. It's kind of just accept that you're gonna go through this regardless. There's always going to be something that is going to be uncomfortable, even within your favorite things. Oh, I must go to the toilet right now. This is uncomfortable. I would love to just sit here and watch my show. Now, obviously, that's a very silly and stupid example, but the point still stays the same.
Okay, you're driving, for example. There you go. You're driving on the road. You got a service station in 10 miles. You really need to use the loo. You're not just going to pee your pants. You're gonna hold it and wait.
Yeah, you're going to be uncomfortable for 10 minutes.
Yeah, exactly.
It's that realization that it's part of the journey. And especially if you look at it from a trading point of view, being in drawdown sucks. Just straight up, it sucks. Why? Because you put certain amount of expectancy on every trade that you put in. Whether it's a swing trade and you're sitting there and you're looking at it and you're like, wow, this thing is like halfway to my stop loss. This is not cool. You're going to put some sort of value on every trade. But being in drawdown and having your trade idea invalidated and then seeing that red mark at the bottom, you're going to be like, oh man, that left a sour taste in my mouth. I'm not happy with that. Realize that you're going to have that. It's going to happen regardless. Why have an emotional attachment to it? It's unavoidable. You cannot win every trade. So get comfortable with the fact that you're going to lose trades.
Yeah, exactly.
But being comfortable with it is going to lead to you accepting it. You're not going to dwell on it all that much, because you're going to be like, it's part of the process. It's obviously not part of the process in the sense that you want to lose permanently. You don't want to lose permanently, but understand that no strategy is 100%, and it will never be 100%. So just
take me, for example, today.
Comfortable in that moment, and it tests your patience as well. It's like you want to get out of something because it's uncomfortable. You want to find the quickest exit to go, I don't know, go to the loo in the field or something, because you're uncomfortable right now in this car that you're driving. But just having 10 minutes of patience, you will get to relieve yourself at that place in 10 minutes.
Yeah, and it's actually a great practice as well to do this outside the trading. When a lot of people, especially with these stupid new technological enhancements, what is if anyone has ever studied marketing, what is the current trend in digital or social media marketing? Short form content. What counts as short form content?
Got an attention span, mate. It's instant gratification. I want it.
Yes.
Want it dopamine hit right now.
Yeah. So therefore, we're especially the younger generation, like not quite my brother's age, but like maybe 2 or 3 years younger than my brother. Like people from like maybe 2005 onwards, maybe 2007 onwards, who grew up around social media. Like it's like, in fact, probably from 2010 onwards is probably like the worst generation possible when it comes to technological advancements, because we're not quite at the stage yet where we know the damage it's doing to us. But we're still too young in the development to understand that it is doing damage. Like us older generation now, like myself, I'm probably one of the, like my brother's probably the last of the generation that understands we're old school still. Like we'd prefer to go out and play in the yard than, go and watch TV on our iPads. Whereas like same goes with your trading. We've got instant gratification. We go scroll through TikTok, we scroll through Instagram, short form content all the time. Boom, 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 boom. We're always getting a dopamine hit, and then it programs us without even realizing. Like you want to use the bathroom, for example. Rich used that example. Instead of waiting 10 miles for the next service station or 10 minutes for the next service station, you're going to pull over onto the hard shoulder and just relieve yourself on the hard shoulder instead of just waiting a little bit. And it's good to wait. So instead, like, oh, I'm starving, hungry now, wait for dinner. Oh, but dinner's in an hour's time. I'm going to snack now. It's like instant gratification. Like a lot of people really struggle with this self-discipline. And
people struggle with patience.
And patience. Yeah, absolutely. So like start challenging yourself outside of your trading. Or to one-up it, look at yourself outside of trading. Ask yourself, if I was hungry, do I go eat? And some people would be like, yeah, of course, man. Of course I go eat. That's the luxury about doing what I'm doing. I'm not in a less economically developed country. I can afford food, so I'm going to eat when I'm hungry. That's a great fortune to have, but a very bad mindset to have. Just because you have it available doesn't mean you should use it. You should still wait.
Yeah, true.
If you're hungry now and you've already had breakfast an hour ago and you've got 2 hours for dinner, don't graze, wait for dinner or wait for your lunch. And if you ask yourself like, oh, do I wait for my lunch? No, I indulge, I eat food before my lunch. Then look at yourself in your trading and go, is there a correlation with what I'm doing outside of my trading? And is there a correlation with that inside of my trading? And I can almost guarantee there will be a monster correlation. Am I not waiting for my setup? Am I not being as patient and waiting for that entry criteria? A bit like I'm not waiting for that entry criteria to the lunch. Am I going straight in and eating food now, and then I'm also eating food later, but I'm not that hungry, so I'm just gorging, and therefore I'm gaining weight, and I'm not as healthy, and I'm feeling lazy. There's negative impacts on that health side of things. No different to like there is on your trading. The entry is lower, but it's pulled back slightly. So let's take EU, for example, on this. Let's move over onto EU, onto the... Should we go into the 15-minute time frame? There we go. Let's go into the 15-minute time frame. So, guys, let's go into the 5. I think there's a better example on the 5. So we got the 5-minute time frame here on EU. Here is your breakfast. Here's your breakfast. Yeah, you could have bought here. Boom, you rode it all the way up here. Yay, I've just eaten breakfast. And then it's consolidating here. Oh, it's pulled back to here. There we go. Oh, I'm hungry for another trade. And then you think, okay, yeah, there's a nice opportunity here. You're not patient. You're like, oh, but I'd like to see an entry criteria down here. But I'm hungry for that trade now. I want to get in it now. Boom, you enter into this trade as a buy. You're now sitting in all this drawdown before remotely coming back to break even. You're going to sit through all this drawdown here when in real terms, you could have entered here at lunchtime when you should have had your lunch. And then you would have had no drawdown, less stress, and you could have gone rode it all the way up to the top. It's about challenging yourself and asking yourself, are you patient? And then are you patient in trading? Are you patient in outside of trading, like in your everyday life? And see if you can align the both of them. And if you can... Oh, what's happened here? Where am I? If you can align the both of them... There we go. If you can align the both of them, then congratulations, you're one step closer to your goals. That is the biggest thing I can recommend, because it is a massive, massive correlation between health and like discipline outside of trading and your health and discipline inside of your trading.
Yeah, no, I agree to that mostly. But it's neither here nor there. I think the big issue that a lot of people do struggle with is the idea that we want instant gratification. We are also taught that instant gratification is acceptable. Because it's the driving force. It's a driving force behind content at the moment is quick, fast, because we need you to move on to the next thing, because there's so much of it. There's so much information. Can you imagine when you were a younger bloke and you wanted to know something? You would go to, I don't know, a very knowledgeable person in your area, like an uncle or a father or a mother or whatever figure, or you would go to a library and you would go and get the information from the library. You don't do that anymore because...
No, you don't. You got the internet. Yeah. Mate, a fantastic example.
All of the information is right here.
Yeah. Goes to show how old school I am. I was saying about the World Cup earlier, the football, the rugby and the football World Cup. I thought, my brother follows football. I'll go ask my brother. And I thought, well, hang on a minute. I've actually got a computer right here. I'll just Google it.
That's why I made the joke of the chat GPT. That was like, isn't that chat?
Yeah, exactly. Yeah. Absolutely.
There's a lot of argument around this, but the whole use of stuff like the internet, like doing a Google search quickly, has completely destroyed the debate. The debate scene, let's put it like that. The backyard debate between you and another person, and you're discussing 2 points. It's completely killed that off, because you can literally just go, oh no, okay, the answer is this. It's that idea that it's broken up that yearning to learn.
Yeah, that's why I love
because it's so accessible. And it's the same with trading as well. Instead of you going and doing the back testing, you would much rather go and watch a video on YouTube and have that person on YouTube tell you how you should be trading. So all the information is available, but it's not all available at the same place.
Yeah.
So you have to go and do a bit of digging and a bit of searching. You have to ask certain people certain things, and not all of the information is immediately available, but it is readily available. You can get to it. It's all accessed for free. And on top of that, you will see it play out in people's patience. You'll see it play out in their trading. There's somebody that mentioned, I can't remember who it was, that said that swing trading is a lot easier. Oh yes, it was Zebak, the midget. Cool name. Said swing trading is so much
Dude, I was like, bro, you're gonna get yourself cancelled. You can't call people that anymore.
Yeah.
But it's actually his name. No, that's a sick name. That's
why for him, he says swing trading is easier. For you, it's easy, but for somebody who has zero patience, swing trading is going to be impossible. Because they would never allow that trade to really play out, because they're like, oh, I need to close this trade now. So it's not just simply it's easier. It's easier for this one person because it falls a line way more easily with their personality than it does against their personality.
Yeah,
and it's just unfortunate. Say again.
I was going to say, so in theory, you think that because of what is readily available to us right now, a lot of people think that they can get into trading like that super easily, super fast.
That's exactly what I'm saying.
Yeah. However, you've almost got to have that old school hunger to learn more, because you've got to go digging. So trading, if you want to learn trading for free, you'll forever have to have that old fashioned way of going to the library. That going and hunting and digging for the information. To try and learn that trading, and a lot of people don't want to do that, and that's why I think so many youngsters struggle with that. Because I think the older generation, you'll find that most of the successful or more successful traders that we speak to at the moment are in their 30s, 40s, 50s, and 60s, even 70s, is because when they do, they learn trading quicker, because they don't want to Google it and find out the answer now. They want to locate the answer, dig for the answer, and learn themselves, and be like, right, okay, I found this information here, let me go find more information on this. They've got a very old school way of looking about it. My dad, his mental arithmetic is superior, it's almost AI, because he refuses to use a calculator. He uses pen and paper if he struggles. That's his calculator. You don't get that anymore, because even me now, my mental arithmetic, it goes the same with spelling. Sometimes my spelling it can be quite bad sometimes, because autocorrect, and I'm like, Oh wait, I've actually forgotten how to spell that. Even though it's a basic word, but it's because I don't write it down and use my own brain enough. We rely so heavily on technology. Younger generations do the same, rely so heavily on hoping the information is going to be there instantly for them, when it's not.
You're not going to get away from it.
No,
you're not going to get away from technology because we are in a technological age. We're moving forward with technology. It's the reliance entirely on technology.
That it is scary.
Is a little bit more of a hindrance than it's a help. You still need. That's why if you look at somebody that does EA bot trading, the bot trading goes through cycles. It's going to be profitable for X amount of time, and then it kind of like loses its like profitability over a section or whatnot, because it does not account for the human factor. It does not account for the intuition or for the visual aspects that you can add. It's just code. This code is going to say, if this, then this, done. So you still need to be. There's still place for psychology. There's still place for the human factor within trading. It's just you need to be sure to be willing to spend the time to learn this craft that you're a part of. And you will see it with people in chat, where people will rock up and they'll be like, gold. I want gold. Tell me about gold now. Yes, gold. Yes. We've heard you. Yeah, but gold. A person that is like that is really going to struggle. Because there's so much value that we're busy trying to provide, and it's not going to be necessarily to your tastes. It's not going to be, the value is not necessarily going to be what William is looking for right now, but you're going to find this thing that we're talking about right now at some point during your journey. And it's realizing that I'm foregoing all of that hard knowledge for the I want it right now. I'm unwilling to be patient. I'm unwilling to wait. I'm unwilling to really do the in-depth. I want that short-form content. I want the answer, and I want it now.
Think about it like university, man. Are you going to go to university, study medicine, realize that you've got to be in there for like 7 years, I think it is, 7 years to study medicine, and then you come out as a basic doctor? Yeah, you're not a surgeon at that point. You're still just a standard doctor. Then you got to go do like another 4 years in your specialization in surgery, and then maybe like a further 2 years in your specialization of the surgery. You know, and you think you go to university, you're not going to see someone go to the lecturer, open heart surgery now, come on, open heart surgery. When can I do this? Screw it, get out of the way. Right, scalpel, I'm going to go jump straight into an open heart surgery. No! You've got to take years and years of learning and discipline and patience, and more learning and discipline and patience, and more learning and discipline and patience. And then you end up being an open heart surgeon on a fantastic, substantial amount of money. Same goes with trading. Okay, you know, the different respects for the, heart surgeon, of course. But it's the theory. It's the same approach. Exactly. Anything worth doing is going to be difficult. I think I mentioned this a few times. My dad had a T-shirt from when he was doing triathlons back years ago, and I still have that T-shirt to this day. You know, he used to complete a triathlon, got a T-shirt, and he used to give one to me or my brother, depending on how many he was doing. So we used to take turns on who gets the T-shirt. I've still got a T-shirt because it meant a lot, because I looked at it and it said, nothing worth doing is easy. And I thought to myself, yeah, fair, because if it's easy, well, it's not worth doing. And it sounds so stupid because it's so simple, but it is also so true. You know, if you're gonna becoming an accountant isn't easy. Becoming a doctor isn't easy. Becoming a stockbroker, doing any decent degree worth doing, and that's going to take a few years of university and studying and discipline and head in the books and isolating yourself from all social groups just to make sure you're going to pass the exam with flying colors. It'll be worth it in the end, but you're still not guaranteed to get that job. You can come out of university as a whatever, a degree in whatever discipline. You're still not guaranteed to get a job. Same with trading. You can put in all the work and study and do everything and become a great theoretical trader,
but still not make any money. Still be unprofitable.
Still not make any money. You may still be unprofitable.
It is one of those.
It does happen. Yeah, 100%. You know,
the thing is, like, if you just look at that like expectancy, I expect this outcome based on this input. That's a problem already, because you're saying that this is equal to that. The amount of effort that I put in is equal to the result, which it isn't. It's like, if you take all, how many billion people are we now? Like close to 9 billion people, and you have all of them flick a coin and either call heads or tails. And every time somebody says, you put everybody together, 1 versus 1, all 9 billion people. Well, let's make it 8 billion because mathematics. Anyway,
maths and that.
Yeah, 8 billion people. Right after that, if myself and Will are in a bracket, I flip a coin, I say heads, and Will says tails. He takes the opposite side, and it lands tails. Will goes forward. 4 billion people would be wrong. 4 billion people would be right. Okay, I put it over here, but it's 4 billion would be right, 4 billion would be wrong. And if you did that scenario over and over and over and over, you would have, at the end of the day, a singular person that got all how many coin flips correct. And you would have 8 billion people minus 1 that eventually got it wrong. Some people got it wrong in the first round, some people got it wrong in the 7th round, and so on and so forth. It's the idea that there's a level, it's a bracketing. It's a sense of it. Sometimes it doesn't matter what you put in, the result is not necessarily going to be in line with what you expect. And you think, oh, it's unfair. It's unfair that I'm part of this bracket that got it wrong. Just understand that it happens all the time to a lot of other people. You're focusing on the now, and you're only focusing on the you, and you're not focusing on the people around you, as an example. So you go to university, you put in the effort, you put in the time, I'm smart, I'm intelligent, I'm doing all of the work, I'm not getting the outcome. Just understand that you're in part of that bracket that got that coin flip wrong in that moment. That's luck. That's the idea of luck. So
it's just basic probabilities.
It is probabilities. That's why
and life is the same.
That's why I'm saying you should not think of it in the sense of I've put in effort, ergo I deserve outcome.
Yeah, 100%. Yeah,
it's the idea that you need to be willing to accept the outcome for what it is that you got, and not think of it in the sense of, well, but I did put in the effort.
Yeah,
that's that. Let's go. I don't know what, I don't want to call it entitlement, but like it's the idea that you feel entitled to the outcome based on the input that you put in.
Dude, if we all walked around like that, me and you should be multi-billionaires by now, with the amount of work and stress and hard work and discipline and sacrifices that we've made. We should be multi-millionaires.
I mean, if hard work was the thing that led to you becoming the richest person, then all of your blue-collar people would be richer than the white-collar people.
100%. Yeah, definitely.
If you were just purely working on the idea of physical input, physical hard work. Are you saying that the blue-collar person did not work nearly as hard as the white-collar person, and that's why this white-collar person is more rich? No.
Exactly that. Yeah, exactly that. And unfortunately, this is the real world, you know? So it's not a case of I work hard, I do this, I deserve that. And it's fantastic what you said about it's a probabilities game, and it's being okay with the fact that, you know, it may not happen. You know, you still got to put in the work. You know, like my outlook on life is, look, I'm doing this because I want this. Not that I deserve this.
Yes, that's kind of like what I'm like. Yeah. It's that entitlement. It's
exactly, I want this. And the difference between I want and I deserve is my hunger and drive to achieve is different to my entitlement that I deserve. You know, I'm hungry and I'm not going to stop until I achieve this. And that's different because I'm not going to sit back and go, well, I deserve this, so meh. Because then that's going to put, like you said, an expectation on it. Now, if I was to look at it and think, yeah, okay, I'm going to work for this, and instead of I deserve it, I'm going to put myself in the most highly probable situation to achieve what I want to achieve. For example, I'm not going to go hang out with a bunch of people drinking, doing drugs, and breaking the law. You know, if I want to become a police officer, I'm hanging out with the wrong people. So the probabilities of me being able to become a police officer decrease due to the fact that I'm hanging out with the wrong type of crowd that would allow that to happen. For example,
I think that's what I was trying to kind of like allude to.
Yeah, 100%. And I think that's, and this is, and the reason I took it away from trading is to show you that it's not just trading that's, like everyone says, oh yeah, trading's gambling. Then they realize it's not. Instead of saying it's not gambling, they go, that's a probabilities game. Oh, trading's probabilities. Okay, life. Let's take away from trading for a second so we can go back into it. Take it away from trading. Life, everything you do in life is based on probabilities. You know, what are the like? I will always say, I don't want to go out and put myself in harm's way and go out and, you know, make a fool of myself. You know, I don't want to be ill the next day. I don't want to have a hangover or a headache, and I don't want to potentially get in trouble if I'm out. Therefore, I don't go. I minimize the amount of time I go out partying. You know, so therefore, if I go out into a party environment where I go clubbing, drinking too much, misbehaving, the probabilities of me potentially getting in trouble, getting hurt, or certainly waking up with a bad head in the morning from a hangover or whatever, it increases in probability. So therefore, I'm going to avoid that probability by staying at home. Yeah, you reduce your exposure to a negative outcome. And that is what we're doing in trading as well. We're saying, right, okay, how can I improve my probabilities of becoming a profitable trader? What do I need to do outside of trading? What do I need to do inside of trading? And who do I need to be hanging out with? And the answer to that is the 5ers. Bosh, mic drop, I'm off.
Yeah, like there's probably a lot of people in chat right now that's probably like, oh yeah, we've heard this. This is just a rinse and repeat. This is boring. Yeah. Get back to the charts. Fair. Just realize that this is the kind of stuff that we think about every single day, not just the idea of, ooh, my strategy, ooh, gold is going down, ooh, resistance point, ooh, order blocks. It's part and parcel of the whole process, and it's the humanizing factor of trading.
Yeah, no, exactly. Like so many people will think, these profitable traders, that's all they do is think about money and think about their strategy and think about trading. No, we don't. That's probably 30% of what we think about. 10% is probably earning the money. 20% is probably, okay, maybe 30% is the money. 30% is the strategy. 30% strategy, 10% money, and then probably like 60% just what we do is daily habits. That maths did add up, right? Yeah, it was 60-40, right?
Sorry, I zoned out for like a second when you said it's like this percentage, this percentage. I was like, huh? Only for a second, man.
I could have done with your help there, mate. I hope my maths was right, guys. But that's probably the percentage of what we think.
I can't be your chat GPT for you all the time, Will. Sometimes you need to be your own dad with a pen and paper and write it down.
Quick maths. Yeah, no, I'm joking. It is correct maths. 60% of the time is daily habits, 30% of the time is strategy, and then 10% of the time is the money we earn.
Yeah, there was some... Dubukor is asking, where is Quasiman? So Quasiman is Victor, also known as the Masked Trader. He will probably be here. That was a bit of a tongue twister. Very soon. So just stick around. He's going to be around very soon. There was another question that I saw that was kind of interesting. What is an order block and Figma? So if you stick around, Abdul, you'll get to hear from the order block master himself, which is Victor, the Masked Trader. He's the Quasi man. He will tell you everything that you need to know about what an order block is. So just stick around for that.
Yeah.
Very soon. It's already like 3 o'clock here by me, and it's usually around about this time that he starts pitching up.
Yeah. Victor, I love you, but can you hurry up? I've done 3.5 hours of streaming today. Straight up, like, no
We'll
stop.
have a bit of patience, my friend. A bit of patience.
No, I need a wee now. I don't actually. I've needed a wee for the past probably half hour.
So instead of you going and getting your, you had the opportunity to go and get your mail, you could have literally just...
I could have had a wee at the same time, but I felt bad for like, pushing off. I could literally go to mail.
Like able to talk amongst ourselves. I mean, we're not children.
I felt bad. I was like, yeah, blah, 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 blah. Bye, guys. I'm gone.
Catherine Pastor Camp is asking, what are you thinking about going short on EU? There is a decent double top forming on the 5-minute and a divergence on the RSI. Purely the idea, I would say if I were to take a short or something, it would be based on the idea of price action. We're no longer breaking higher. We're starting to show like downward confluence. If there's an opportunity for price to push higher, it fails and price confirms pushing lower. That's why I would go short if I wanted to go short. I wouldn't just go short because a divergence is forming and there's a double top. So in my case, yeah, two people using same concept can have different result. That's also a good question. We'll get to that one in a second.
Yeah, definitely. Well, me and Rich trade very similarly, but we have different outcomes, different examples of trades, different trades in general.
Yeah.
In fact, me and Rich
look for, we see the market in the same way almost, but we look for different things at different times.
Yeah, exactly. It's the same with me and Richard Wells. Richard Wells and I used to trade even more similar than me and Richard Butler. But again, we'd still have different results. We'd still actually enter the trade at different positions. Like me and Rich, I remember he said, well, I'm in a trade. I said, so am I. We hadn't seen each other's charts at this point. And I was like, he said, I'm going to guess where you traded from. I said, okay, I'm going to guess your entry. We guessed each other's entry. I think he was a pip out and I was 2 pips out. The entry difference was 1 pip. Like we were 1 pip away from each other's entry. I think I was like 2 pips too low and he was like 1 pip too high from my entry. That's how close we were in the difference in trades. But we still had different expectations, different TPs, different stop losses, different reasons for getting in the trade, but we still had very similar trades.
Well, if you were to look at EU now, when would you go short?
Probably if we had something along the lines of this. Let's draw this out. Because I probably wouldn't want to go short. And if I did go short, it would probably be an A setup, not an A plus setup. It would probably be around here somewhere. And the reason I wouldn't enter on a break and close trade is due to the fact that I think we're slightly counter trend trading right now. And I think we're wanting to move higher. However, we have got this double top here. We failed to create a new higher high. If anything, we actually put in a lower high. And we came into this area of consolidation here. Started moving down. We're pulling back ever so slightly. So this is also technically a higher high. A higher low, sorry.
Higher low, yeah.
Yeah, so if we can break and close under this low here, pull back. But I don't want to see it close. I don't want to see it tap into here. I want to see it close pretty perfectly in this zone. Pull back into maybe a consolidation zone if we can consolidate here for a little bit, then drop.
Just be aware, everybody, that within 30 minutes, within a half an hour, we're going to have unemployment claims, which is a red folder news.
Yeah, that's high impact.
So whatever reason you might have for wanting to go in a specific direction, always take into consideration that there is a market moving event happening in 30 minutes or so. Then for this question, why 2 people using the same concept can have different results? It's even if you use the same concepts, the approaches to that same concept is different. So a concept is just that, it's in concept. So there is, if you create anything, any strategy of any sort, there's going to be portions of that strategy that's going to inform your strategy as a whole. So a decision point for why I enter it and will entering it is different. So that's why you can have the same concepts but different results. It's
I could probably give
not
you an
just
example
the
using
entry, but also how you maintain that trade till closure is also going to be a different impact.
I think I could actually give you an example of this exact comment using your strategy. Again, look at Euro USD, for example. Now, using a drop-based drop, which is how Rich trades. Now, this is on the 5 minute, so using a 5 minute drop-based drop, we've got this big bearish engulfing candle here, pull back. Let's actually clear it up a little bit. Pull back, and then a drop. So, boom, there we go. We've got this drop here. Now, Rich, for example, may be okay just seeing this drop here. So he may have entered here on this candle close here, for example. However, for me, this I'd probably enter down here because I'd want to go off this drop-based drop, which would be again a further. There we go, just down here. So it's going to be a further entry down. So Rich would, in theory, get into a better trade than I would, or because I know that Rich likes to, you can be a little bit more. How do I call it? You can be a bit more confident with your confirmation than me because it's your strategy. So therefore, I've learned your concept. So for example, the creator of the concept is usually a little bit more confident and comfortable with that concept than the learner of the concept. So Rich may want to take this trade here. Again, bearish engulfing. And then you've got this base here. And then you've got another bearish engulfing here, which, boom, he then enters around this level for a bearish engulfing drop-based drop strategy. Now for me, it pulls back, creates a new base, and then I enter in a few more pips down at this level here after this bearish engulfing candle, after seeing the confirmation and a drop-based drop after a break and close below this low here. And why? Because maybe I'm a little bit more nervous on the drop-based drop strategy because it's not my concept. So therefore, I got to be careful on it. I got to keep an eye on it a little bit more. So our difference, exact same concept, except he's 2.5 pips above me.
Different approaches, different strokes for different folks. It's the idea.
Same strategy.
Same concept in same strategy concept, but different approach to the same concept.
Yeah, exactly that.
Hello, Pedro and Victor. How are you guys?
Yo, what's good, guys?
Oh, good, man.
Hello.
Hello.
Hello there.
Hi. You guys were saying you were trading the same strategy or the same trading idea?
No, Victor. So basically what we're saying is that we have a similar viewpoint on how the market moves, but our approach to our strategies and what it is that we look for as confirmation for entry points differ.
I see. So, okay, I see.
Yeah,
right.
we had
similar.
We had a common question in how come someone with the same strategy has a different outcome. So we're just giving an example of, because I know Rich's strategy, let me show you how I would trade Rich's strategy compared to how maybe Rich would trade Rich's strategy.
Yeah, that's also applies to Pedro and I. Pedro and I, we both trade Quasimodos, but we don't take the same trades. We have a different approach. I trade. Sometimes we do, yes. but Pedro is more flexible. He can take other parts of the Quasimodo, and I focus on just one shoulder. And Pedro sometimes goes to the head, to the other shoulder, to the arms, the palms. I only stick to the shoulder. The feet, yes.
Like it.
But it's basically we have the same concept. We are looking for the same thing. We are in the same direction. Just he trades, different entries, than I do, and same. You could say it's not the same strategy because the strategy is more specific as to the entry, specifies the entry and the exit as well. But it's the same concept, and in a way, the strategies are very, very similar.
Yeah, it's exactly. A different decision point. So throughout the whole strategy, from beginning to end, every portion of the strategy has a decision point. And even if you're looking at the same thing, or you might be using the same concepts to look at the same thing, there's a different decision point that you took. You split. So Pedro took this decision point, and you took the opposite one. So it's a nuanced way of approaching the exact same thing. And that's the same thing when it comes to any sort of trading strategy. It's nuanced specifically to the person following it, and that's why we have such differences. And we might argue, oh, this is how you should be looking at the market, and it's just like, well, that's how I'm looking at the market and how you are. Mm-hmm. So it's just it's those little nuanced differences.
Yes, yes, totally so.
Seen this comment here. Sorry, mate.
Go ahead.
Okay, just seen this comment here real quick. Appreciate Will being on the live from the get-go. Smash that like and subscribe. To thank him. Absolutely. Thank you very much for the appreciation, Rory. But yeah, absolutely, guys. I have been here for the past 3.5 hours straight up with only one break to go make myself another cup of coffee.
So, those are rookie numbers, mate.
Yeah, I need to get
rookie numbers.
Get these numbers up.
Are you
another 2 hours?
Are you trying to set a record, William?
Yeah, should I see how long I can stay on for? Should I just like a 24-hour stream? But guys, please leave a like on the video if you haven't already, and make sure you smash that subscribe button. Road to 100k is on foot, and it is on a go. We are 91.2. Let's see if we can get to 100k by the end of December, start of Jan. That would be absolutely insane. But unfortunately, my time has come. Has anyone seen Kung Fu Panda? No.
Your time has not come yet. You're so young.
My time has come to leave you.
I see. I see.
I must love you all and leave you. I've got to now go eat some food and use the lavatory. Otherwise, I'm going to implode. So, guys, thank you very much for joining. I hope you enjoyed what we had to say today. I hope you enjoyed watching me lose some money on stream and make a little bit back. So, guys, thank you very much for joining. I shall leave you in the very capable, good-looking hands of Pedro and Victor. They made it sound like I think their hands are good looking, actually, the more I think about that. The hands of the very good looking. There we go. That's better grammar. The hands of the very good looking Pedro and Victor. Thank you very much, guys. And I'll see you all. Oh, no, I'll see you all next week. Have a fantastic weekend. Stay safe, stay away from the charts, and take some time to go touch some grass, as Richard Butler says. Thank you very much, guys. Take care.
Thank you, William, and thank you for all the details. We enjoy all the details, the reasons why you need to go now and not 5 minutes from now. Don't worry, we will keep the details secret. Your secret is safe with us.
You guys should see the private chat in the background. Victor and Pedro, how have you guys been? How's the trading day been treating you?
Let's answer in the alphabetical order. Go ahead, Pedro.
It's true, that's me first. I've been quiet, to be honest. I've been a bit busy. These last couple of days, it's been a bit busy with work with the 5ers. We are expanding the Portuguese community, and that has required a little bit of my time, and I've been missing a few chances. Yesterday, actually, it was a rookie mistake. I was about to get short on the euro yen. However, I had a filter because of the spread, and because of the spread, I ended up not taking, or my expert advisor ended up not activating the order, which was a bit upsetting when I saw it afterwards. It happened. Aside from that, I've been quiet. Not really much activity. I'm potentially looking for reversals on the pound and euro today. I think they've been moving a little bit too much to the upside, so I think we're going to have a little bit of a correction. Let's see if it is now or not. And I'm also tracking the US indices to see if there's going to be an opportunity to short. So those are some of the pairs on my radar. The N pairs, they are gone, like the trade on euro yen that I was looking for. That's gone. That was yesterday. That was basically in here, and that's how beautiful this was. And for anyone that's talking about Quasimodos, that's kind of one of the Quasimodos. It was exactly with this move in there, and that was literally a rookie mistake, having such a small filter for the spread on the euro yen.
How much was it?
It was virtual. I think the euro yen, because this was actually on my main account, and then it will be copy trading for everyone else. So because it didn't execute it on that account, it didn't.
Everyone else? You mean every other account?
Yes, every other account. Yeah, it was quite low. I think it was
just making it
0.4 or 0.5 the pips, and in the reality, I think the pips in the moment was maybe 0.7. But I didn't really see it in the moment. I saw it afterwards. It happened when price was already down. So I placed a sell limit. A sell limit, not exact sell limit, is the indicator, the order. So basically, I have an indicator that to execute the trade, it triggers the trade, but the trade only gets activated when price comes back. Okay, so if price continues to go up, I keep having a better entry. Like basically, I have a small rectangle that keeps tracking price, and only when it comes down, I get filled. But in this case, when it went down, I was supposed to get filled, and I never got filled. Kind of the order was disappeared. And I saw it when price was already in here, which was way after that.
Do you enter? Does it work? Do you have a stop order that keeps being modified to the trailing, so to speak? A stop order, when it comes back, it gets triggered.
Yeah, I have to admit that sometimes, because I'm a little bit perfectionist, sometimes I do put that level in the where I want to get filled. So sometimes price touch it and then goes without really going above the small rectangle. So I'm starting to put that rectangle. Let's imagine that I had a small rectangle in here, so price needs to go at least above this upper edge, and only afterwards it would activate my order. A little bit worse. Yes, I already got sometimes frustrated because I was way too to the perfection where I wanted price to react, and then I put rectangle there, so never really got filled. But some other times I actually end up having really great risk reward of the trade, because actually price kind of with a spike, instead of me entering in here, I end up actually having the entry in here and created a much better risk reward of the trade, because basically the same percentage of the account goes, if I'm risking 1%, for example, I keep risking just 1% in here, but now it's with much better risk reward overall.
Higher
Yeah, higher risk reward. In this case, this was just my mistake, unfortunately. It would have been a great trade. The reason for this trade, it was, maybe I can just explain a little bit.
Before you explain, Pedro,
sorry.
I am going to love to leave you guys. Just wanted to quickly hear how everybody was doing before I just jump off, like a very rude William, not really finding out how you guys are and then just leaving for his own reasons. I'm joking.
Thank you. Have a great weekend. Have a beautiful, beautiful weekend, Richard. Any big plans for the weekend?
Any new what?
Any big plans for the weekend?
Oh, big plans for the weekend. What is happening this weekend? This weekend, there is nothing happening. I am going to just do typical household chores, like a good husband. And yes, I'm going to do household chores. just relax. You guys must have a great Thursday further, and enjoy your weekend as well. And I'll see you all on Monday.
I like your shirt, by the way, Richard.
Me too.
I like it.
This one.
Yes, It's a hoodie. It looks like a hoodie, right? It is.
A hoodie, indeed.
Yeah. I like it.
It's a bit wet here at the moment, and I'm trying not to get sick. I have been struggling with a bit of like upper respiratory stuff at the moment, so I don't want to, play with that right now.
Yeah.
Thank you very much. All right, guys, I'm gonna pop out now. Bye.
Bye. See you. Pedro, you were talking about the EA, and that automatically had my attention, and that's why I started asking you about it. You mentioned about if you don't mind me asking and digging deeper into your proprietary secrets.
It's not secrets, actually. Everyone can get it. This one is paid for. It's been using for a while, but it's not mine. I'm using it, but it's not mine.
But is it your? Did I understand correctly that you manually place an object, a square, a rectangle in this case, and it trades on based on the rectangle you place, so you have to manually move it. So
automatically move it.
Oh, okay. I'm not so familiar.
So imagine that I. So basically, the way it works is I draw a rectangle, and at the base of the rectangle, I can for example, activate my order, or I can place it kind of a small rectangle in here, which then does it everything automatically, where the order only gets filled if it goes actually above the upper edge of this rectangle. It activates the rectangle, okay? And then if price by any chance keeps on going up, 1 second, this one.
The trigger is on the lower border of the rectangle.
No, the price just keeps on going up. It keeps on basically the rectangle keeps tracking or keeps following the higher price visible. And for example, if the price never does any retrace, imagine that you are turning the news. Okay, imagine it's a new event and price just spikes, and then there's this. I end up never getting into the trade because there was never this small movement on the trade. So as soon as price breaks this rectangle that I want to trade from, the order is cancelled. I'm never even get into the trade in this case. So this can avoid losses that price just goes like this, and I don't even get filled. On the other side, if price keeps on going a little bit up and then finally reverses, then in this case I'll be getting filled in here, which can give me a slightly better risk reward or better entry in this case of my, instead of entering in here, I enter in there a few pips higher than, because it reduces the space towards my stop loss, which end up being with a better risk reward overall. Like it kind of, for example, I think my entry was in here, and in theory I think I should have been filled somewhere in here, just a few pips higher. But in this case, because it also has some kind of filters, I even forget where the filter was, because now I was just used to use the application that we use on MT5, where you can see straight away where the filter of the spread is, like the one that we have on MT5 that we always promoting here. They also have a spread filter and slippage filter as well. It end up like being like that. But this is really nice. It's really useful. It's really useful.
The spread filter is meant as to keep you out of the market when either there's huge volatility, when there's news, because the spread will widen and will give you not a great entry, because you're getting in at not a very beneficial moment in time where the spread is much wider. Also, if you leave it overnight, rollover, certain pairs, they widen by a lot. 20 pips, 30 pips, sometimes, like pound kiwi and some others. However, Pedro, have you thought about tracking the pair in question for, let's say, a day or maybe a week, and get a reading of what is the maximum under normal trading conditions, meaning not of the two examples that I mentioned, not including those two examples, but any other time that normally you would be entering into the trade. So meaning the rest of the week, excluding the high impact moments for that currency and rollover. Have you thought about perhaps implementing some kind of an indicator, or an indicator that will print the average, the maximum per day or per hour of the spread, so you can have the filter just at that maximum, or maybe a pipette or two above that, so you make sure that under normal market conditions the filter will work just perfectly. It will not be in the way and excluding good trades, but it will still be there in place for whenever the market actually expands the spread, that it protects you. Have you thought about a filtering optimization?
That could be a good idea. However, to be honest, I didn't even want to be that specific. I literally just forget that I had this filter so tight on the euro yen. Maybe I haven't opened a trade on euro yen for a while, and it just happened. I think I had it. In general, I try to have at least one pip, for example, especially on the euro dollar or dollar yen or something like that, where usually it's like 0.1 pips maximum, where usually have on spread. But in this case, it was actually really tight, which I didn't really realize. I prefer to have it actually a little bit wider, just to make sure actually I'm getting filled, because otherwise, this happens, and it was a bit annoying, but it is what it is. But that would be a good idea, try to measure. But I don't think I need to be so specific and try to actually track the spread during the day of every single every single pair. But that was a good idea. What you mentioned. I don't know if I can share or not. Like, this is not mine, but it's something that I'm using, like the actually the tool that I'm using. You guys can look for yourselves. I don't know if I can share it or not. Their website in here. Basically waiting for your approval, Victor. I don't know if you know if I can either.
I mean, if it's something that's going to help other traders, then yes, you can do it. And just mention that we're not affiliated. It's not, not. I mean, if we do that with, we mention other services like TradeZella, and we are not particularly affiliated to them, but we know that it helps others. And sometimes they're free. A lot of the things that we suggest are free. Other times there is a fee, and it is what it is. And as long as you mention that in advance, that we're not affiliated.
We're not affiliate.
So
you cannot even be affiliate, because the way you buy this is actually from the MetaTrader shop, basically
marketplace.
The market from the MetaTrader, and I don't think you can even create. But this is the one. If anyone wants to take a look at it, like Trading Box, it's quite complex. I don't even know where it is now, the one that I used, or the specification of the one I use, but it's in here. So if you guys want to take a look at it, it's called Trading Box. It has many things, even for automatations of identify Quasimodos, order box, whatever it may be. You can customize this as much as you want. And there's different things of the way you can customize your trading. Almost trying to make it a little bit automatized without really being 100% automatized. But you can set up some lines. If price breaks this line, it activates a rectangle and stuff like that. Or you can cancel the order as well, which is quite useful, especially if you are not at your desk all the time.
Yeah, I don't know about it, and I didn't know about it, but I'm interested, because there are always things that we can still improve, right? We're a one-man show or a one-man band, and we don't know what we don't know. There might be tools out there that might help us, either full automation or full automation, or that's not full, semi-automated, where you can do less and produce more.
Yeah, that's true.
I like it.
Yeah.
We have one question from Peter, our great friend Peter Kiefshaw. That's the way to pronounce your last name. Usually I only say Peter because it's much easier, but I like a challenge. I like a little challenge there. So let's take a look at this one. It says, hey, Victor, we've noticed the euro dollar and pound dollar breaking bullish structures. He meant actually bearish structures, and continuing upward. I'm connected with Peter, right? So I know when he says something, he means the opposite. So he just sent me a message afterwards in the chat. You can see it. When the market flips a structure like this, what nuances or criteria do you use to trade flipped structure? Good question. Great one. One, you're acknowledging the concept of flipped structures, which is a real, actionable, profitable, or useful concept to use. The market will react, especially on the first retest after breaking a structure, come back, and let's say it's a bearish structure. Let me switch to my screen so you guys know what I'm talking about. We have on, this is the daily, and this is a bearish structure, so obviously on the daily. Once it breaks it on the daily, so we have to wait the close on the daily. Beyond it, a lot of the times you will see, even though this was a bearish structure, let me eliminate these. There we go, and that one as well. Thank you. All right, so the bearish structures, once a structure is broken, a lot of the time, not always, but a lot of the times you will see the market come back to retest, and sometimes it only tests, just touches the upper border and then reacts. And when you see that, to me, that's the confirmation that these structures are being watched and are being traded as flipped structure. So it is a real thing, and it is something very, very useful. Other times it comes back and interacts much more with the same with the same order block, sometimes even coming back and squeeze it on the lower side before continuing. All of them are useful. To be fair, Peter, I don't trade them in the main strategy. My main strategy tells me, the one that I share with you guys, and you, Peter, I've noticed you know quite well how I trade by now. I don't use in this main strategy, which is very rule-based, very specific. Flipped structures are not a tradable structure. Specifically for the trade, the main strategy that I share with you guys all the time. You will see that I will leave these structures that are already broken for the exact same reason that they are, a lot of the times they are respected, they're retested after the break. But it's if I trade it, it's using a different strategy. Maybe I'm gonna go lower time frame and use that as one of the multiple confluences that I would have to scalp the market. But it will not be based on the main strategy. The main strategy only has two structures that is being traded. One is the fresh order block and the entry order block on the quasi. That's it. And as you can see, the definition that I just gave, none of them includes a flipped structure. But I know, as you do, as many others out there, that these flipped structures is a real thing, and that's something you want to know about it. So thank you for your question. So I don't have any nuances or criteria that I use to trade them on the main strategy because I don't trade it. What I do, if I use it outside of the main strategy, I would want to, I want it to, let me put it again, because I would want it to be, one thing is, it needs to be broken in the right time frame. That means a weekly will not be broken until the weekly closes. So if it's just a wick going up, I know that in the period that it is above the structure, it doesn't look like a wick only. The body is also there. But if it comes back, as long as it hasn't closed above it, I'm still going to consider that the structure is still valid and tradable. My entry needs to be within the structure though, not outside. But the other nuances, it needs to break it in the correct relevant time frame. That's one thing. And two, I only use the first retest for the if I use it in another strategy, it's only going to be the first retest. That's it on the first retest on the right time frame. So it could be that the market comes back to that area within 1 day, because since it is a daily, that will be just one candle, right? So within one candle, one retest. Once it goes away from the level, then I consider that retest to have been completed. Within that one daily candle, you might see multiple times price reacting off of that line, that border, and I will take maybe not all of them, but I could take multiple trades on the line, but only within the daily, because the structure is the daily. You need to one idea that I keep on, one principle that I keep applying and has helped me a lot is knowing what time frame the structure is and applying everything that is related to the structure to the same time frame. That means that the invalidation, the retest, and everything needs to be bound by that time frame, meaning the retest needs to happen within the first retest within one candle and things like that. So by that I mean not the number of fresh candles since its creation, but I mean the actual movement going away, the reaction. If it happens within the first candle that already moves away from it, that means that I will then consider that to have been the first retest, and I will not trade it again. Hopefully that explains it, and if not, let me know. I'll elaborate on that answer a little bit more. And we have, let's take a look on the time frames. We have a weekly order block being retested. Not too weird that this is the pound dollar. Not too weird that the market is pulling back a little bit. It's not coincidence. It is the actually. This is where the order block is. And why is that like that? There's a little difference there. So yes, this is the order block that the market came back, and it is within within 10 bars since its creation. So it is fresh. If that is the line that the criteria that you're using, as I said many times, 10 is where just about any number starts to. Most strategies will start to not perform as well anymore. But there are some strategies that even 10 is a little bit too much. You get better results if you use a freshness definition that is less than 10. But 10 is good, and if in general, and it's still within 10. We have a fresh order block on the weekly that is being retested. If you go to the daily time frame, we do have a order block which is not fresh. You can see how much market has been before coming back to that area. So it is not part of a fresh order block. And is it part of a quasi? It is not, because even if you look at the quasi, we have multiple quasis, right? We have if you go back, you can see that there is a bigger quasi. I prefer to be trading, if I had to choose, I would trade the bigger one. But if I had to choose, but if the structures, the inner quasis are big enough, and this one is big enough in my opinion, you can trade the inner quasi as well, which is one within the structure of the one that I just shown you, the biggest one. The biggest one is the external quasi, at least in this time frame. Considering the period of time that we're watching right now, and this would be the inner quasi, and you can see that the 50% retracement, this order block, and that's why it's not called a possible entry order block, but just a regular one. And a regular order block is only tradable, at least in my world, if it is fresh, and this isn't fresh. So I know it's there. I can use it for other strategies. I can use it for scalps in other things, but not on my main strategy. So there is a supply area there on the daily time frame, but it's not something I can use. We have come to the weekly order block. So let's go to any other structure, not any other structure, the next step in time frames. And I see a bearish order block on the H4 that has been retested, and it seems like it is doing exactly what we expect of these order blocks when they are being retested. It did go with a squeeze, and it seems, so we still have 23 minutes to go, so this can still change, but you can see how the order block is seeming to be doing its job. We'll have to wait for the actual conclusion on that reaction. And if I go to the H2, there isn't a reason for me to take a short here. And if I go to the H1 as well, there isn't a reason either. So I don't have alignment. There's only have an H4, no alignment. That means I'm not going to be trading this short. There is a daily supply area that is not tradable to me, can't give me a signal. The weekly is, not doing anything yet. You have to wait for that to have alignment on the daily. The daily doesn't have alignment, so really there isn't anything for me to trade. And actually, if you think about it, do you want to be going short this move? Look at that. This is a lot of bullish momentum, and yes, this may look like it's gonna top, and maybe it's gonna have a push down. But that's just a matter of time that the whatever causes this bullish impulse is going to kick back again, and you're going to have a continuation most likely, right? That's what I'm expecting, or that's what price action is telling me. So yes, you could have a pullback, but that would be something likely to be temporary because of this. This is where the impulses are, and usually that's it's just a matter of time. Impulse, consolidation, impulse again, right? That's what the market does most of the time. Let's take a look at euro dollar. Let me check the chat, because I have the sometimes I don't check the chat. You guys are having great. It's all good? Okay. So let me continue here. So we have on EU. Let's do EU from the top down, monthly time frame. I'm gonna say it quite quickly, although I tend to talk quickly already. But we do have a monthly structure here to the left, which is part of a much bigger quasi, right? So you have the left shoulder, the neckline, and the head right there, and the expansion or the expansion of the order, the quasi is quite huge. and it left us with two areas. One is this bigger order block, which we haven't reached yet, and with the second one is this little smaller, I say little, but it's a monthly structure, so it's still about 100 pips. And we had the first reaction, beautiful reaction here. You see the big candle reacting to that order block, but you also can see that it wasn't able to negate the bigger first, the impulsive move. So it made its point. There is a structure there that the market is reacting to, but sellers didn't really take over. Here they did. You can see the big upper wick, the closing of that engulfing creates that order block, and now we are seemingly going back to retest that. So that's very, very interesting, because if price comes back to this order block on the monthly time frame, I'd be very keen to look if we can find a short there for the continuation, the follow-through movement of the reaction on this monthly time frame. So that would be something nice to wait for, monthly signal. Nothing else besides that on the monthly. Hold on, I need a throat pit stop. Yes, so here we go again. As you can see, I'm competing against Max Verstappen. See if I can win the championship in the next upcoming race. No, I'm just kidding. I don't even know when the race is. All right, so we do have a on a weekly time frame. We can still see that the structure is still intact in terms of market structure, even though we had a beautiful technical reaction on the monthly time frame, this being the weekly. We can clearly see that the level, the market structure level to be broken is below us, way below us at 1.1390, give or take a few pips. That hasn't been reached yet. So in principle, right, all of this is just a reaction on the monthly. Hasn't really broken any structural low on the weekly. So keep that in mind. If the market comes back and give us that opportunity to look for that monthly sell signal, don't marry the trade idea, because market structure hasn't broken yet. It is, the flip side you should be ready for the flip side, for the continuation as well, because the market structure needs to be broken to give you that sign. You can still take the trade, but keep that in mind. Market structure hasn't broken yet, so maybe you need to be targeting something just within the range and not outside of the range, or you need to wait for this to be broken first and then take the trade. Who knows? You'll be the judge which one of you want to be, which one you want to be using for your entry. So that's the weekly. We are retesting a very fresh order block. Price is not very impressed by it. As you can see, we had no difficulty in reaching and going above it. To me, when I see this, I don't want to be trading. I'm not too interested anymore in trading this weekly structure. As long as the price is above that yellow line, I'm gonna consider that weekly to be irrelevant, not powerful enough, etc. If it comes back by the end of the week and closes below, then I could be use that weekly signal. But as long as it's above, and it is currently above, I will disregard it as a signal. We already so yeah, that's the monthly, the weekly. I mean, there isn't anything since this isn't a quasi on the weekly, only on the lower time frames. The quasi, let me double check here. This is this still fresh? 6, 7, 8. We'll have to reach this before the 10th, or actually on the 10th by the latest. That hasn't happened yet, but if it did happen, we could see a reaction from this with some good probabilities. Let's go to the daily. So now we're looking for a reversal pattern. It wasn't visible, or it wasn't formed yet on the weekly and the monthly, but on the daily we do have a quasi. The daily quasi is this. We had an uptrend, established uptrend. It breaks the neckline. That's the neckline. As you can see, it breaks it, and that leaves us with two structures that if the market is going to reverse, it has a good chance at using these levels. And the first level comes into sight at 1.17145. That's not the case yet. That's still about 50 about 50 pips higher than where we are. That could be something for, I don't know, maybe later today or tomorrow, but it's not the case yet currently. So that's not relevant for any structures. Now, coming back to what Peter was telling us, and this is what he was mentioning, we are now breaking, we are above, we're squeezing the weekly, right? The weekly hasn't been invalidated yet, but we are squeezing above it. However, we are also doing another thing. We are yesterday we closed on the daily time frame, right? So that's the daily, that was yesterday's close. We closed above the hi Scott, how are you doing? Good to see you here. Don't forget to like the stream, by the way, while enjoying us here. So we have the daily order block, which is not fresh, right? The number of candles since its creation is much more than 10. That's one thing. And it's already been mitigated here. So I'm not interested in trading it. It's not, to me, it's not a good signal if to be used. Not only that, or not only that, I should say, in spite of it not being a actionable structure, fact is the market has broken a bearish structure. That's a sign. That tells us something, right? Even if it just respected it, I'm not gonna be trading it. But the fact that it broke it tells me something. Tells me that the buyers are really flexing their muscles here, and to me, that tells me that there's likely more to come, right? It may be that they need a little pullback, right? Who knows? But eventually, either right away or eventually, I think the reasonable thing to expect is that the market is going to have, it has more to offer. Probably is going to go higher. I don't know. Maybe news can come in and change everything. And that's the top, the top that I already said, that will be the top for the coming few days or weeks, who knows? But this is just the fact, looking at the most recent close, it tells us that the buyers are not, they're not done yet. Not only that, look at this right here. Look at that wick. Where is that? That's a broken and retest. Same thing as Peter just mentioned, right? The top of that day will stay there as a resistance. Price went through it, comes back, and retests it, goes the other way. That's if that does not call bullish, I would recommend you to go read the TA Bible again, right? That is bullish in all aspects. There is no other way around it. So I think that the market is poised for some more upward movement, unless we have new data, new events happening out there in the world that changes things, risk sentiment, or maybe a deal in the conflict, or some other macroeconomical numbers coming out that support for a change in the direction. So that's the daily time frame, breaking bearish structure. That's one thing, although that doesn't create a signal for me. I don't have anything to trade right now, not on the daily. So let's look at the H4. And the H4 is a bit more interesting, because once you thank you Kibungo, thank you. We have before, you can see that the market had just one side price action. You see that on the H4, it was buyers in control, period. Once we broke above this high, it seems like the buyers are, they are satisfied with their performance. They're no longer pushing forward. They did that enough recently. They are just taking it easy, taking a break, so to speak. And what happens? The market starts to consolidate around that area. You have a bearish order block this is lower time frame, right? So, and you have a bullish one, and you can trade both of them, right? You take one, you go long from here. You could go short from here, although you understand that that's the riskier trade in between the two, because it is against the higher time frame. But you can perfectly take shorts from there as well. Now it gets interesting. So you can take shorts from here and long from there, and you can take a look at the lower time frame to see which of those two has signaled. Let me take a look. We have Actually, I did take a short here. I can show you guys the trade. It was something. Let me double check my entries. My entries were somewhere around here, and my stops were, well, somewhere around there, not too much. And the TP was just this area, and they both hit them already. They are just, little grabs, little bites out of the market. So let me double check. I got 4R, 4.1955R, basically a little bit over 4R. So around 1 to 2 on each one of them, which is my bare minimum. But I did take them because the market was quite nice, poised, or nice position for a little pushback. And from the long side, I haven't taken anything, but maybe I can take a look. Maybe there is something. Let me see if there is something. Let's take a look. So we have a fresh order block on the H4 being retested. Very interesting. We have a H2, which is that outside bar right there. So let's take a look. So this is the area, right? That's the area. Don't be fooled about the midline, because that midline is another level. That's a level from before. That's something else, right? I left that midline in just to see if you're awake, just to test your focus today. All right, so let's take a look at it. All right, so let's see if we have a quasi. We already identified there is overlap, and we could be trading that. This overlap, right, between these two. And let's take a look. Can we? That's one. Obviously, it has already been invalidated, that entry, but I still need to know how many they are. That's number 2. Has reacted, but perhaps that was difficult to trade because that was the news. Yes, is it? I think it was, right?
Mm-hmm.
Yeah. Okay. That's for multiple reasons that would be difficult to catch, if not for the restrictions of the high stick account. All right, so these are the 2 areas. Obviously, I'm not interested in this anymore. I'm only interested in this last one. And only if the market goes there again and reacts from it. So you can see there's only, how many pips is this? 54, 53, basically 1 pip, right? So it's you get in, you get stopped out, or you get a great entry. That's it, right? And there's no need in managing this. There's nothing, moving to break even or anything. Either you hit it, you get in very nicely, or it's nothing. It's no good. Let me take a look at. Okay, so that's the 5. The 3, I suppose there is. It's too big of a structure for the 3. We have 1, 2, 3. No, it's actually just 1. Actually, there's also on the 3-minute a viable setup or entry order block. Let me double check. 2 and then 3. Yep, that works. And number 2, I doubt the 2-minute will give us anything. Yeah, that's out. All right, so it's only on the 3 and the 5. And if the price comes back, then we can take a trade based on the structure to the left, right? So these are the entry order blocks that I would be interested in trading. As you can see, quite extreme in terms of the price, range. So that means that I'm not going to be triggered so easily, because the chances that price will just go from where they are is quite present. However, that's not the only setup that we can take. The market, the whole idea is that the market will use this area to come back, touch, and then make it reversal. Complete a quasi, either by a quasi to the left or a new quasi. both of them can be used. So maybe the first one may or may not give us the signal, but the second one perhaps could. The market is still, price action is still bearish. As you can see, yes, we did have a nice reaction from that area, but the buyers are not stepping in, with some follow through, at least not yet. Sellers are still having the upper hand. Look at that. Let me take a look why I say that. Look at that. This is where the reaction started, right? This is where the news came in. It left a bearish order block, and that bearish order block the buyers have not been able to invalidate. That to me tells me that even though there was a big reaction and left that rejection wick, sellers are still in control. You can see it as well with new order blocks being created, bearish structures, and those bearish structures are being respected. That may change in the future, but as long as they're still being respected, price is telling us it wants to go down. And unless we have new information, maybe start breaking these structures, and maybe that's going to happen in the next couple of candles. If that's going to happen, then we can conclude, all right, we have a reversal. That's the neckline, and we can look from wherever the top is until this low, get the fib out of the toolbox and see if you can find some entry area where price can come back and reverse from. But until then, we sit on our hands. At least I will be sitting on my hands. Yes. So, well, that's it. Top down on EU and GU.
Brilliant. So are you buying or selling in the end?
I sold already from this level.
Yeah, that's good. That entry was good. That entry was really good.
Yeah, I sold already from that level, and I'm not ready to be buying anything here yet. But that's a setup. It hasn't triggered yet. It's on the lower time frame. There isn't a quasi. There's really no reason for me to enter that trade. Not yet.
Yeah, I think that was a good reaction. Even on the pound as well, I think there was a good reaction. You have in here someone spamming the chat, I think, asking about the pound. We have Jahon. What do you think about?
While you're dealing with spam, I'm gonna put my video off the stream for a few seconds.
Okay, no problem. Is that it? Oh no, it's back. Okay, so what's up, guys? What do you prefer to avoid period? Yeah. Okay, I have a few questions here looking at do you guys prefer to avoid that period of the year, December, January, or trade normally? That's a good question. I can answer mine as well. Then I noticed here my question as well that Anton was asking me about my trade on the euro yen. Yes, I will talk a little bit about that in a bit as well. Then we have Will Ren. When in December does Forex major pairs and gold trading slow down, and when in January does it pick up again? That's a good question. To be honest, I think as you guys know, in December are going to still have the next 2 weeks are going to be really busy. We are going to have all central bankers still announcing their interest rate decision next week. We have RBA, we have the Fed, we have ECB, we have Bank of England, we have Bank of Japan. So every single one of them are still going to announce their interest rate decision either next week or the week after that. Okay, so at least the week until the end of, I think it's 19 or 18 of December. It's going to be really busy because you're still going to have also the NFP, CPI data. So everything until the 20 basically of December, expecting extreme volatility or at least some volatility. And sometimes actually, if you go and analyze the previous years, sometimes there are some cycles that may start at the end of the year, beginning of the new year. Sometimes either the tops or bottoms can be in place around that period. Okay, for example, this year, the low on the euro and so on, it was created around the first 2 weeks of January. So at least for the next 2 weeks, there's going to be still plenty of volatility to trade with. And then after that, me personally, on the week of Christmas time and anticipation into the new year, I'm not going to be active trading. That's maybe an opportunity for me to just review my trading, just to kind of look at my numbers and prepare for the new year. And actually this year as well, Christmas is going to be, is it Wednesday to Thursday, something like that? So it's even in between of the week. So that kind of removes straight away two days. Yeah, Thursday. So it removes a little bit also that extra day. No one is trading, of course, on the 25th. And then also New Year's is also ends up being on Thursday or Friday, which is again a tricky one. So most likely beginning of January straight away after the New Year's, it's the first Monday after New Year's is usually kind of a good time to come back, and then you should expect volatility to be trading as normal, basically. So that will be that's what I'm going to do. Some people completely take December off. I'm not a big fan of that. I think there's still plenty of opportunities, unless which we take the time off as well as I don't know, as relaxing. Maybe you go to travel somewhere and enjoy something, or review something in your strategy as well. If you want to do a kind of a deeper deep down and maybe change a little bit of your strategy, maybe you can take completely the December off. However, we are still going to have plenty of volatility. There are still many opportunities in the market for this month to take advantage of, or also to destroy. Like something that unfortunately many people do as well is, if the year hasn't been good so far, maybe they start forcing something that they shouldn't, and they may give back some of the profits, or even get into a deeper hole in their own drawdown. So nothing's going to change. You are not even to become the best trader in the world if all of a sudden you have a great December, the same way that you are not going to also be the worst trader in the world if you have a little bit of a negative in December. So yeah, just trade it as normal. If you want. What about you, Victor? Are you going to be active around Christmas time, or what is your schedule looks like?
I don't have a rule that excludes holidays to be trading. I have seen that the strategy performs within a range similarly. Obviously, there are a few things you need to consider. One is the ranges, they get compressed. Volatility is less, so that means that your targets need to be in alignment with the then market condition, meaning you cannot expect to be reaching the same kind of moves on non-holidays on compared to the holidays dates. But I can still take, as long as I can take that into consideration, I can still take the trade. I just need to put a TP that is adequate for the the day of the year. That's one thing. Secondly, since my strategy requires minimal trade management, I don't have to be glued to the screen all the time, so I can get in and still walk away, come back perfectly. So I can still do it with holidays. However, for myself, sometimes it's good to take some days off, completely off, and not look at the charts. I love watching the charts. I don't need, that's the thing that I do on default. I want to be there. I want to see the price action. I want to be reading the market. But it's good to just switch off completely and enjoy families, the moment, the quality time, and then come back refreshed afterwards. So which one will I do? It depends on the situation, but I won't shy away to take the days off if I see there's a great, like, some family gathering. I'm not going to be pushing my trading in between. As simple as that. But if let's say, I don't know, things are happening before or after, and I seem to have half a day free around the holidays, and I can surely look at the market and perhaps trade a little bit on those occasions. We have some pretty interesting questions here, nonetheless, by I will mention all of them. Bobby Fisher 19 says, Vic, it's been a week that you order block lesson to my trading and I'm already making money. Thank you again. Wow, thanks. Nice. I love to hear that. Thank you, Bobby Fisher. And if anyone is wondering which lesson Bobby Fisher is referring to, last week, actually the whole week we had filled with strategies or templates, frameworks for you to build your strategy on, and mine was on Monday. So you can go check the Monday's stream if you haven't liked it yet. That will be a nice opportunity to do so. And subscribe to the channel as well if you haven't. But go check the OB lesson. And actually, if you have a lot of free time on your hand and you want to improve your strategy or your skills and your trading in general, watch the whole week. There are 10 strategies that were, or frameworks that were not revealed but shared with you guys. Go check all of them. Take the time, take notes, and go test it. Don't use it, go test it. And see if it's something that you could use. See if it's something that could improve what you're already doing by adding it or maybe using it as a filter, as another confluence. You know the drill. You can use it and apply it to your toolbox without throwing away everything you are doing right now. Just improving what you already have. I'm pretty sure that if you do that in the 10 different templates or framework that was shared, you're going to have at least a few that's going to be useful for you in the future. Maybe not all of them, but at least a few. You may not like mine, for example. Bobby Fisher is making profit with the ideas I gave. But maybe you're a different person. You're trading it differently, and maybe OBs are not exactly the missing piece or something you can add to your strategy yet. But you have 9 others who are offering all kinds of goodies, so to speak, for you to follow. So go ahead and check them out. That's one recommendation or suggestion. All right, so we have a couple of questions. Let me go back. I start them, and by star them, I made them a nice, cute little star, so we can find them back together, but find them back easily. And in the meantime,
yeah, I can maybe just while we're looking at the questions, because we had this one when I initially started mentioning the reason why I was actually looking for the trade on the euro yen, and I never really finished my thought on that setup. Maybe I can just explain a little bit why I was even interested in looking for a short at around this level. So let me just first and foremost remove some of these drawings, and now maybe I can explain a little bit. So one of the reasons for me to actually try to look for that trade, which was that one, it's because, in my opinion, I think euro yen is reacting from a really valid level on a higher time frame. Okay, so we are really close of this level. Even if you're looking to the daily time frame, actually price got into this fair value gap. Even though I don't really trade fair value gaps, but basically it's in between this top and that structure, kind of. That's where price actually end up. Actually, I can go a little bit more zoomed in because it's not even that one. It's actually in here. It's actually, yeah, that's the one I wanted to mention. It's actually within this level, so above this high and below that low. Actually, I could see price going even a little bit higher and actually touch the level, but it didn't yet. So it's between this level on the daily time frame all the way back in the 90s. It's basically a little bit more. It's when I was born, and it's a good level in my opinion. So we had that reaction. Price actually slightly took the low on the world time frame around this level, so we did manage to take slightly this low, which is a good thing to see as well. After that, price started to range a little bit in here, but one of the candles that it mattered for me the most, it was actually this spike that we had in here. So this could, in my opinion, could be enough to collect a little bit of liquidity above this structure. I could still see eventually price going a little bit higher, a little bit closer to maybe something around this level. And if it goes there, then I'll try to look for new opportunities. But for now, I really like this spike, which kind of ends up potentially creating the traditional beautiful Quasimodo eventually that we could look for. And let's just not rephrase. Beautiful Victor, the pipette, look at this beautiful reaction from this left shoulder to there. That's think of beauty. All right. So if you do want to offer any Christmas gift to Victor, take a screenshot of this and write it kind of somewhere to the pipette. And I think Victor is going to be really beautiful. Just frame it and send it with a mask, of course. You need to send a mask to Zero on the chat. But continuing in here, another factor that I liked was that we had this here. So I liked about this. So the very bit of liquidity to eventually collect above this double top. We had this beautiful Quasimodo and this supply level. Price already actually reacted. I didn't really manage to get involved in here. Unfortunately, price could actually just react from this level and go and disappear. Gladly enough, price ended up taking also the structure and slowly came all the way back to give us a second chance, maybe at this time, to actually go into that level. Now, if you guys remember from last week as well, on my session, I did mention that usually price tends to react from kind of within 3 levels, within the supply zone or the demand zone, and there you go. Maybe I needed to go into the 1 minute, maybe to see it a little bit more. So the first level is a little bit more at the edge. So basically, actually, the first one to be somewhere in here, the second one it's supply, and the last one at the extreme, which is sometimes in alignment with the left shoulder from the left side. Okay, so basically that's where price end up reacting. In here, 1 second, let's just go maybe to 5 minutes. So what did I like now about this move on the way price came all the way back? So it was the compression, right? You can now see this. Basically, this is a move that starts taking every single demand zone as price moves to the upside. And then we had the quick fake out one more time of the structure. Still a good reaction. This is where then reacted to the pip on the left shoulder. And then you had the break. And it was after I saw this break, gladly I was actually looking at the chart in this moment. And I saw the break and I placed that sell limit. Initially, price didn't even tag me in, then come down. And then finally, with some spike in here, it was slightly after the news. So yeah, I actually was aware of the news at 3 p.m. So initially price was somewhere around here down, and then it was after the 2 minutes, that's when eventually it went higher. And then I got distracted. But there you go. So the compression was something that I paid attention to, which was a great approach. It's exactly what I like to see, and then the confirmation, and that's where I wanted to trade. So this was all the analysis on the euro yen. However, in addition to that, another reason for me to try to look for that short on the euro yen was because the yen index was actually reacting within this level, and it was already breaking a little bit of this structure. Okay, so basically when I entered, yen index was trading somewhere around here, but you could see that this level, this demand zone, was already holding price up and actually managing to break a little bit of the structure. So that was another reason that I could see potentially this yen index going higher, which means that euro yen would eventually move to the downside. So I like that aspect of this correlation. And then if we look at the euro index as well, euro index is a little bit in a different scenario. It's continuously going to the upside and breaking slightly new highs, but anytime it does that, it kind of goes down. It's not really strong, even though we are indeed breaking new highs recently, but it shows a lot of rejection as soon as it goes there. So there's a lot of sellers around here. I think when I kind of looked for the trade, we were somewhere around here with the potential of price actually making this move as well. And I think eventually we are going to have a bigger move. Maybe that's when euro dollar and some other euro pairs may actually properly drop. But eventually I think we are going to have this move on the euro index. So it was a little bit of the combination also with the yen index and the euro index where they were reacting from. So it's a little bit of a combination of both scenarios. And I could see, in my opinion, I think we actually could even go lower. My first target on this trade would have been around here, feel the compression, get into this demand zone, and then the second target. To be honest, I think I would have held it. If I was in trade, I would still be holding it with expectation the price could eventually go. But I'll be monitoring to see how price will react from here to see if this level keeps holding price one more time. But I think Euro Yen could eventually start moving. We are starting to see many news from the BOG that potentially they're going to increase their interest rate, which can shift a little bit also the yen pairs. So we may be close to a top. At least that's kind of what I'm looking for, or a bottom on the yen index, then a top on the individual yen pairs. So that was a little bit of my thought process on the reason why I was looking for that trade on the Euro Yen, which never got filled. Yeah. Okay. I don't know if you're muted, Victor. Are you speaking? No.
I am.
You're muted.
You are so well connected, man. How can you see through the mask and know I'm talking? And
it's the
well
pattern.
done, man.
Usually I would wait 3 seconds for you to say something, and you never said anything after 3 seconds. So I counted internally. 1, 2, 3, 4. Okay, Victor didn't say anything. Victor, are you muted? I didn't even look at you. I was just looking at my monitor.
We are in sync, Pedro. We are in sync. You don't even have to know me, to watch me to see that I'm supposed to be saying something right there. Awesome.
Exactly.
And I was muted. For those watching, I was muted. I started talking, and I readily understood that I was muted. What I said was too bad you didn't catch the trade, that it got triggered, your signal, everything, but the EA wasn't set up properly. It was too sensitive for the spread filter, and that made you not take the trade. But your top-down analysis, your patience in waiting for all of these things to play out is meticulous. And I that's how I know trading to be. You have to be very, very patient, because edge isn't like abundant everywhere, right? It's not like you can do anything and expect to be profitable. That's not how it happens. You have to be very specific, very selective, knowing, testing and knowing what to use, when to use them, and wait for the moment. There is an opportunity where you have to wait for it to come, and then you grab it and you don't let go. And in this case, opportunity came. You did everything perfectly, but the EA wasn't set up as it should have. But we win or we learn.
Yeah, lesson learned for sure. Yeah.
Another question.
A good setup. Yeah, go ahead.
Go ahead. No, go ahead.
No, go ahead.
All right. So someone asked Kex Prime. Let's go back to mine screen so I can. Where is mine? Here is mine. There we go. And I'm going to move these away just a little bit so we can have the right. All right, perfect. Okay, so this is my screen. As you guys can see, it says Victor screen, and that usually means it's mine. All right, so the quasi is short. I know for those who are watching us regularly, you have seen me say this many times. It almost seems like a taped segment, but it's not. This is live. But there is no other way, right? We have new people coming in all the time, and we need to be helpful for all of them. So bear with me for a couple of. My TP was hit, so let me take that off the screen. All right, so we have a quasi. What I talk about a lot, Pedro does as well. Is the Quasimodo, right? The Quasimodo is, nothing fancy or so. It's the name is derived from that fictional character, that Disney movie from some time ago, which is based on a novel on, the Hunchback of Notre Dame. But anyways, the point is we have what it is. It is a variation of the head and shoulder. This is the, textbook example of a reversal where you have a trend in one direction and the trend is reversed by making a high, which is never then matched afterwards. There are symmetrical highs on both sides, right? The shoulders, and then the market breaks down and continues the other way, right? This is the textbook example of the head and shoulder, and there are many ways to trade this, but I don't trade them. We trade the Quasimodo, which is based on the same. It's a variant of the same pattern. However, as this is symmetrical, the Quasimodo isn't, or short quasi isn't symmetrical. It's anything but symmetrical. So it can be something like this. It can be, it can look quite differently. And that does not look like a head and shoulder at all. But for me, it is. You have an uptrend, higher highs, higher lows. You have a structural low that is then broken. And that's the reversal pattern. And then you wait for the market to come back to create that right shoulder. And then you trade with, I get in the as the market is trying to make that right shoulder for this move down, and possibly even for a continuation, depending on other market factors or other things that I look for in the market. So that's what a quasi is. Thank you for the question. It was Cax Prime. Thank you, and keep those questions coming in. Let me clear this up so we can go to the next question. What else do we have? This question we already discussed.
Yeah.
Peter is such an observant viewer. Peter has some sharp question. I love that, Peter. How you're such a good observer. I'll give that to you for sure. Okay, so in the meantime, let me take this TP out because it's been let me move that. It was the market. I took a long from below here, and the TP was set around here in the middle of that range, and that's what got hit. That's a different strategy, not the one that I share with you all the time. But coming back to the question, as I said, Peter, kudos to you. Good questions. I can see them. They're sharp as a freshly sharpened knife. Victor, why does the number of entry order blocks on the lower time frames matter? I've noticed you only consider 3. What's the significance of that? Peter and everyone else watching who are interested. One of the things when I designed the system that I'm using, I noticed that this is the quasi. Perfect. That's nice. But what time frame? I ask myself, so what time frame quasi is this? Well, you can say it is the highest time frame that you're able to see it. I understand that's true. But what about the same pattern? Let's say this is on the H4. A lot of the times you will see the same pattern because it's the same price. You will see the same pattern if it's on the 4-hour visible, you will see it on the hourly, you'll see it on the 30 minutes, you'll see it on the 50 minutes, right? All of those moments you'll see it. The only thing is, so I ask myself, so does that mean I am able to trade all of the time frames, right? And I found out that I am not able to trade all the time frame. There is a size of the pattern, the range. By size, I mean the range from the top to the bottom, at which it is still adequate for any particular time frame, right? So let's say it is on the daily. I'm giving a very extreme example here, but before, let me mute my mic.
Let's see.
Yeah, so imagine you see this on, I know it's a little bit extreme, but it's to make my point clear. Assume we see this on the daily, right? the same price with same levels and everything, you're gonna see that like the daily will have this as the neckline. However, if depending on how you define your neckline, in my case, I would have let's say this would be the daily neckline, right? But if I go to a lower time frame, I will see that there is perhaps the 4 hour neckline is here. And I can continue this, and you can understand where I'm going with this, that, you know, a pattern formed on a higher time frame automatically will also have lower time frame showing me the same thing, that it broke after creating an order, a quasi, it broke that level. It broke the neckline and creates a neckline. This is a bit advanced quasi, you know, webinar or segment, or how you want to say it. But you can see that the quasi is also visible. It also breaks on all the other time frames. If it's on the daily, you will see it on the hourlies, the 4, the 2, the 8, whatever, the 30 minutes, the 5, the 1, all of those time frames. Why? Because all of them for sure will have their neckline broken as well. However, what I've noticed is that this area, this whole level here, is not tradable on all time frames. Because, for example, on the 1 minute, you will have, well, not a gazillion, but you will have perhaps, I don't know, 30 entry order blocks. And even if you use the fib to select the upper half, right, you still, in here, you will find many dozens of entry order blocks on the 1 minute. But that's very difficult to trade profitably, because it means that if the market is going to go, let's say going to go halfway through that area before, and that is even if you are right? Sometimes there is no, the reversal fails and it goes through it. You'd be losing all of them, all of those 30, 20, whatever number of structures they are there. And even though maybe it's still tradable and profitable, it's very difficult to execute mentally, and it doesn't really make sense, at least not to me. So what I did was I defined the validity of the quasi for any particular time frame in the number of entry order blocks it creates. Now I used, and you observed, I use a very specific number, and you saw me very very cutely observing me that I use a specific number. But that number is just my number. You don't have to necessarily use that number. You can use any other number around it. It's not about the number. It's about having a fixed rule that you know that will avoid you of trading a pattern, a quasi in this case, when there are too many entry order blocks. To me, if they are above that number that I use, to me the structure is too big. You literally see me say that on it's too big. I will not see it as a valid structure. I will not see it as the valid structure. I've got all right, so you will not see it as a valid structure, and I will discard it. I'll discard it completely and say it's not tradable, it's invalid, I will not use it. So that's why I count the number of entry order block beyond the 50% retracement, and that will help me only trade the quantities that are offering me a good number of entries without me losing a lot in the process. Because there's three things that could happen when I trade a quasi, right? One is the market comes back and reacts from a level that I wasn't using, that I didn't see, or I didn't use an entry order block, and maybe it used something else, right? That happens because simply the market can do whatever it wants. This is the area, and let's say there are 3 order blocks, and the market comes and doesn't use any of them. So there is a reversal, but I'm not in the trade. Fine, I'm not in the trade. Fine, I didn't get in, so there's no risk, I didn't lose. There is the other situation where the reversal is going to fail. Obviously, you don't know that in advance, but the market will come and have maybe a little reaction, but eventually will continue, have a little reaction, continue, have a little reaction, then just continue, go on. What will happen? If you get triggered, and you probably will get triggered for 1 or 2 or maybe all of them. I typically don't get triggered to all of them, but I will get triggered to 1 or 2. I will lose all of them. Because, if the market's going to break, my stop is going to be ultimately on top of the whole structure if I expand it, and I have to accept that, the trade plan or the trade idea is wrong, is invalidated. So, well, it's not wrong, just invalidated. So either I don't get in, it uses any other structure or any other level that I'm not being triggered in, or 2, the reversal in itself fails, and I got stop losses. And the third scenario is, and that's why I count the number of entry order blocks, it will use one of them. Let's say it has 3, and I get triggered here, it stops me out. And then I get triggered again, assuming that it gets triggered. Sometimes, a lot of times I don't get triggered, right? But let's assume that it did get me triggered here, and I get in. Obviously, that could mean, not always, but that I could lose the trade. But let's assume that I did get stopped out, and then I get it will reverse, right? So the first one is it reverses without me. The second one, it does not reverse. The third one, it does reverse, and it uses one of those levels that I'm looking at. So what will happen is that I will catch maximally 1 trade out of the 3. That's a 3. That's a horrible 3. There, that's the 3. So I'll get 1 out of the 3. At most, maybe 1 out of the 2, right? Because maybe it didn't trigger me all, or maybe just 1 level that got triggered, and that was the one that. So you understand that I'm trying to have a bit of control on how many. If I'm going to be wrong, how many times, how many stop losses I'm gonna suffer, and when it does reverse, how many stops will I have in the process? Maybe 1, maybe none, maybe 2, and then on the third one it will work. So you understand that it is important, so you can control the numbers of losses you have, which is super important. So you can frame this, the approach, in a way that is profitable, right? Because if you have many numbers of entry order blocks, just imagine if it's going to be the 10th structure it's going to react to, and just imagine that if 20% of them it did signal, you're going to have a lot of losses, and it's going to make it quite difficult to be profitable. But Peter, great question, great question. All right, let's continue with some others. HK11897. It sounds like 911, right? Like emergency number, but it's not. It's 118. Victor, I have a question. Yesterday we talked about revenge trading. Yes, we did. I have a similar question like this. For an example, I took the trade. Market hit my stop loss first. Then markets goes in my direction. This is a very common thing, HK. Every trader, you're giving this example because it's happened before to you. That's exactly what gets us triggered. If you're not prepared, if you don't have a way to frame this experience or this idea in the right way, that's exactly what will get you triggered. That you are right. The market did go in your direction, and you're left with a stop loss. Why weren't you rewarded for your work? How come you did everything right, but you're still with a stop loss? You're still left with a stop loss, with an R, maybe some more of loss. That's exactly. It seems like it's injustice, right? That this is unfair. How dare the market do this to you? At least that's what our ego would tell us. But that's the thing. That's exactly one of the things that revenge trading, from our perspective, we are working where we are the center of our universe, right? That's why we are, as individuals, there is no other way. We are the center of our universe. So we tend to see everything through, from the perspective of, the world doing it to us. But that kind of framework to want to see things in trading is not very beneficial, because as we say a lot of times, the market does not care about us. Actually, before I continue here, let me check something here, because I do see this is still valid, and we did have an H1 which is still valid. This is the entry order block. This is the area right there. I already took some entries there. And you can see that as I'm talking and I'm watching this, I'm saying, market is telling me, should I be watching this and doing something with this information? So let me double check. Do we have quasi entry? Yes. Neckline? Yes. Let's do this. This is not called live trading for nothing. So let me do that with you guys while I'm pausing the explanation.
Yeah, I was looking at the sales on the NASDAQ. There was who was it? It was mentioning NASDAQ.
We'll have to check the daily ATR first. Market is very compressed. Let's measure this. Only 30. That's nothing. All right. So market has a lot of probabilities. The expectation is the market to go higher because of the market structure, but do we have any news that could still change things? No, we don't. We have CAD news in about 24 minutes, but that shouldn't make any difference here. So what do we have? We do have
$0.
Is my audio, is my sound? Can you say something, Pedro?
Yeah, I can hear you. I can hear you. Your sound is okay.
Yeah, I think my my headset just turned off, or maybe not. I don't know.
Can you hear me? 1 2 1 2.
Let me double check here.
Can you hear me?
Well, still not able to hear you, but you can hear me, I suppose, right?
I can hear you.
Okay.
But
and read
you
this.
cannot apparently.
I see that you're able to hear me. All right, so I'm gonna continue with since it would be nice to be able to hear you though, and I have no idea why that is the case. Okay, now I know. Go ahead. I hear you. Okay. I think I knew what it is. I received a phone call, and probably that I do hear you. Yes, I received a phone call midstream, and probably, my phone call, my phone, took away the controls of my headset.
No problem.
All right, so we have a fresh. There we go. There is a trade. Is it? All right, that's a huge area. I don't like that, but it is what it is. That being the neckline, left shoulder, head, break of the neckline coming back, and that would be the entry area for the short. I do like the fact that it reacted quite nicely to this area. But to be fair, it hasn't triggered me yet into the trade. So I'm not taking anything. And on the higher time frame, this looks like the market is getting ready for a continuation, right? Breaks that line. We talked about this. That's the level it broke, and actually this one as well. It goes through both of them, comes back, actually retests one. Let me mark this a little bit better, right? So let's go back one step. Yeah. So it breaks both of them. Those are the two lines, right? The two lines from the left. Breaks both of them, breaks out of them, comes back, retests the first one, continues, makes a higher high, comes back again for the second time and breaks and retests the higher one, goes even higher, and then comes back to retest the lower one. And now we're coming back. And so this to me tells me the market is getting ready for a continuation, break and retest multiple levels and getting ready for that push. Then again, I don't trade expectations, right? I trade my trade plan. So a lot of the times I expect price to actually break, but if it signals, then I'm supposed to be in there. So do we have an entry? I don't have anything on other time frames either. So in any case, it's going to be a no-go for me. One thing though, this is the neckline on a fresh structure. Right there.
This is how it looks like, guys.
Yes, this is it. So that's the fresh pattern after it reached the area, right? That's the area that I'm interested in. And I can look. I explained that at the beginning. Either it uses a pattern that is from the left, a much bigger pattern, or it creates and uses a smaller one. Let me zoom out a little bit so you guys can see some hand gestures, because I have my hand suspended in the air, and it's no one is seeing it. Well, it's still suspended, no one being able to see it. See, it's not there, not visible, but that's okay. I'll have to use the area we have. So the not my hand is suspended in the air, but it's the pattern that is to the left, which is much bigger. And it can use either one of them. It can use the quasi to the left, and it can use a fresh one. And, both of them are profitable. So I take both of them. I need to be watching both of them. And it didn't. Let me double check this, because obviously while talking, I don't have my complete attention to the Saturn, the pattern, the quasi. And in this case, so there you see it, Peter. I just did it again, and I invalidated that to be as a 2-minute quasi. So it's not a 2-minute quasi. It's not valid because it's way too big. Okay? I don't know if you saw me did it there, Peter, but I was on the 2-minute and checking out if it could be an area, right? So you have 1, 2, 3, 4, and then I stop watching it. Okay? Let me double check it again, just to make sure. So that's 1, and that's 2, 3, and actually, to be fair, it is the third one. That's the area, and look at that. But it didn't trigger me, so that wouldn't have taken me. So actually, the 2-minute is still valid if you're taking the internal quasi, and including the external, it would be invalidated. When you have borderlines, then I prefer to just take the external one, because it keeps me selective and picky, and I like that. There isn't anything I could do to trade this trade. It did, however, come back to retest that level, which is where I would be looking for a possible short. Didn't actually trigger me. Can still trigger a short from here though, but we'll have to see. Now we have a quasi right there. See that? Right there, broken. Yes, so now we have a quasi. Now we can look at this area. Before that, there wasn't a quasi, there wasn't anything you can put an alert there. Price comes back, you want to be looking into shorting this only if the market tells you, it's ready to go in that direction. To reverse, I mean. Actually, the market is quite nice because it's giving me a lot to do. Because let me see if there's the area. This hasn't been negated yet, so we can perhaps take another trade there. I took a short from here, 4R plus, and I took a long from here. The long was a scalp, wasn't the main strategy. So in this case, we have an H4. Let's go to the H2. We have that's the area. That's the same area we talked about on the 5 minute. All right, so we do have yes, this is the area. If the market is going to reverse from, this is the area I want to be going long from on the 5 minute. So let's see how the market reacts to it. And that's from this quasi, right? This quasi. But you can clearly see that there's a bigger one. This is the external one, where price came back once, but is still able to come back to that area. So we have two entry order blocks that are using different quasis in different quasis. So this is one, and the other one is this one. And you want to see the market. Let me see if there's something else that I'm missing. No, nothing else. Yeah, I like this. Yep. Yeah, I like this. I can take the short from here and the long from there. Both of them are valid, great entries to be taken. I will not be telling you the actual signal, because I don't think, and we don't think that that's the right kind of thing we should do. I'll give you the setup, the considerations, the things that I look for, but the trigger, where exactly you put your stop and your TP, that's up to you. We want to show you as an example how we trade, but the idea is not you become copycats of Pedro's or other hosts here. We want you to be find your own identity in your trading career, your journey. So we have the established downtrend, which is this. That's the neckline. There we go. That's the neckline. That's the quasi. And presumably, if we get a reaction from this order block, we could be going at least to this level again. But because we have the higher time frames on our side again, and we have only 30 pips on this ATR, you can expect this to expand to, let's say, let's double check the ATR on the daily. And the ATR is currently at 52, so you can expect another 20 pips or so expansion on the day. So let's go back to the 5 minute and just wait, right? You don't jump the gun. Wait for the market to actually tell you, something is happening here. Buyers are coming in and getting in on that level, because it may not do that eventually, and it may break both of them. Right, so you want to be selective. You want to only be getting in from Austria. Awesome.
Yeah.
Good stuff.
In reality.
Yeah, so we're waiting for price to tell us, that could be a huge candle telling you that buyers have come and they're taking over. It could be a pin bar. It could be, something on the 1 minute that you see. An inside bar or an outside bar or an inside bar, whatever it is that tells you that there's going to be a breakout in the case of the inside bar then, and the outside bar indicating a trap traders. We still have 1 minute and 15 seconds for this candle to close and to tell us if, this is the area. It's not exactly telling us that yet, but let's see if we have another. As you guys can see, well, not that I do everything perfectly, but I'm willing to switch sides in one session, constantly selling from there, going long here, and watching the reversal on both sides. So I'm looking for the bearish reversal, bullish reversal, and until one of them is invalidated, I keep doing that because the market does use them very often as it. I don't see the reversal yet, the buyers coming in necessarily here. Let's see on this time frame. So this is the 2. Okay, so that's a huge area. Not a bad one. But this one isn't valid. Okay, so it's going to be that. Yeah. That one is beyond the 50% retracement. So there is a 2-minute entry order block there that we could be using. We'll have to see, right? There's that order block, comes back to retest. Now we should see this moving out, right? The follow through movement. If it doesn't do that, as simple as that. If the market doesn't put a step forward, it's not going to be moving forward. Simple as that. It's almost philosophical. All right. In the meantime, as we're waiting for price to move forward or not, we can check the questions again. I think I was halfway, the questions. One of the questions, where was it? Well, I was explaining that revenge trading. We were talking about revenge trading. Yes. So how do you deal with that example where the market goes your way and you're left with a stop loss? The same way you deal with every type of scenario of revenge trading. One of the antidote, I shared this before. There are many ways to deal with this, right? And maybe you would need multiple things. One thing you can do is you can have an external program, device, or person that will stop you from taking too many trades in a day, right? For example, Sam, who is also a host, he has a rule: 1 trade a day, and that's it. That is a very effective rule to avoid revenge trading, because chances are that that feeling of revenge by tomorrow probably isn't there. Probably, not a guarantee, but probably isn't there. So that could be something, a very simple rule: once a day. Or you can have someone who is hold on here, I'm watching my screen here and I want to go consider a
my 2 cents on that topic of missing a trade. Losing a trade and then price goes in your direction. It can be definitely frustrating, but if that's something that's happening regularly, it's actually something that can be looked as positive. Okay? Why I'm saying that? So usually when you are trying to execute a trade, at least you either lose a trade but the price goes completely against you. So maybe the level that you were looking for the trade in the first place may have not been the best one to look for. So that may require a little bit more of deeper analysis into understand why did you even look for that trade in the first place when price just literally broke through and went all the way, versus when you actually getting stopped out and then price a few pips after it reverses and goes into your direction. That means that maybe you actually are doing a good job on the levels that you are looking for a trade in the first place, but maybe need some work on either your stop loss placement, okay? Maybe where you are placing your stop loss maybe a bit too tight, or maybe you are not covering completely the levels that you should be covering to stay safe on the trade. Or it can also be in regards to your entry. Maybe you are not waiting for some maybe break of structure, confirmation, or even maybe this liquidity sweep, or kind of this push, this final push that usually maybe end up staking your stop loss, and maybe after that you can try to find your entry. Okay, so it's not actually as bad as it may look like if you are not constantly, but regularly being stopped out, and then price goes in your favor. Okay, I think it will be actually worse if you are actually constantly being stopped out and then price just completely goes against you. I think that requires much more work on your side in terms of looking in the first place to a good level to try to look for a trade. Now, of course, I can imagine the frustration. I've always been there, and it's quite frustrating. And then on the other point, which is, should you kind of, because you mentioned the part of revenge trading, should you then try to look for a second entry or not, or third entry, even if you get stopped out once or twice? Maybe you can. Okay, again, if you start noticing that this happens several times, maybe instead of allocating the full risk of just one trade on that specific trade, let's pretend that you are risking 1% and you are constantly being stopped out, and only afterwards maybe you can catch the good trade. Either you start being more patient, or you can, for example, divide your percentage of that you allocate on each trade, maybe by 2 attempts or 3 attempts, and now you give yourself 3 attempts to at least be involved on the trade without being too much exposure to the market or risking too much. And I think if you actually maybe reduce that risk, now you are actually not going to be emotionally kind of so attached to that first loss, and you give a little bit of breathing room for yourself to then be able to catch the move. And if the trade starts going in your favor, then you can maybe open the second or third trade to eventually be fully exposed on the trade, but now in your favor. So that can be a way also to deal with it. And then it's also important to actually have a rule. Like if you start noticing that maybe after the second loss, you actually start getting that sensation of revenge trading. Okay, you can most likely feel it within your body that you are actually start doing something that is not following your plan, but more of an emotional reaction to what you are doing. You can maybe start implementing some rules saying, okay, I can see that after the second loss or after the third loss, I'm not thinking straight anymore, kind of I'm not being rational, and I start being way too emotional. So set up a rule, step aside from the charts in that moment, and kind of just take a deep breath or go for a walk for a little bit and try to come back to then eventually continue trading after a couple of hours, or just literally finish for the day, and tomorrow there's another day, and you can then of course journal your trades if you want.
I think taking a pause, taking a step back is a great advice, because that will give you the chance to emotionally reset, right? And whenever the emotions start taking the upper hand, typically the decisions you take are not the best ones. The best ones are made with rationale, with your logical part of your brain, and not based on emotions that come and go, that are, by almost by definitions are not logical. They're emotional. Fear, greed, and all of that, the feeling of injustice. A couple of things you can also, they may or may not help you, is the way to frame how you think about what happens in the chart. Because I was trying to talking about that, where we as individual, we are the center of our universe, right? So because it's logical, right? This is our we're watching things from an egocentric point of view. And you may fall into the trap thinking, this is being done to me. And that's why you feel that revenge, because you feel, right, it's not fair. I'm putting all these hours in, I'm doing all my job, I have the best intention, I really want to make this work, but that's, look at that, I'm putting in the hours and I'm being punished basically, and it's not fair. But in trading, we need to let go of that framework, that egocentric. I'm not trying to step on anyone's toes here. I'm not calling anyone, egocentric, or it applies to all of us, right? But we need to let go of that idea and frame it in a different way, right? The market moves with or without you and doesn't care if you're in, you're out, you put in the hours or you didn't. The market is going to do its thing anyways. Your job is to only collect the data, have some idea, work on your system, validate it, and take the trade that your system tells you based on the data that are profitable, that have a positive expectancy, that in the long run will be profitable. And the fact that you were stopped out and the price went in your direction shouldn't be a trigger of revenge to you. It should be a pat on your shoulder, because it tells you that you're almost there. You saw the market, your timing was probably not far off, your direction was good, but your stop loss or perhaps your entry level wasn't the best one. So it tells you that you're there, you're almost there to catching the move, but you still have some work to do. And it is, instead of seeing it as a punishment, seeing it as a feedback. The market telling you something, you're almost there, buddy. Work some more. Find out what's the missing piece in your strategy. Find out, is your stop loss too close? Maybe you need to wait for some more price action confirming the direction or confirming the entry signal, or whatnot. I don't know, but it's changing the framework at which, or not the framework, but the framing of that occurrence to you may already diffuse the revenge feeling you might have. That's one thing. And the other thing, even though we're out of time, the other thing that we do, that I use as a very potent antidote to revenge trading is by collecting data. What I do is at the end of the day, every trade, and I recommend you doing the same, every day, at the end of the day, you mark every trade, whether or not it was according or not according to your plan, right? Obviously, you will see that when you do revenge trading, you will see a lot of trades that are not according to plan. And that's fine, in the sense it's not fine, but I mean, you're going to be doing it anyway. So let's tag them. And all those that are according to plan will have the different tag. Once you have those tag system in place after a week, a month, or whatever period you find adequate, you compare what the results are of those trades you took that are according to the plan and what are those that you did that are not. And see it, and I'm pretty sure those that are not according to plan will be unprofitable, will have a negative expectancy, and you would see it does not make sense for you to be taking these trades. Just using the loop back, a feedback loop of your own performance when you are deviating from your plan and going into revenge trading, you will see, hey, I don't want to be in this trade. So next time around, that could help you. It has helped me a lot. By the moment I'm going to take the trade, I check again if it is according to the plan. If it isn't, I got a very instant allergic reaction to that trade. I don't want to have anything to do with it anymore. Don't want to touch it because I know what's going to happen. I've measured it. I have data tells me that I take this trade, on average, in the long run, I'm going to lose this trade. So don't want to have anything to do with it. So hopefully that helps you guys, everyone. Thank you for watching. There's a lot of comments that I haven't been able to read. Let's see if I can. I don't think I can read them right now. All right, so I think Kim from South Africa, Rooibos Kim, thank you for watching us. Marina as well. Wow, we have a awesome gang supporting us as always. Well, Pedro, we are at the end of our stream. We were already at the end a couple of minutes ago. I would like to thank everyone watching, and I want to ask for a little favor. You may already know where I'm going with this. The like and subscribe button. It's not gonna bite you. It's not gonna cost you anything money-wise. Maybe 2 seconds of your time, which I think is, not too much to ask. So if you don't mind, do us a favor, like our stream, subscribe to the channel, and meet us again on Friday. Fridays, we have Fridays sessions. Since not so long ago, we are streaming 5 days a week. So we would like to invite you for our Friday session as well. There is Discord activity live today as well. And we also have, on the Portuguese side of things, we have another stream for you coming up with no other than Pedro right here, my co-host. What time is it? From 2 hours from now? 2 hours and a half?
Yes, it's 2 hours from now. Today we are celebrating the 3,000 subscribers.
Wow.
We're actually going to do a small giveaway to say thank you to everyone that has been subscribing to the channel and helping us grow. It's been great, and we are still on our challenges. We are positive finally.
Wow.
And we come back after the drawdown. We're kind of $97 positive or something like that. Hopefully we eventually get to pass phase 1 of the challenge. But yeah, it's good.
Perfect. On that note, thank you all for watching, and see you again here at the The5ers live trading session again tomorrow. See you. Bye-bye.
Thank you, guys. Bye-bye. Bye.